Line up. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
With Alex, Hiral and Neeraj. I just thought there was some room for humor this morning because otherwise, guys, it is looking tough. Good morning to everybody. Thank you so much for joining in. Neeraj
That was your voiceover voice?
Alex Matthew and Hiral Dharia.
I was going to ask if you have a cold, but then I have that covered.
Yeah, well, having a cold is the least of the problems considering what the world is going through right now.
Yeah.
And it promises to be an eventful week, not least because we have a very truncated week relative to the rest of the world as well. And therefore, I wonder if positioning will change dramatically relative to the rest of the world.
It's a good question.
Yeah, the potential answer would probably lie in what's happening last week as well, where volumes have remained thin because of that one-day holiday. So I think a similar situation probably will be in Indian markets as well today.
Yeah, so lots of pressure points, some antidotes trying to be provided by the government and the Reserve Bank of India as well. Let's see if those help at the margin, but looks like more pain on
You know, what you're talking about with the RBI, the way they are coming in, it may help the currency.
At least in the short
What
term.
happens to the markets is the question, because it's the heavyweights that probably we'll see the bear the brunt.
At least in the short term, you're expected to see unwinding and so therefore benefit on the upside. But then question is, how much of loss will the banks have to incur? And the large ones, we've got a story out that talks about the fact that some of these large banks have net open positions of $250 to $300 million. And they have to bring it down to 100 very quickly.
Okay, so should we do that?
We should
first,
talk about it.
Very quickly. Okay, then maybe let's just talk about the RBI moves and then talk about the world moves. So viewers, in case you were wondering what we were talking about, what the RBI or the Reserve Bank of India has done is that they have capped individual banks' net open INR or rupee position at USD 100 million in the onshore market. There's an onshore market and there's an offshore NDF market, non-deliverable forward markets. Now, why is this being done? Because there is a net long dollar position existing very, very strongly. What this move can do, temporarily, I must admit, is that it could lead to unwinding, immediate unwinding of domestic dollar positioning of the banks. I don't say may, I'm saying it will lead to an immediate unwinding of the domestic dollar positioning of the banks and will result in a sharp appreciation of the rupee versus the US dollar. Now remember, you will see that play out today at 9 a.m. You will see that uptick. Will it necessarily have this resultant impact on the market on the markets? No, because this is a band-aid position that is being done. Maybe needed to be done in order to stem the free fall, but it's not done and dusted as yet. It's a temporary reprieve. Will short the free fall on the INR and banks will face the hit in their mark-to-markets. Now, the debate about how strong the hit is remains to be seen, but it's certainly a hit for sure on the open.
And there are various theories where Samir Arora, for example, has said, no, these conversations about 4,000 crore rupees of impact on the PNL is a little exaggerated. They made money when the rupee was going up and so therefore they're just taking some profit. I mean, but some of their profits are lost.
It is a hit, and they're talking about a cumulative position could be around almost $40 billion. So taking that into consideration, at least on paper, you will see that kind of hit that will come in, and that's the impact that Neeraj, Alex, all of us are talking about in terms of banks and in turn on Nifty 50.
Yeah, in fact, pull up the implied open just to drive home that point, and you will see cuts of over 200 points for the Nifty 50, and I wouldn't be surprised if a large part of this is going to be the frontline banks. Remember, State Bank of India, ICICI Bank, HDFC Bank, all have borne the brunt of selling over the course of the last week. But let's talk about the global picture, and as we've done over the course of this conflict, we're getting you the top developments that have taken place over the weekend. And the latest from yesterday, in fact, is that Pakistan has announced that it will host talks between US and Iran. There is no confirmation yet on whether Iran and US will participate. The second update, Iran's Parliament Speaker Mohammad Bagher Kalibaf has dismissed talks in Pakistan as a cover for a ground assault by US forces. There has been news that has been emerging over the past few days that there is a buildup of army personnel, Marines, in that region by the US. They've been deployed over the course of the last few days. On Saturday, Houthis in Yemen launched their first attack in this conflict. They launched missiles in two different attacks that took place over the weekend. And that conflict therefore is now extended beyond the Hormuz Strait to now encompass the Red Sea as well. Not good news for shipping in the area. In any case, that was under a cloud of questions. The group's military spokesperson Yahya Sari has actually vowed to continue those attacks. Protests have erupted meanwhile in US. They've been dubbed No Kings rallies, and large rallies took place in various large cities, New York, Dallas, Philadelphia and Washington, and 2/3 of events, and this is where it's very interesting, happened outside of those major cities. You had protests that also took place, by the way, in Israel's Tel Aviv, but those were contained forcefully and not the millions of people that came out in the US. Mojtaba Khamenei has written a statement that has gone out, and in fact he has expressed appreciation for the people of Iraq for their purported support. There is yet to be a visual proof of his still being alive, and that's something that the US is talking about. And speaking of what the US and President Donald Trump are talking about, in the latest statements he's claiming that Iran gave the US 20 boats of oil and claims that he sees a deal with Iran which could be soon. And he also says that Iran came back on the 15-point plan and the US will ask for a couple of other things. We'll come to more in just a bit, but before we do that, take a look at the US futures. They've actually slid, and Asian equities have opened sharply lower. Remember, this is going to be a curtailed trading week in the global markets as well. Brent has risen sharply and trades around $115 per barrel, and it's heading for a record monthly gain with nearly 60% rise. That increase eclipses the gains that were seen in the 1990 Gulf War. Volumes in the risk assets might be lower in a curtailed trading week. Let's listen into some of what Donald Trump was saying. If I'm not mistaken, he was actually addressing reporters on Air Force One. He speaks about various things. Listen.
I think out of a sign of respect, 20 boats of oil, big boats of oil, going through the Hormuz Strait. And that's taking place starting tomorrow morning. Over the next couple of days, a lot of boats. And I would only say that we're doing extremely well in that negotiation.
So that's the word coming in from Donald Trump. But let's get in Jonathan Bharat, Chief Investment Officer at ETO Markets. Jonathan, good morning and welcome to the show. This is Hiral on this side. A pleasure to speak to you. You know, with all the updates that are coming in with regards to the war right now, the protests that are happening, the way oil has moved to almost 115 to 118 in overnight trade as well. What's the sense that you pick up in terms of the impact right now? Because there is no clear direction that we're seeing in terms of where the war is going. No clear direction when it comes to where resolution goes. And across markets, you're seeing that reaction come in.
Yes, look, I think it's very important that we actually get to a resolution. If you think Donald Trump's losing a lot of support in his home country, he's lost a lot of support already, you know, with his NATO friends. So I do get a sense that he's pretty keen to do a deal somehow. The question is, how long will this take, and how long will it take for markets to get back to normal? Because the longer this goes on, the more concerns we've got over inflationary pressures around the world. So I think everyone's there to do a deal. I guess it's the right sort of deal.
Yeah, but the question, Jonathan, is for everybody standing on the sidelines that has maybe not deployed yet and was thinking of a buy the dip strategy, or even those that have bought the dip. What does this mean? Because if we're looking at a prolonged conflict and nobody knows, now the words coming in from a few of the key functionaries of the Trump administration is, oh, we're not going to stay for 1 to 2 years. And just the fact that they're talking about 1 to 2 years for a lot of people is a little alarming.
Oh, look, I think it is very much alarming, but it's alarming for the global community. And I think there's more of a push on the global community to try and get some resolution. It's great to see what Pakistan is happening, trying to negotiate there. There's also another important point that we don't tend to look at, and actually what's actually happening inside Iran. You know, the reasons why the locals, the big demonstrations over there occurred, and we don't really see much of what's happening there. So we're sort of trying to work out, you know, are things moving inside Iran, or are they being sort of pushed down, those protesters, for that change of regime? And if in fact, are they getting close to an actual change? So we don't really see that. But at the end of the day, it remains a concern, which I think no global economy wants to see. You can't see oil prices up 40, 60% and not have a domestic effect to all those countries that need oil. And that's everyone. So I think it's in everyone's interests. And we are starting to plan for the worst, but hopefully prepare for the best, and we get a resolution.
Did not come, Jonathan. Good morning, Neeraj here. Brent currently at 116, 117. US doesn't get as impacted with oil prices, and the difference in the WTI and Brent is showing, right? Could it happen that if there is no resolution coming in the next 5, 6, 7 days, Brent could head much higher from where it is right now?
Yes, I think that's the case. Remember also, there's more of a concern for the Brent contract than the WTI, because that's domestic. And also you find the domestic, although the US needs to import more oil, you know, they can produce their own from where they are. So they have got a little bit of a stop loss, and that's why I don't think you see the aggressiveness in the price. But I do think that spread over time will blow out if this contagion continues. But the spread will come in quite quickly if in fact we get some result. But at the moment, that spread looks set to widen, given the fact that we've got no clear direction in where we're going.
Okay, the gap is set to widen. I mean, you need a clear direction to get some certainty there. But thank you, Jonathan, so much for joining in. It's always a pleasure to speak to you and get your insights as well. But moving on, if you see in terms of what's happened when you talk about the Indian markets as well, a quick recap of last week where we witnessed a volatile momentum. Now, the sentiment remains pretty much sensitive to the mixed signals that we're getting from the ongoing West Asia conflict. After a roller coaster activity, the Nifty actually ended 1.3% lower for the week, and it was mainly defense and PSU banks that actually lost the most during the week. In fact, PSU index declined by nearly 4%, defense declined by 4%, and the PSU bank index, if you see, had a fall of nearly 3.8%. And despite the weak market conditions, you had IT as a sector which gained nearly 1% for the week. On Friday as well, a sharp decline did come in, and Nifty slipped below that 23,000 mark in intraday trade. And after a sharp decline, it actually found a little bit of support near 22,500 to 22,700, and from there it actually bounced back sharply. Now, due to the profit booking that we're seeing at higher levels on last Friday, it has corrected sharply again, and your mid-cap 100 and small-cap have also fallen 2% each. The two-day gaining streak is what Nifty has broken with cuts of over 2%. On Friday's session, VIX again up 8.6%, which clearly is telling you that the volatility continues to remain high. The rupee is the key one to watch out for because it hit a fresh record low of 94.79 against the US dollar, and your 10-year bond yields actually surged to 6.9 to 7 kind of a range, which is the highest level that we've seen in the last 1 year. So clearly the market has been forming lower highs and trading well below those short-term averages, which is largely negative, and the texture itself is extremely volatile. A 1.07 lakh crore of FI flows is what we've seen in the past 17 trading sessions. So setup clearly, I mean, in terms of if you have to look at the recap, we're taking away from a weak position on Friday to a weak position on Monday, it seems.
Yeah, no other way to describe this, to be honest. And the sad part only is that very likely that Bank Nifty will put additional downtick on the markets today. So it's something that shores up the rupee, but certainly puts pressure on the banks. And Alex is right. The opinion on the street may be divided, but by and large, the belief is that banks will have additional pressure in the session today. And therefore, I think, there is not too much in terms of, intelligence to be gathered, but the simplest form of common market activity should be that staying off leverage is the one key suitable advice. What you don't want to do is seeing your stock being down 50% and thinking that the markdown is very lucrative and mouth-watering, and therefore take leverage and go out and buy that stock because it could go down even further. The situation as we speak is still fluid. Winning sectors may emerge, but it's prudent to bet very, very slowly simply because the extent of the damage is not known, even if the conflict gets resolved tomorrow. And I think from all the conversations that we've had in the last 48 hours with experts, having read some of the things, I think Pankaj Tibrewal has put out an on-ground check as well on X. So a lot of people are opining on what's happening on the ground. I think the summation seems to be that energy, defense, and pharmaceuticals remain the top draw. Yes, there are chemical companies coming to the fore, but that could be a quarterly phenomenon, and quarter one might again become a bit difficult. So I think what people are now trying to hunt in terms of durable themes, energy, defense, and pharmaceuticals. So keep an eye out on these three pockets within there. But again, please don't take leverage. And if you're betting without leverage as well, please bet slowly and steadily. There is no need to rush because you feel that the bottom is formed. I can tell you with immense confidence, nobody knows.
Yeah, if there's one thing that you can say with complete confidence, it's that nobody knows. Yeah.
Okay, so nobody knows from here on is the key question, but few factors. As we know, it's a holiday shortened week, and that's what kicks off amid the Middle East war heating up and looming Trump rhetorics that we're picking up as well. The market sentiment is cautiously optimistic following a sharp sell-off in the previous sessions. We've mentioned about the VIX as well, which is at the highest level since early 2022. Now, until the VIX actually cools below that 22-23 mark, aggressive bottom fishing remains risky, and the primary trend is firmly sell on rise unless Nifty clears the 23,000 to 23,200 zone. Critical support is coming in at levels of 22,300, and this is in line as well. a decisive break, would actually open the doors to 21,700, and you're talking about the first resistance level coming in at 2380 on the upside. On Bank Nifty, it's going to be important because the support is at 52,180 and the resistance at 53.05. If we break 52.180 for reasons that, as Neeraj was pointing out, on the RBI moves to protect the rupee, that could be a downer as well in terms of Bank Nifty. So that's what the factors that you should be watching out for. But let's head across to Puneet to take us through what's happening in the derivatives market. Puneet, it is monthly expiry as well today.
Well, most certainly, and continue to see those volatility come through as well. But Friday, in the last half an hour of the trading session, you did see that revision essentially coming in, and hence volatility continued to be one of the key aspects, and that has continued in the implied open, indicating a 230-point downtick. It was almost 300 points just half an hour ago, so we are seeing continue to see at least a start in the red for now, given what we are seeing in the US futures, as well as the momentum in the global markets on Friday continue to be under pressure as well. But for the Bank Nifty, very, very important level at 52,200 where we are. The last time we were close to these levels, we completely skipped between 52,000 and 53,000 and just went to 51,800. So 51,800 continues to be a long-term support, especially for the PSU Bank Index, and all those stocks will be in focus today. In terms of foreign investors, continue to be yet again sellers, but the index long continues to be around 15.3%. So very, very neck and neck. We're down, of course, from the 19 to 22% we saw at the end of February, but at the middle point at this point of time, 4 weeks and into the 5th week of the war as well. In terms of stocks, in terms of open interest, first very quickly, 23,000 is a key level, continues to be one for the puts, and 24,000 out of money for the calls. But we've also seen active open interest change in 23,300 and 23,500 for the call. So this does indicate that the current levels of around 22,500 could be here to stay, is what this data point suggests, because now we are at an 800-point gap from those levels, at least in these 2 to 3 positions that are being built with a higher open interest. Could see some change today, something to watch out for. But on Friday, we saw this massive change in open interest for a bunch of stocks. Sammaan Capital also in the news flow of change in promoter ownership, but Hutco, Patanjali Food, NMDC saw open interest change with rigor and change especially in the short build-ups. And in terms of open interest losers also, massive change in open interest for a bunch of counters. So Max Financial, NMDC, Delivery, Alchem Labs, all saw stocks where longs were unwinded, so was AB Capital. So with the rigor you've seen, longs being unwinded and shorts being built up for a bunch of stock, but important trading session yet again before a holiday tomorrow.
Got it. All right, Puneet, thanks so much for that. Let's talk about stocks that you should keep in mind, and there are several to talk about. We've already identified for you that the entire banking space, and particularly the frontline banks, will likely be under pressure at the start today. But I've got Seagull India, and we spoke with the management not too long back, and they said that they're ahead of plans. They've gotten another 600 crore plus order. This is rather a letter of approval, LOA, that has come through from the NHAI. It is for a 6-lane spur project in Punjab. In case you're wondering what a spur is, it is usually a highway that is aligned to or connects to a national highway or an expressway. The order is said to be completed in 18 months, and it also contains a 15-year maintenance period. So it's a positive development. Eicher Motors. Now, a lot to be said about the company's plans beyond the 350cc segment. This is an area where they've been trying to improve as they go up the value chain in terms of more powerful motorcycles, and this is seemingly a bid to do just that. They've launched a variant, Royal Enfield, of Guerrilla 450. This is now a Guerrilla 450 Apex. It is essentially a sportier variant, so in case you're a motorcycle enthusiast, then the handlebar is slightly forward and creates that kind of a seated stance when you're riding it. It is priced between 2.49 and 2.56 lakh crore rupees ex-showroom Chennai, and it'll be interesting to see what the demand for this product is. The engine is the same as the Himalayan and the Guerrilla, essentially. Finally, I've got a brokerage note. Citi on ICICI Bank, they've maintained a buy with a target price of 1,720, and guess what? That upside indicates a potential of 36.7%. When was the last time you heard that about ICICI Bank? 90-day positive catalyst watch is what they've put ICICI Bank on. They say that the return on assets is expected to be higher than 2.3% and a strong 5% growth in loan growth on a sequential basis, deposits as well. And this is where it's interesting, despite the fact that we are right now more or less at the base or the lowest point of the interest rate cycle, deposits are set to rise as much as 6% sequentially on the back of a granular retail push. The net interest margins are stable despite mixed rate effects, and lower slippages and credit costs, that is less than 40 basis points, is seen with a flat operating expense. So I think, guys, this is the argument that is being made for a lot of these banks, and I saw a similar brokerage note on HDFC Bank as well, saying that valuations are incredibly attractive because of the quality of the book. But having said that, there's nobody to say how much of a downside you can expect because of everything else that is happening.
Yeah, and it's many your FIs who are still selling in terms of financials, right? So that's one of the concerns that we are watching out for. But let's see what happens to banks in today's session. On my list, we have a Dredging Corp, where they've announced a strategic roadmap, and this is to more than double their annual turnover to 3,000 odd crores within the next 5 to 10 years. And this tells you that they're aiming to grow almost 3 times from what they had reported in FY25. Now they're targeting high-value dredging and reclamation works, diversifying into high-margin niche areas like inland waterways and offshore services, and they're actively exploring dredging opportunities in the Middle East, Southeast Asia and South Asia. If you talk about their fleet modernization and capex, they're in the process of procuring 11 new dredgers to augment capacity, and the first 12,000 cubic meter trailer suction hopper is what they will be looking at, which will be delivered by June-July 2026. So this will improve their existing dredger productivity by roughly 15%. So watch out for Dredging Corp. Realtel is another one. You know, they've got a whole host of order wins or LOIs in the month of March, and the current one is a project worth 444 odd crores from the Center for E-Governance. This is a system integrator role for the project, and the objective is to modernize and overhaul digital network across Karnataka. The project is actually scheduled for completion by March 26, 2031. And very lastly, you have a Gujarat Fluorochemicals that will be in focus, where their subsidiary, which is the EV subsidiary, has announced raising close to $80 million from a global marquee investor. Now, this subsidiary is an integrated battery materials company, and this follows a previous funding round of close to $50 million from IFC. The combined $130 million will be used to scale manufacturing capacity, and this is for advanced battery materials. The parent company has also said that they will be planning to invest close to $700 million over the next 4 to 5 years in a similar project. So you could see some bit of a bounce back that could be coming in on a Gujarat Fluoro in trade today as well.
Okay. So those are some names. Of course, guys, I mean, we'll all talk about one key pocket at the end, but the aluminum names could be in focus today. Nalco, Hindalco, Vedanta, Rain Industries, what have you, because 2 Middle Eastern aluminum producers were hit by Iranian attacks on Saturday. Now, Emirates Global Aluminum said it sustained significant damage at its site in Abu Dhabi. So that is one. Aluminum Bahrain said it was assessing the extent of the damage to its facility. And remember, Middle East accounts for roughly 9% of the global aluminum supply. I think this morning when I saw, it was about a 6% uptick on aluminum prices. So keep an eye out that we might have some bit of an impact on we have an impact on aluminum prices. Does that shore up the fortunes of a Nalco, Hindalco? Remains to be seen. BHL is the other one, wherein some Chinese investment in JV in specified sectors, less than 50% stake, could help BHL source components short on supply. So keep an eye out for that. And guys, I know we briefly spoke about it, but what did you guys make of the defense moves, the DSE proposal to clear I mean, DSE clearing proposal of 2.38 trillion. I think that's a big one.
I think it's par for the course, especially given the geopolitical climate right now, and every country is looking to increase spend and improve self-sufficiency. So you're going to likely, over the course of the next few years, see more domestic companies getting orders for key military hardware and software as well. Because you want to reduce the dependence as a sovereign country on other countries, because think about it, right? Everybody is involved in this situation when you talk about the global picture.
Yeah.
You know, one thing I want to highlight over here is if you have to just look at the cumulative number in terms of FY26, you're talking close to what? 8 to 9 lakh crores that has been given out from July 2025 to March 2026 in terms of the last 3 years.
Excluding Rafale, 6.73 trillion.
Yeah, probably. I think that is excluded because this is the 2.38 lakh crore. In February, a 3.6 lakh crore outlay was discussed. But then it's on. If you have the cumulative number, it almost works out to be this number. And clearly, the beneficiaries remain the same.
Yeah, so I think as per the latest one, which is the 2.38 lakh crore number, I think from whatever the brokerage notes have come out and said, the potential beneficiaries include Bharat Electronics for the armed forces ones, Adani Defense, HAL and GRSC amongst the principal ones. Then everybody benefits as an offshoot, of course, and the sector multiples get aided as well. But I think if there is one key beneficiary out of everything that has happened right now, we don't want to talk about it that way, but just the fact that you call a spade, that the spend on defense has gone up and therefore it will benefit some of the defense names.
Usually happens during wartime. All right, let's talk about one of the fallouts of the war, which is that several supply chains have gotten disrupted and you've had price increases announced, and that is true for the paints companies as well. They're contemplating hiking prices. Some already have announced price increases. In fact, the latest was that Berger Paints on the 27th, not too long back, announced a fresh round of hikes. They'd already done hikes earlier on in March, and Ridhima joining in with some of that exclusive information. She's done her dealer checks and she's had conversations with them. Ridhima, you've actually seen these documents of what companies have sent to dealers, and they've all talked about the implications of the war, but what exactly have you picked up?
So Berger Paints has announced another price hike, which is the second price hike in the month of March. As per the distributors, this price hike will be done by 5 to 10% across its products, and this will be effective from April of 9th. Remember that before this, the first phase of price increase was already done by Berger Paints, and it was done around, it was effective from 25th of March and fully will be effective today, 30th of March. And this move follows Asian Paints. Just last week, Asian Paints had increased its prices by 6 to 8% across its categories, and they had done this in 2 phases. The first phase will be implemented from April of 10th and the second phase from 21st of April. So not just this, JSW Paints and Birla Opus are also going to implement price increase in April itself as per the distributors. Now paint companies have been hit mainly due to the Middle East war because a lot of input costs, around 40 to 60% of the input materials for paints comes from crude oil derivatives. This includes your resins and solvents, which is used to make the paints. And across the board, a price increase in April is expected. And we'll have to wait and see that when that happens.
Okay, thank you so much, Ridhima, for that. So lots brewing when it comes to paint companies, from Berger to Asian Paints. All of them have started getting, feeling the impact, in fact, and taking price hikes as well. They will all be effective from the month of April. But let's get in Aditya Soman, Senior Research Analyst at CLSA, to talk to us not only about what's brewing with the paint company, but United Spirits stake sale in RCB, how that valuation and how, what that valuation would mean and how it would actually benefit, impact on FMCG names when it comes to higher crude prices and the kind of gas shortage that we're looking at, and the hike in terms of platform fees that has been announced by food delivery partners as well. Aditya, good morning and welcome to the show, and always a pleasure to speak to you. From the whole host of conversations that we're going to have today, let me first take my question with you on the price hikes that have been taken by paint companies. And this is mainly on the back of higher raw material costs. How are you looking at it?
Yeah, thanks. Good morning, and great to be on the show. So firstly on the paint companies, right? We had put out a note earlier in March, which suggested that an $80 average crude price would need somewhere between a 5 to 6% price hike, and a $100 crude hike would need a 15% or so price hike. So obviously we've seen the first round of these, or first, or in some cases second round of these price hikes kick in from April. But if the price of crude persists at the current levels or higher, then we suspect more pricing will be needed. Now, what's important to note is two things. One, we'll see how much sort of some of the newer entrants pass on in terms of prices, and how much they pass on to dealers in terms of additional incentives, in a sense that where the MRP increase is higher than the price increase to the dealer, effectively leaving more margin for the dealer. Now, you have to remember that a player like Birla Opus has the second largest capacity overall, and in many ways, in an environment like this, there'll be sort of determinants of what drives pricing.
So, Aditya, good morning, and appreciate you joining in Neeraj here. In a situation as fluid as this, do some of the measures taken by the companies prove to be antidotes to compression in margins, compression in multiples, and thereby the correction in prices? Can anything shore up right now, or is that situation so fluid that you can't take a fundamental call there?
Yeah, I mean, it's tricky to see where oil prices settle in the first place, right? I mean, we've obviously had a situation where we're seeing a spike right now, and even sort of the long-term views have moved up from sort of $60, $70 to now $80, $90. So it'll be interesting to see where they settle. Obviously, from a company perspective, they need to sort of pass on the immediate increases in input costs, and that's what we're seeing at this point. As I mentioned, I think what will be interesting from my perspective to really analyze is to see how market shares pan out. Now, historically, paint companies, when they took up pricing, it was actually a net benefit, right? Because when you had sort of input costs soften, the price cuts weren't obviously to the full extent, and that led to sort of margins over time actually building up. This time around, we feel it's a little different with sort of several new entrants, and as I mentioned before, new entrants with significant capacity being in the system. We feel that the market will remain very competitive even when sort of input costs start normalizing again.
Hi, morning, Alex here. I'm just widening the scope to talk about the FMCG pack, right? And heading into the end of the year, there were conversations, for example, from Lever post the previous quarter earnings, that there was an expectation that there would be volume pickup, and heading into FY27 as well. That was a thesis that a lot of people were building into. Does this prove to be a challenge? This is a shock that I guess we've not seen play out yet, because to a certain extent, one would have initially hoped that inventories would take care of some of the problem and then you could adjust it a little bit over the course of the few months, but it's already extended longer than anticipated. So is it going to challenge some of the estimates and expectations for FY27?
Absolutely, Alex. And let me just contextualize that, right? So obviously, post the GST cuts in 2Q, we saw some disruption in volumes in 3Q just because of the shift. But then there was an expectation that volumes pick up as affordability improves across the board, particularly with a wide range of products, FMCG products, seeing price cuts. Now, what we have seen from our checks on the ground is actually from Jan to March, we've started seeing prices already move up, and in effect almost the same number of SKUs. So we did a study of about almost 400 SKUs, and we found that over 200 SKUs have seen sort of price increases between Jan and March, while 250 had seen sort of a post GST price cut. So we're almost seeing most of those SKUs seeing price increases come back in. It'll also be sort of important to note how this plays out in the context of general cost of living also moving going up, right? So we've come from an environment where sort of inflation for the past couple of years has been very benign, and now we are likely to see a meaningful sort of bump up in inflation, particularly as the risk of fuel costs going up remains fairly high. Now we are not seeing that at present, but as fuel costs potentially move up, if this conflict were to linger for longer, then that could have a further impact on demand beyond just prices. So what's from my perspective, three things to look out for. One, I think look out for what the competitive intensity in categories is. One of the challenges for FMCG has been sort of the disruption in distribution, particularly urban distribution, because of the likes of sort of modern retail and quick commerce, and we are seeing that a lot more newer players are often competing using price as a lever.
Right.
And in this environment, that can be a challenge.
Okay. Aditya, my last question to you is United Spirits stake sale in RCB. The expectation was a good upside that could come in, but if you see in terms of stock reaction as well, very somber. What are you making out of the valuations and the benefits that could flow in?
Yeah, thanks. So no, look, I thought the deal price was slightly below, I think what press articles have suggested in the past, and which is where I see the potentially sort of muted reaction. That being said, I mean, if you look at the absolute valuation, it's several times sales what they've reported. So in effect, it's a big thumbs up to sort of the IPL rights that are likely to get renegotiated in a couple of years, and the likelihood is that the new buyers are sort of playing for that increase in media rights, which last time round was very significant and led to sort of the sales uptake at most of these IPL companies. From a UNSP perspective, we believe it represents sort of a post-tax net gain of about 190 rupees or so from the sale, which they should pass on as dividend. It's a one-time effect. It's almost 15% of the stock price, but effectively what the market is signaling is that's already sort of priced in at the current price, and there are concerns around sort of the disruption that we've seen over the past couple of quarters in Maharashtra, particularly given the change in the tax structure.
Okay, so that's the benefits that we could see as well. But thank you, Aditya, so much for joining in. It's always a pleasure to speak to you as well. But we'll quickly slip into a short break. On the other side, we'll get you top trading strategies for today. Please stay tuned to NDTV Profit.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Back with India Market Open right here on NDTV Profit. You know, all eyes for the rupee at 9 a.m. and we'll get in Lakshmi Iyer to talk about that and what happens to that particular aspect as well, because the rupee might actually see a bit of a bounce today because of the RBI moves, and we'll talk about that. But the RBI moves also have an unintended hit that the banks could take. So keep an eye out for the Bank Nifty as well. Keep an eye out market-wide, 150 points downtick on the implied open. Kush Bohra, Parag Thakkar with us. Gentlemen, thanks so much for joining in. Kush, starting off with you, we're likely to start off 100, 150 points lower. What do you do post that?
This is a significant improvement over what the GIFT Nifty was suggesting early morning, about 300-400 points of gap down, right? So we take heart from that fact. But just on a very light note, more than AI, who I'm afraid of taking my job? The diplomats. Did you hear about the Iranian speaker putting out that tweet saying, how do you play US markets? So when diplomats...
No, sorry. On that point, it's a very clear strategy from Iran to destabilize markets, because that is how they're applying pressure. Ultimately, that is the game. It's a game on both sides. So the counter to that is also obviously true, na?
No, agree. I'm not saying you actually go out and take that advice. I'm just saying that, when diplomats start putting out financial advice, that's a bit of a risk. No, but 5 weeks of lower high, lower low formations and things still looking, a little bleak. That's one way of looking at it. The other way is perhaps this is capitulation, because a lot of names oversold. Of course, we've been oversold for a while and still going down, but it's starting to now look like capitulation. We are now starting to tell our clients to deploy because the risk reward ratio is extremely favorable. So we remain constructive from that perspective. Of course, where this ends, no one knows, and hence you don't go out and deploy a big chunk. But if you've got funds, another 20%, I think we already deployed 40% if Alex remembers, right? We had that conversation.
Yeah.
Maybe another 20% is not a bad idea, because the setup is now starting to look like capitulation.
The charts are showing.
Yes, the charts are showing that.
So what's the bottom level on the Nifty you foresee?
So look, I mean, if a push comes to shove, I think the 21,700, 750, thereabouts is something that can happen. So that's another 5%. But even if we were to go up from here, the recent highs are also about 15% away, right? 12-15% away. So that gives you a good cushion on the upside. Stocks even worse. So the risk reward ratio that much more favorable. And hence, also by the way, we are starting to see, as we've spoken about, the early signs, right? So markets are starting to see some sort of buying interest at lower levels. So I remain constructive on the markets. So I'm, saying limited capital deployment, but the risk reward ratio starting to look attractive, because this seems like capitulation now.
Okay. Well, Parag bhai, deploy more or wait?
No,
why not wait?
No, keep deploying.
Keep deploying.
You don't know when the tide will turn.
Okay, the hit on banks this morning, for example.
So it is, in my view, it is just a 1 quarter treasury item hit. So if rupee appreciates by say which RBI wants to do, right? Because RBI does not want rupee at 95 on 31st March. That is I think the main intention behind this entire thing. And 30 to 40 billion worth of dollars banks will have to sell before 10th April. And if rupee appreciates by 94.79 to 93.79, the hit to the entire banking system will be between 3,000 crore to 4,000 crore. So for example, for ICICI, it will be say around 250 crore kind of a hit. And that too, it's a treasury line item hit in Q4 itself.
2 questions. One, what is the kind of gains that they would have already had when the rupee has moved as much as it has? First question. Second, this is a double whammy, because this is losses on a notional basis in the currency market, but on the treasury side, you're also going to have significant losses on the bond side for long bonds, which with a large portion of them, okay, they have hold to maturity, which is 21-25% of their book depending on the bank, but they will have large losses.
No, so India 10-year at 6.9, which also is a treasury loss. Right?
Yes.
So a lot of treasury income will be affected in this quarter for sure. There is no doubt about it. But whatever my channel checks are suggesting that banks like ICICI Bank, Axis Bank are going to report strong numbers in my view. Good deposit growth, good loan book growth, good NII growth.
No, but will the losses, will the gains that they have made to this point offset the losses?
See, I'll tell you, we are not buying a particular entity for 1 quarter, right? So 1 quarter treasury hit of total 4,000 crores maximum for the banking industry does not make my case negative for banks.
No,
Does
the question only was Parabha, the question only is tactical. HDFC Bank is a great stock to buy, let's say. Is it a good stock to buy at these prices, or can there be better prices? That's the question, because of this move.
No. So basically, nobody can tell it with perfect precision, right? That when this will stop. Suppose, for example, worst case scenario, I am putting the worst case scenario on the table. That if this war extends till say May and oil goes to 140, all bets are off.
Agreed.
फिर बैंक क्या और दूसरा क्या? All bets are off. So you have to assume that some sanity will prevail. Otherwise, there is no market.
So okay, the correction that comes in right now, will you still buy with the correction?
Absolutely.
You will add banks, private banks.
Yes. ICICI, Axis, HDFC.
Axis you've added.
Axis I have added, yeah.
Okay.
Axis I have added, yes.
So banks is something that they will look to buy as well. In fact, Jefferies has come out with their note on financials where they are saying that the RBI's forex tightening can actually swing negative surprise for banks, and they're expecting some bit of leniency as well on the back of the recommendations that the banks have made. Now, this is a surprise move where RBI has capped the bank's net open position in onshore forex market, and this may be driven by sharp depreciation of the rupee and a wider spread between the offshore and the onshore market. While this may support the rupee, unwinding of positions is what you're looking at by the 10th of April, and this may lead to MTM losses in the fourth quarter. And positions may be as large as $30 to $40 billion, as Parag Bhai was also mentioning, with large banks and select foreign banks leading the book. The sector has sought some leniency from the RBI, and Indian banks like SBI, ICICI, HDFC, Axis, and leading foreign banks that operate in India with gross onshore positions of this quantum will be the ones to offset with each other. Every $1 or 1 rupee to the dollar dual movement in the rupee on this $30 to $40 billion size of book can lead to a one-time loss of close to 3,000 to 4,000 odd crores for the banking sector is what you should be watching out for. So watch out for this place pretty closely. In fact, let me just quickly take a view from Kush. Any picks that you have, Kush? We've not taken that aspect yet.
Sure. And just to run the conversation on banking, I think once you see the rebound, Bank Nifty will outperform Nifty on the way up as well. So that rubber band effect will actually play out stronger on Bank Nifty. So I remain constructive more on Bank Nifty. Now, as far as the picks go, again, going with a mix of long and short, and being Monday, we've got a weekly pick as well. On the weekly pick side, we've got GVTND. It's showing good strength, it's consolidating, the bias is mildly positive. In a market like this, you'll take that. So GV for targets of about 39, 30 and 4100, and with the stop loss at 35.75 is a long call. Pharma, that touch has to come in as a defensive, so Lupin makes the cut. 23.75, 24.45 are the targets. 22.85 is where you keep that stop loss. And ICICI Lombard continues as a sell call. We did see the bounce being sold into on Friday for most of the things, but the structure for ICICI Lombard continues to remain weak. So these targets are for April futures, by the way. 1740, 1720 are your targets, and 1780 is where you keep that stop loss.
Okay, so those are the topics coming in there. But let's switch focus to India's defense sector, which is a big boost as well on the back of the Defense Acquisition Council clearing proposals worth close to almost 2.38 lakh crores. This also gives a major push to the capability upgrades across the Army, Air Force and integrated systems. Varsha standing by to tell us more. Varsha, what has been announced and who are the key beneficiaries on the back of this?
Well, it's a big push when it comes to defense, and this 2.38 lakh crore covers your Army, your Air Force and Coast Guard, and government have also given two small contracts. One is of course missile system and other one is aircraft servicing with Boeing India Defence Private Limited. Now, talking about why government is spending this money, of course because India wants stronger security, modern weapons and also less dependence on imports. Talking about where the money is going, first Army, you have air defense system, then Dhanush guns, tank ammunition, military communication system are some of the areas where money will be deployed. Talking about Air Force, you have 60 transport aircraft of 1 lakh crore project. S-400 missile systems and combat drones are some of the areas in Air Force where the money will be deployed. Talking about Coast Guard, air cushion vehicles is the area where money will be used. Now, which companies will benefit? This is an important aspect when it comes to investors. You have Bharat Electronics, which is into electronics and radar system. You have Bharat Dynamics Limited, which is into missiles, will also be benefited. Then L&T for defense system, and lastly Ashok Leyland, which manufactures army vehicles. So these are some of the stocks which will benefit from the 2.38 lakh crore approval when it comes to defense projects.
Okay, so that's the big defense push that you're talking about as well. Thank you so much for that. Kush, anything that you like where the setup is looking strong because a whole host of beneficiaries that come in over here?
Yeah, so you could have some sort of bounce there, but if you ask me structure-wise, it's not so great. Even for something like an HAL, the structure is squarely negative, and we've seen the rebounds last week that came about that, that got sold into. BEL is more of a defensive bet because it's an index stock, so you could perhaps consider getting into it. But something like an MTAR Tech is, that has shown strength, during this course as well, continues to consolidate. I remain more constructive on some of those names rather than those, frontline HAL and BDLs of the world.
Got it. Okay, on fundamentals, and I know that you've said BEL in the past, right? Do you stick to that?
Yes, simple. I'll keep it very simple in defense.
Okay. Okay.
Now, BEL is the only stock which I would like to buy on dips.
Okay. Okay, all right.
Okay.
So
you're not enthused by all the spends that are happening, and as opposed to other sectors, it will not be advisable to have one more defense name?
No, that is true, but I think that see, earlier I was also very excited with HAL's order book, but I got to know that it takes a very long execution cycle is there in HAL. And market wants every quarter results to be exciting, and but so BEL actually passes that test of consistency.
It's the only one.
Yeah, because electronics is a heart of whatever goes into defense, right? So BEL will be involved in all the projects directly or indirectly.
So, I mean, the point is that if you're getting into a GRSE or you're getting into a Mazgon for the defense purposes, or any of these other ones as well, you should be okay with that Z-shaped recovery situation.
But then you have to have valuations which are comfortable that you'll be able to absorb 2-3 bad quarters.
Got it. Okay. All right. Let's go across now for our regular segment, Heard on the Street. Somit joining in to tell you what the buzz is from the dealing rooms. And I'm actually curious about whether he's heard anything on the banking space or indeed what the sentiment is ahead of a curtailed week. Somit.
Well, sentiments continue to remain quite bearish given the fact that we have seen a sharp sell-off coming in on Friday while crude continues to remain higher. In fact, now it's trading above the $115 per barrel mark. So not quite positive cues coming in from the dealing room. Few stocks that dealers have highlighted. Firstly, on Tata Consumer front, dealers indicate that there are some buy flows that they're seeing on the DI desk. And despite the big fall that we had seen on Friday, Tata Consumer actually was not trading down as much as what the index was and the other counters were. Now for LIC Housing Finance, there are buy flows on the FI desk. Cheaper valuation and a potential repo rate hike could benefit LIC Housing Finance is what dealers are indicating. For Newland Lab, there are buy flows on PMS desk. Early checks indicate that this export data for Newland Lab specifically could be quite strong in the month of March. For Page Industries, there are buy flows on the large HNI desk. Dealers indicate that the management has reiterated its guidance. They're expecting a double-digit growth going forward, and they're expecting the margins to be also in the range of around 19 to 21%. This is better compared to what the street was expecting, and hence there are some buy flows that we are seeing on Page Industries as well.
Thanks a lot for that. So a lot of individual names in focus for sure, and Somit, appreciate that. A lot of large names are coming off. So if people want to keep the shopping list ready, right, the idea should be to try and figure out where are the pockets of strength going to be for the next up cycle. And Parag bhai, I spoke to a clutch of large money managers over the weekend. The three areas which seem to be top of mind are energy, defense and pharmaceuticals. You would argue that the new one that is coming on the list is energy. And if oil and gas was never a part of anybody's shopping list, it seems that now for the foreseeable future it will be, because oil will probably settle at a higher marginal price than what it has been.
Okay.
Do any of the upstream players or ancillaries to upstream players come as a part of the shopping list? ONGC declared a $20 billion plan to spend money.
Yeah, correct. So
what do you do there?
That will benefit companies like, of course, these are small caps, and some of them might be in my portfolio, some of them might not be in my portfolio. I'm just saying, as you have So basically, this will have benefit companies like Maharashtra Seamless, Jindal Drilling kind of thing companies. This ONGC's $20 billion thing. Plus, of course, as we know that large energy infrastructure globally has been disrupted. So there is a probability that there's a new reset in oil price, which was hovering between say 70, 75, now will go to 80, 85, 90, even if the war settles down. So there is a case for ONGC also in that case, because ONGC currently is pricing only $65 per barrel. And plus there is a increase in gas production happening shortly. 15% increase in gas production in ONGC. So anyway, these companies are very good dividend yield companies. So yeah, I would agree to that argument that it is a part of shopping. Plus entire, as I said, entire coal chain. So whether it is NTPC, NLC, India, whether it is, all that stocks also will be under shopping list now because that ESG thing is out of the window completely.
If you're looking at technicals and we're looking at the metal pack, Neeraj already pointed out why aluminium will be in focus. But if you look beyond that, are there opportunities, or this is actually a pack that has seen significant volatility because the underlying commodities have slid so dramatically, right? So how would you trade this? Would you trade this at all?
This has been a pocket of strength. And even in the last few sessions that you see, there has been strength that is displayed. It might not have had that breakaway, breakout rally that, it's had in the past just about a month or so ago. But the fact that, they've taken those profits off the table and are consolidating, I take that as a positive sign. So I will remain constructive on the metal pack. Of course, the aluminum names could be in question, and Hindalco does, of course, make it to the top of the list. But I think I'm more keen and I tilt towards the steel names. So look at something like a JSW Steel. It's consolidating and very strong support of the 200-day moving average. Every time it comes to that level, you see some sort of a rebound come around. If there is a slip below this 1130 mark today because of the gap down opening, this actually makes a case for buying. Again, don't expect a breakout rally. I don't think we're expecting that in any stock, by the way. But as a pack, I think steel names still could have some strength, and that is something you can consider. On the downside, stop loss at the support level of 1100.
Okay. So, well, that's on the metal names as well. But interestingly, remember, aluminum could have a slightly different move, maybe if not today, then over the course of the next few days and weeks, simply because there the supply is getting constrained, and that might continue to have a bearing, let's say, on aluminum prices. Remember, the likes of Vedanta, etc., have remained reasonably strong last week too. Hindalco, for example, had a 2% up move. Vedanta didn't have a very sharp downtake. So those aluminum names are doing okay for themselves. And I wonder if, Ramesh Damani has made this point so many times that you're now looking at the next few years, which are for the resource owners. And therefore, can these companies do well? We've had the last decade belonging to tech, cash flow, etc. And cash flow remains the king. But can resource owners come to the fore now meaningfully? Because every country will want to bet on those resource security. And Parag Thakkar, not a bad argument. The question simply is, do you play it via aluminum? Do you play it via rare earths? Do you play it via copper? Or you don't do that at all?
See, in India, you can play it through aluminum only, meaningfully, I would say. Like you can buy Hindalco, Vedantas of the world to play this theme, or Nalcos of the world to play this theme. That two things, right? One, as we saw, that aluminum plant got disrupted. So those kind of disruptions will add to the shortages which were already there in the system inherently for aluminum. So on one hand, that thing. Second thing, US 10-year almost touching 4.5. Of course, now it is 4.35. But will also, I would say, at some point, again trigger QE. Because they'll have to print money to bring their bond yields down. So and that is also very big positive for traded aluminum kind of metals.
The argument has been made that we don't yet know that we don't have rare earth stores, right? Because you are going to have geological surveys and all of that conducted.
Yeah.
But more than the availability of rare earths, it's the ability to process it. So this is capability that can be built, and there are a couple of names that have done the rounds to say that, and people have bought into GMDC, for example. You're saying that it's too early to buy into GMDC?
See, I have not tracked GMDC for long, but I have seen that stock price at 60 rupees and there was no buyer at that price.
Yeah.
And now with this rare earth mineral story coming in, the stock is, of course, company might have done well in the between. But I'm not going to comment on that particular stock, but I would say that rare earth mineral is a story at a very nascent stage in India.
Yeah,
we'll have to see.
Number of years away.
We'll have to see who is the winner.
Yeah, the markets have opened. So, Parag, thank you for that. But just hang on, the markets have opened. Just need to mark this. What's the kind of fall? I think the rupee would have opened as well, so we'll mark the rupee too. But just keep an eye out on what both the rupee and the markets are doing. We're starting off maybe 100 points, 150 points lower. Very likely Bank Nifty could be putting pressure. So keep an eye out on that index at open. I want to see what the rupee is doing, so we should try and get the rupee up. It'll come maybe in about 30-60 seconds.
Sharp up.
The INR, okay, yeah. Sharp uptick there. 93.58. Had it happened on a natural course, I think the markets would have bumped up 500 points.
500 points. But this is
But
because
we know
there is
happening.
intervention that's coming in. You're seeing a 93.58 in terms of where the Indian rupee goes. In fact, on the back of the RBI intervention that's coming in, asking banks to limit their net open positions in the onshore derivative market to $100 million each. That's the reason why what we're picking up. And this move is aimed at curbing the depreciation of the Indian rupee. As planned, that's what you're seeing. Let's get in. My colleague who tracks this space pretty closely, Piyush Shukla, joins us to tell us more. Piyush, good morning. If you could set this up for us in terms of what the RBI has done, because the impact on the rupee is already seen now.
Yeah, good morning, Hiral. You're absolutely right. The rupee has opened positively. Around 1 rupee, the level has fell. What we are hearing, while the RBI has supported the rupee, the banks are caught in a fix. They have sought a 3-month timeline to wind down their net open positions in the onshore deliverable market, saying that if the new directives, which suggest that which are applicable from April 10, if they are implemented, banks will have to mark to market their net losses in Q4 FY26 itself, which will dent that treasury income and hence profitability. Banks have asked the RBI to make this directive applicable from a prospective, not a retrospective basis. Bankers have met senior RBI officials on Saturday for this request. According to industry sources, banks have around 250, large banks have around $250 to $300 million of such positions in the onshore deliverable markets. Foreign brokerage Jefferies today said that banks' net open position in onshore market may be large at around 30 to 40 billion, with large banks including SBI, ICICI, HDFC, Axis, and leading foreign banks operate in India with gross onshore positions of around 30 to 40 billion dollars, which offset each other. RBI had previously allowed banks to park up to 25% of their overall Tier 1 capital in such markets.
Right.
The RBI had introduced essentially these norms to help the currency, and we are seeing that moment in rupee today.
Got it, Piyush. Thanks so much for highlighting that for us. Let's go across to Lakshmi Iyer, Group President, Investments and CEO, Bajaj Alternate Investment Management. Lakshmi, thanks so much for taking the time. Just your thoughts on how this is playing out, because there was elevated volatility. Just the measure, I think, was unexpected. What do you think about the RBI's move and the implications thereof?
Yeah, hi, good morning. So I think every time with the markets, whether it's the currency markets or the bond markets or the equity markets, I think they stretch and go on extremes. There has to be some sort of a catalyst, typically by the regulator or the policy makers. And I think this is no such exception to that kind of a scenario. I do completely agree that the move has definitely caught everyone by surprise. But just imagine if each one of us were in the role of a central banker or the policy maker, what choices do we have? And I think that is exactly, this is one of such, I would say, arsenal from the war chest that we are seeing. And you know, the rupee is shouting through its lungs. If you compare it with the rest of the world, it is saying, "Ghayal hu isliye ghatak hu." So what choice does RBI have but to say that शिकार तो सभी करते हैं लेकिन टाइगर जैसा शिकार कोई नहीं कर सकता.
Those are good lines, and this is why we love to speak to you, Lakshmi. The question is कि शिकारी ने कितना हमला किया था इसके पहले, और how successful was the शिकारी ultimately, because anybody who was playing the derivative space was making a killing earlier, right? The question is, will this remove all of that and wipe that out, or will they still have some trophies at the end of this?
So I'd say that this is more of a temporary respite. The macro picture, the geopolitical scenario, honestly, is still very, very fluid. So can we call it, I would say, jang par fateh kind of scenario? Well, the answer is definitely not. Things are way more deep-rooted. There are many more parameters that need to be tracked from a macro perspective. So, and of course, there are obviously banks which are speaking with the regulator to probably get some respite onto this. So I think it is going to be a mixed scenario right now. Well, what we can probably say right now is that near-term joys also need to be celebrated. Not for long, maybe, if this scenario does not really solve for itself, which is looking very unlikely.
Lakshmi, that's the point, right? I mean, this stems the free fall, but very likely more downsides ahead. What do you reckon is not an outwardly level that we could see if the conflict were to persist? Are you trying to second guess where the rupee could head to?
Honestly, Neeraj, two types of people can do it, liar and lucky people. And my name starts with L, but I'm neither of the two. So I think the next best option is obviously to try to probably track these nuances very, very minutely. As I said, we are battling multiple, I would say, arsenal weapons at the same time. And we are toggling inflation, we are toggling CNG prices, we are toggling the whole host of LPG, crude oil, and as we speak, crude oil also has crossed past the $115 a barrel. And let's not forget that if this sustains, that $110, $115 a barrel, we are talking about CPI impact of north of 1.5%.
Perfect. No, so Lakshmi, let me flip the question then. It's very difficult to second guess. Is there more in the RBI's arsenal that you reckon can come in to stem this free slide? Otherwise, I mean, people can take short positions at will on the rupee with the belief that the rupee is going to slide. What more can the RBI do that you would expect the RBI could possibly bring it out in order to do moves like this?
So Neeraj, again, if you go back to Bollywood and then bring it back to the markets, jab tak tiger mara nahi, tab tak tiger hara nahi. I think that is very, very classic. So I would say that if you go back in history and try to see what kind of scenarios are we closely resembling, is it 2022 Russia-Ukraine or more like taper tantrum 2013? I think it's a combination of both, more like 2013. And I think right from the MSF, which is the marginal standing facility corridor, without really doing a repo rate hike, can RBI achieve an implied rate hike, which is what the markets or the bond markets are suggesting. We are not done with the arsenal yet, we believe, from the RBI standpoint. And this is just one of the many that we have seen from the war chest of the central banker.
Lakshmi, a quick question. Good morning, Hiral here. If you have to look at the 6-month forward rate right now versus the offshore and the onshore, are you seeing a widening of the gap that's happening in today's market as the way the rupee has opened, number one? And two, when you're talking about the cap that has come in, what is the kind of short-term distortion that you could see in terms of prices if you have to take the lead up to the 10th of April? Because I know we're not going to be able to really look at where it'll settle, but the distortion that could come in eventually, and will it make it expensive or more probably difficult for Indian corporates to actually go ahead and hedge their legitimate currency, risks?
So, quite a few questions. Let me try to do justice to all of these, Hiral. So I think firstly, the spreads had widened between the onshore and the offshore market. It had gone north of 25 paisa, if you talk in rupee terms. Now that aim is to clearly plug that gap. So that is definitely on the or in the offing. This is also getting exacerbated by the fact that FPIs have sold in 3 months of this calendar year what they probably have sold or not sold in the entire of last year. So I think that clearly means that incrementally, if you want to do or have positions much more than what is permitted, and I think there could be some element of speculation also, which obviously the regulator knows more than probably what you or me are anticipating. So the idea was to clearly plug that and reduce the differentials. And will they be able to achieve it? Well, you require even the market's overall macro to stabilize for this move to be super effective. Else, as I mentioned, you will see many more such similar kind of scenarios. And let's not forget that this week we have just 2 working days for the bond markets and just 3 working days for equities. So I think it's going to be crunched. So I think over the next 10 days, we will get much more clarity. And if there is going to be a respite, what could be the nature of that respite? But was it a move that was needed for the current market? Well, I mean, it's a very difficult situation right now, and it calls for difficult measures for sure.
Good point. All right. Lakshmi, thanks so much for that conversation. I think it puts a lot of things in perspective. And by the way, guys, we've had the pre-open rates settle, and take a look at the banks, because that's where quite a bit of the action is. We've settled off the low points for some of these banks. You had, for example, HDFC Bank that at one point was trading with cuts of about 3%, and it's now settled at 1.45% cut. Axis was also losing ground. It is actually the public sector banks that are losing more. So BOB now down over 2% or thereabouts. Before we go to anything else, let's talk about the big brokerage call of the day, and it is in fact JP Morgan and Jefferies seem to be bullish on, guess who? HDFC Bank. Though the former has cut the target on the same. And Sumit joining in to tell you what they're saying exactly. Sumit.
Brokerages on HDFC Bank clearly stand out because JP Morgan has upgraded its rating to overweight from neutral, have cut the target price marginally to 1010 from 1090 that was there earlier. But Jefferies, on the other hand, has maintained its buy rating with a target price of 1240, which suggests an upside potential of more than 60-odd%. So firstly, what JP Morgan is saying, they are saying that valuation reset creates an attractive entry point. They are saying that it's a core of franchise. The franchise is quite strong for HDFC Bank, and they are seeing a recovery in the system credit growth going forward. They see positive return on asset inflection as higher borrowing costs are replaced by low cost deposits. Apart from this, they also say that the asset quality continues to remain quite strong, and HDFC Bank's current HDFC Bank is currently well placed in the uncertain macro environment. They also say that the constrained deposit environment could weigh on the sentiment and earnings, but they believe that the recent valuation derating that we have seen has largely factored in all the earnings risk that could come in for HDFC Bank going forward. Jefferies, on the other hand, again has maintained its buy rating with a target price of 1240. They also believe that the valuations are quite attractive given the fact that the bank has a strong asset quality, healthy growth and a return on equity. They are saying that sensitivity to higher credit cost and lower top line is quite manageable by the bank. And the key news for re-rating going forward, or the key news that could aid re-rating going forward, would be clarity on the board issue and rollover of the CEO term and chairman appointment would be key for re-rating going forward for HDFC Bank.
All right. Thanks so much, Sumit, for that. We got Milan Vaishnav, founder and technical analyst at Gemstone Equity Research, joining in. Milan, apologies, we didn't give you too much time this morning. You just got about less than a minute. So let me jump straight to individual names that you've seen play out in the pre-open session. Anything stands out?
Yes, I'll be looking at 2 stock-specific approaches. The first would be NMDC. I would be looking to buy above 77. Will expect a target of 85 with a protective stop at 74. And second thing I would be looking at would be Power Grid. I would be looking to buy above 295, expect a target of 315 with a protective stop at 285. And as always, I would like to reiterate that these are delivery picks.
Short call, Milan?
No short calls.
No short calls. Okay, Kushbura, your top call for the day.
I'm going with Lupin on the long side. So targets, just to reiterate, 23.75, 24.45 and 22.85 as your stop loss.
Okay, 22.85 as your stop loss. We're getting long calls on a day when the markets are going to start off about 100 points, 125 points lower. The question is, are banks the sole culprits and will the others actually do better? Or is it difficult to call right now? I think time will tell. Let's see. But we're staring at a start which is weak. Let's see what levels do we settle at, and do our experts at the end of the first 15 minutes of trade give us any calls on the index itself. I think that will be important to check as well. But here come the first trades. This Monday morning, remember, truncated week. So remains to be seen how do people unwind or do up their positions. But 250 points lower, 1% lower on open. Banks 1.5% lower, no surprise there. The market breadth is weak, so don't look at that number at all. The advanced decline ratio is looking fairly adverse. The mid caps and the small caps too are down. Mid caps about 1.3%, small cap 1.53%. So no, it's not looking good at all. Nifty IT about 1.38%. Two banks are now around 2%. The Nifty 1.5%, 22,487. No, it's not looking good. Let's pull up the heat map and show you what's moving and what's not this morning. Well, very few winners. So let me start with that. Hindalco, no surprise that Hindalco, Nalco, because of the aluminum price uptick. Aluminum is up 6%. So these companies naturally tend to benefit, 2.4% higher. ONGC, marginal upsides there because of the Brent price uptick. Maybe the market is not still doing away with the windfall tax fears, because purely on fundamentals, ONGC at the current Brent price should actually be doing much better. NTPC about 0.19%. Coal India, Reliance are amongst the others which are kind of looking okay. What is not looking good? Banks. Axis 3% lower. Kotak down 3% as well. There is State Bank of India which is down. So no HDFC Bank, no ICICI in the top 10, but HDFC is down 1.73%. Beyond banks, Eternal, big disrupted, 3% lower for that one. Shriram Finance again corrects. There is Mahindra and Mahindra which is correcting, along with Tata Motors. PV is the market now fearing much more rapid consumption slowdown. I wonder in Tata Steel down on the 2%, but Hidal effectively everything is down. The only ones which are doing well are a few defensives.
Defense names, and I think it's your Hindalco which is in the positive right now as we speak. But let's just quickly look at the broader markets and the sectoral heat map then to understand in terms of what's happening on that end. If you see in terms of the sectors, a sea of red across. Majorly it's your PSUs and the private banking space which is taking the beating as we speak. Your consumer durables again is down in trade, real estate, auto. These are the ones which are seeing cuts in that range of little over 2%. What is slightly insulated or probably less of a beating is oil and gas and metals, which is still down in that range of 0.2% to almost 0.5%. Let's look at the broader markets and we'll just quickly look at the advanced decline ratio post that as well. A 1.8% cut coming in on the mid cap 150, and if you have to look at small cap as well, nearly 2% is the kind of cuts that you're seeing there as well. Let's look at the advanced decline ratio, 310 advances versus the kind of declines you can see the way we've opened up, over 2,000 declines coming in. So the breadth absolutely in favor of the bears. In terms of, individual stocks as well, on the back of the Defence Acquisition Council approving that 2.38 lakh crores, names like BEL, BDL, L&T, Ashok Leyland, Astra Microwave, as well as Data Patterns. These are the ones which will be in focus. It's only BEL which is reacting in the positive, but BDL, L&T are seeing pressure on the way the markets have been so far. So no major cheer coming in there. On the back of the aluminium plant that has been hit in Bahrain, Hindalco we mentioned, so Vedanta, Nalco, Rain Industries, a few of the other names, they are seeing some bit of a respite right now, seeing some smart moves there. It's Rain Industries which is down 1.5%. Berger Paints has taken a price hike, and that has been NDTV Profit's exclusive story that Radhima brought to us. That stock is down nearly 1% on the back of the price hike. LOAs that have been signed, Dilip Buildcon is another one which is in focus on the back of an LOA, 0.5% up move there. A whole host of order wins from a Thermax, Railtel, GR Infra, Seagull, JNK India, KNR Constructions, as well as Enviro Infra. So mixed reaction, but it's KNR and JNK which are seeing some smart moves on the back of order wins in today's session. The breadth overall in terms of movement is also pretty narrow. You're not seeing those wild swings either on the downside or the upside, but clearly it's banks who are taking the focus. IT as a sector as well, Alex, if you go to see, because of that rupee movement, is a sentimental move coming in terms of the IT index as well.
Yeah, Hiral, but it's still as a pack down as much as 1%. You said it though when you said that the banking index is the story of the day, because that index as a whole now down close to 2.5%, and practically all the constituents of the Nifty Bank are trading in the red. Pull that up actually, pull the constituents of the Nifty Bank up, and you will notice that the worst hit at this juncture is Axis Bank, followed by Kotak Mahindra Bank. You have IDFC First Bank, you have State Bank of India, ICICI Bank, HDFC Bank losing ground, but not to the extent of the other private sector banks, which is Axis and Kotak. ICICI Bank actually the best of the pack right now, which is down as much as 1.7%. HDFC Bank down 2%, and that's saying something, right? Let me go across to Kush Bora first, just to get an index view. If we're down as much as 1.3% at the open itself, 300 points taken out, and 22,500 being tested at this stage, and the Nifty Bank under considerable amount of pressure, 2.5%, what is the call right now?
My conviction on going long on the markets, that was pre-market open. It's just gotten a little stronger now with this kind of fall. Let me just give you a couple of data points rather quickly. The weekly RSI on Nifty is now below 24 in the last 20 years. This is the third lowest, and the only other two occasions were the 2008 global crisis and COVID. So we're as low as that, and typically we've seen a rebound once the RSI on the weekly setup hits 30. So we are now at 24. So like I said, we're towards capitulation. On the NSE 500, stocks below 200-day moving average have now crossed 400. Every time that happens, we see a rebound. And most importantly, the reason I say that today's move right now at open is important is because this is the second leg of a positive RSI divergence. In a very simple word, the Nifty is below or at the previous lows, but the RSI is not. And guess what? You look at a lot of sectoral indices, be it Nifty Bank, be it Nifty Auto, be it Nifty Real Estate, just to name a few. There are these positive RSI divergences popping up. Now, of course, things could go south if matters escalate and everything goes for a toss from a geopolitical standpoint. But given as things are right now, I take this as a positive sign, and I reiterate the fact that the risk-reward ratio from here on is starting to look very, very attractive.
Okay, let me pose that question to Milan Vaishnav and maybe add another perspective to it, Milan, which is that if you are also of the opinion that the risk-reward looks favorable from the stage, then would you play that with an index strategy going long, or would you look at some of the names that have been beaten down significantly that can potentially give you a better risk reward than a play on the benchmark?
Well, I have a couple of more things to add than over and above what Kush just said. First of all, India's index performance overall as against the global equities, I believe that as very rightly pointed out by Kush, we are seeing some very early indications of some bullish divergences on the lead indicators, which may not insulate us from the downside, but they definitely make us very resilient. And the amount of damage that we may suffer if things escalate would be much lesser than what the Asian peers would or the global equities would. And going ahead from here, if we compare the relative performance of India vis-a-vis, say, MSCI Asia ex-Japan, we may still be relatively underperforming, but we have seen now initial signs of improvement of that relative performance as well, which will translate into our markets over the coming days and weeks. So what I'm trying to drive home a point is that we might decline if the global equities decline, but the decline would be much lesser. We are now moving towards more resilient performance. And if we have to play the market, I would still be a little bit on the safer side. I would play it through the index rather than specific stocks. That is point one. And second point, coming to Bank Nifty may continue to see some stock specific shows, but overall relative performance is likely to take a backseat because that index has rolled into the weakening quadrant of the relative rotation graph. If you look at the overall sectoral rotation. So yes, I feel that risk reward ratio is much favorable going onward from here.
Wow, okay. We got some serious bulls here. Milan, just hang on. We'll take in what would you play it with, but we know Parag Thakkar likes to play it via banks. Parag bhai, good day to buy into Axis, HDFC, ICICI.
100%. This is a one-time treasury loss. One-time treasury loss. How much you can... already stocks have corrected so much. But they are ICICI, Axis are trading at 10 PE. Okay, 1.5, 1.6 times price to book now. HDFC Bank also.
Sub 1.5 times.
Yeah. Axis to below 1.5 on FY28.
Even HDFC Bank, right?
HDFC Bank 1.6, ICICI Bank 1.6, and for ICICI Bank for 2.3% ROI you are getting. And asset quality is very good. Even my channel checks is even for Axis Bank asset quality is going to improve. I think Citi has also mentioned this in their note today. So I think the valuations are absolutely compelling. This is a one-time loss, and of course there will be many other measures to protect rupee, and that might hurt banks a little bit here or there, like this measure, which will be a temporary hits. But I think everything is in the price, apart from one fact that if crude goes to 140, 150 due to and stays there, then of course there is a completely different picture. Then you have to be on 50% cash.
Got it. Okay. Jamin, thank you so much for joining in today and giving us your thoughts. Really appreciate your time this morning. Well, guys, I think...
Sorry, just the point that Parag bhai would still be at 50% cash.
if crude is off, if all bets are off.
No, so then all bets are off. Then world is heading into recession. Sure. What are we talking then?
Got it. Okay. This is good. This is good to know. Jamin, thank you so much. Milan, a word on some of the consumer durable names, simply because that's the cohort where a strong summer might not hit demand as much as a very high ticket item, because people might think twice before buying a very expensive piece of real estate, maybe even an expensive car, but an air conditioner, a fridge, an electric good is almost a non-negotiable now, because not that the prices are really steep. What do you make of a Voltas, a Blue Star, some of the EMS names like Amber Enterprises? Are any of these showing signs of bottoming out?
Not really. I have a neutral outlook on them. There is nothing on the chart that would either trigger a sell from the existing position or a fresh entry into them. I have a very neutral view on them.
Okay, and Milan, you mentioned that you are extremely bullish at the levels that we are at. I'm guessing all of that bullishness comes with a stop loss. If you had to buy one name as a 3-month or a 6-month positional trade, which one would that be? 1 or 2, whatever?
Yeah, I would first like to stick with Oil India. I expect at least 10 to 12% upside from current levels. That would be my one pick. So with a stop loss of 4 to 5% from the market price, one can easily expect 12-15% over 6 to 7 month period.
Okay, we'll leave it at that. Milan, thank you so much for joining in and giving us that perspective. Oil India, oil upstream names comes in as a positional call these days, simply because the market would want to believe that oil prices could stay higher for slightly longer, and therefore oil upstream and the capex thereof could benefit earnings for those companies as well as the ancillaries. But the predominant question remains that is there some green shoots at the valuation numbers of some of the consumer durable names, simply because some of these purchases might become non-negotiable. Air conditioner companies, for example, are also seeing some parallel relief, as some reports suggest that maybe LPG supply issues are just starting to ease a little. We'll get first-hand confirmation on that in just moments from now. But first, let me try and get my colleague Puneet to tell us whether indeed there are multiple reports of some of the supply chain issues and power issues bottoming out. Puneet, are you hearing that?
Well, seems to be that case, Neeraj, at this point of time. And there are 3 key points to note here. Now, one is, of course, that the LPG supply constraint had hit companies PG Electroplast being an EMS player and in the AC space had notified exchanges on March 9th of LPG supply constraint, and because of that, the stock had seen a reaction. Post that, we've seen over the next 10 days or so, company come out with an update that they are looking at alternates and substitutes at this point of time. So, they had specifically mentioned that they are looking and spoken to analysts about oxyacetylene as one of the key alternatives, which is a highly inflammable material which helps the brazing process within the AC manufacturing space. So that was one. And that has sent some relief to companies even in the AC space, the likes of Amber, the likes of Blue Star, and also the others like Voltas. So the other aspect one will be on this conversation, but also what has been the inventory filling in this Q4 of FY26 will be something to watch from the management of Blue Star as well, because you're seeing a decent summer uptake coming in because temperatures have been flaring up. So those will be the two key things to watch, and anything on raw material will also be helpful from this conversation.
Let's try and get that. Mr. B. Thiagarajan, MD of Blue Star, in our studios. Mr. Thiagarajan, thanks so much for taking the time out. Tough times, I reckon.
Interesting times.
Interesting times.
On one hand, a very bad and challenging year is coming to an end. One more day to go. It started with a very bad summer season and a GST-related interruption. Then the trade wars related supply chain issues. There was some momentum picking up and building up to the summer season. Then this war. And so we were looking forward to ending the year to a reasonably good revenue numbers. I think the room air conditioner revenue shortfall over the previous year would have been only 5%. In the sense the industry had not lost much. But in terms of profitability, it's a question mark. Then moving forward, summer is yet to pick up in a big way. It's not like 2024 summer season. And so I'm not so much worried about it. I was listening to your discussions on the LPG supplies. I think it is coming under control. There will be a period, I think, depending on what is going to happen, there may be an interruption. I don't think inventory is an issue. I am worried more about the market sentiments and to what extent price hike can be passed on.
Is there a worry on the market sentiment? I mean, thus far, at least the brokerage notes that have come out are saying that or investors who go and visit on-ground channel checks are saying that the consumer sentiment has not been hit very badly thus far. Do you differ there?
Invariably, it will happen. Today, they are not seeing the pressure, basically because the inventory that was built at old prices are there. The price hike is to the tune of around 13%. See, 5% comes out of energy label change, around 8% due to input cost material, excluding plastic. And the styrene, polystyrene prices are going up now. So let us imagine that is not necessary at this point of time. So the moment they see the prices are higher, and it all depends on when this Middle East crisis will end.
Mr. Thiagarajan, I just want to get a sense of the timelines, right? Because the last time we had spoken, you'd said, and this is before the conflict, so you had said that you were looking forward to a build-up of certain demand from the dealerships because prices were expected to go up. So I'm trying to understand the timeline of events from that point to this point. The prices have increased. And has it only been that 13%, or is that the latest round that is yet to take place?
No, December 2025, energy label change is going to commence from 1st January 2026. We are allowed to bill to the dealers, and the dealers can buy that product and sell till that inventory is lost. So therefore, the dealers end up buying. That price increase due to energy label change, like to like. Strictly speaking, let us say old 5-star is becoming a 3-star at this point of time for argument's sake. The price remains the same only, but there is a new 5-star now with a higher energy efficiency which will cost more. So, but the consumer will see 3-star to 3-star. So, therefore, that was 5% increase. The dealers will pump in their working capital to keep that so they can keep selling in January, February, March, let us say. But then the input costs went up. So, that build-up started happening in January end. 8% is the average cost increase. So, 8 plus 5, 13 will be for the new inventory. Sure. So, which means from February, whatever you bill will have to be at 13, but obviously there will be resistance because inventory is already in the market. So, primary billing was not happening. March it is supposed to happen. Okay. So, all manufacturers have announced this is between 8 to 10%, all are saying more I need. So, the dealers will buy only if it is sold out, and that sellout is happening. But the real inventory at a real price hike is yet to procure, which is the timeline is March last week now and April. But still the summer has not picked up in a big way. So if you see the map, it has been raining here and there, raining here and there. But the direction is that this summer will be good for air conditioners. Broadly, it should happen. Let us make an assumption. What should happen? I should grow by at least 25 to 30% in order to project a real growth. Because over last year is not. Neeraj had pointed out some point of time, anyway be good. Plus the price increase of, let us say, not 13%, one could pass on 8%, one would have really seen a revenue increase of that 8% itself. So, strictly speaking, good summer season is 25 to 30% growth should be there. Then only I will say it's a good summer season. But so far, it is not happening. So, sentiments play an important role. It is not the real normal growth alone. Plus, I should pass on price increase to the extent possible in order to maintain the direction of 8 to 8.5% of margin.
Yeah.
So, fingers crossed. You have to wait and
fingers
watch.
crossed. You've given a very interesting calculation as well when you talk about what Blue Star will have to achieve to actually show real growth, right? You're talking about 25 to 30%. That's the best case scenario that all of us are looking at. What is that worst case scenario that you will bake in? Because earlier we've already spoken of concerns, why the markets were not that bad. You've spoken about a market sentiment which is not supporting as of now. It may support, it may not support. What is that base case scenario that you will look at, the worst case scenario?
At least 15% over last year.
Okay. So
worst case.
Yeah.
Worst case.
So 15% over last year is the worst case scenario. And does that also bake in the risks when it comes to inventory management? Because inventory, as you mentioned right now, you're still sitting on inventory which is the old pricing. Your new inventory has to still come in. Yeah. So that one point taken into consideration, because if that does not get offloaded, everything gets haywire. Two, your input cost pressures, because a lot of your raw materials are imported. So how are you dealing with that aspect? Because I remember you were looking at conversations with Hindalco as well, specifically to procure copper locally. So if you have to pull this entire gamut into consideration, the bear case impact on margins, the bear case impact on revenues or growth you've already given us.
One correction. My inventory will be current. It is inventory.
Dealer, correct. But if the dealer inventory is not sold off, I'm sure.
So therefore, I'm not. That's why I'm not so much worried about LPG interruption.
Okay.
In fact, if some production cuts are going to happen, it should not really matter. Keeping in this mind, because you will be able to anyway produce 20% more rather than carrying a 20% more inventory. So at this moment, the production disruptions are not an issue for me. The issue is temperature should go up, consumer sentiments should not get deteriorated. And right now, these raw material prices are taken into account already. Going forward, the plastic and intermediaries are going to push up the prices, or the steel is going to push up the prices. That is a worry for the festival season. The summer is taken care of. I will worry about the consumer finance, given that 40% of the consumers will buy through consumer finance. If the interest rates are going up, that will become an additional burden. It is, one looked forward to a very great summer season, which you can propel the operations ahead.
Yeah.
But this war has changed the situation.
Just just quick follow up to what Hiral asked you, which is your worst case scenario is 15% revenue growth. But I just want to ask whether you're accounting for in that 15% a full pass on of the prices or no?
Is this 15%
At least
volume growth?
75% of the price increase would have got passed on.
Is this 15% volume growth or sales growth?
Revenue growth.
The volume growth.
Oh, volume growth.
Very category. So therefore, the sales growth could actually be higher, sir, because the MRPs have gone up.
It can be 23, you say, because 8% could be the increase. See, the blessing in disguise is the consumer will not feel that 13% burden compared with the last year, because 10% is a GST reduction.
Okay.
Yeah, I hear you. But so net, Mr. Thiagarajan, what you're saying is that the bear case growth of FY27 or FY26, as things stand right now, is between 20 to 25% revenue growth.
For the summer season, yes.
For the summer season or for the year, sir?
For the summer season.
And therefore, how does the year shape up therefore? If let's assume the conflict comes to an end, but therefore?
Conflict comes to an end, the full year growth should be 20 to 25% over last year. But even if the conflict comes to end, I think it is going to leave quite a bit of pain.
And sir, how much in a year like this does the summer season account for overall annual sales?
40%.
40%.
I have a question about.
But in Blue Star case, you have seen last year that we could manage well because we are just not dependent on B2C alone, and we are a B2B player as well. The good news is data center demand that is helping us to maintain the growth momentum.
So you're saying the weatherproofing strategy that you have for data centers and factories, will that be able to nullify to some extent the impact of the room ACs, the sentimental risks that we're looking at?
You rightly said, to some extent it cannot, because
what will that extent be? That's what I'm saying.
Market is significant, right? The question here is, it will grow. There is absolutely no doubt about it, given our penetration situation. Unfortunately, the situation is nobody is able to predict what is going to happen in terms of many things, and therefore I am being cautious. I am of the view FY27 will be far better than FY26, but one cannot take for granted it is going to be a super duper year. That's all I am making a statement. And the B2B part of the business, whether it is commercial air conditioning or whether it is data centers, factories, this can offset to the extent of, let us say, ballpark figure is 50% of a room air conditioner business profits if it is a failed summer season.
In terms of processes, and I just want to address this from a technical standpoint, what is the dependence on LPG? And there are a few manufacturers that are looking at alternative processes to tide over this time. Is that something that is possible in your business?
Possible, it is being implemented. First of all, it is used for two purposes. One is the brazing to join the pipes and other parts. The other is the powder coating. So in powder coating, there are other solutions available. You can use a DG set, and there are attachments to that. Quickly, people are installing that to move forward with that. And in case of brazing, there is some oxyacetylene method that is available. But the supplies are available. It's not an issue. At least in Blue Star case, we have not come across any interruption or stoppage. And alternate methods also, we are keeping it ready.
Is there a difference in the costing of the alternate methods? Does it move the needle too much?
No, not. It isn't.
Okay.
See, I'm again, I hold a different way. I'm not worried about the supply chain disruptions, but the market sentiments and consumers going out and buying. Kerala, for example, is doing very badly.
Because of rain?
I think the sentiments there of the Middle East immediately it is more than 30% degrowth compared with last year.
Understood.
Understood. Well, let's hope this tides over soon. But thank you so much, sir, for joining in today.
Thank you. It was a pleasure meeting you all. Thank you.
Thank you, sir.
Thank you so entirely ours. All right, that's Blue Star. And now let's go across to my colleague Jasmeet, because ACUS is setting up a manufacturing footprint expansion plan in Karnataka. Jasmeet fills in on the details before we get the management. Jasmeet, over to you.
Well, thank you for that. The company has been in focus lately on the back of the MOUs has been signing with various government. Last month they signed it with Tamil Nadu for 1900 odd crores, and today we have the management to discuss more on the MOU with the Karnataka government, where they plan to invest 2,800 odd crores over the year of next 5 years. While the company to set up manufacturing facility and expand the overall operations in Karnataka, basically in Hubli and Belgavi region, where they want to increase the overall aerospace product manufacturing. While further, if you look at the overall portfolio, the management do see that they have seen a good growth in aerospace, and they also believe that the consumer segment of them grows faster than the aerospace going ahead. If we look at the key outlook by the management, it remains positive, where they see that the shift towards becoming system level contributor when it comes to defense segment. Further, they also make a note that the aerospace growth is expected to grow at roughly 20% over and above the current growth going ahead. Further, they also note that the long-term EBITDA margin guidance of over 20% in the long run, and expect the overall consumer segment to grow faster. In Q3 also we saw that the overall aerospace grow at like 38% on YOY basis, while the consumer grew at 150 odd times. So it's some wait and watch of how does the overall manufacturing pans out going ahead, and what a management plans to further expand the overall consumer segment going ahead.
Thanks so much for that, Jasmeet. And there are some landmark victories for companies in this space. So lovely to get in Arvind Meligri. He's Executive Chairman and CEO of ACUS Johnson right now to talk about the here and now and the future. Arvind, great having you. Are you in the US or are you in India, Arvind?
I'm in US, Neeraj.
Oh, okay. Well, I'm presuming it's too late for you, but thank you so much for agreeing to talk to us. And I wonder, just before we talk about your individual expansion plans, Arvind, do you reckon that all that's happening around aerospace and defense leads to a more high-tech, high-degree sourcing or procurement of parts from companies like ACUS and others within this Indian aerospace and defense system?
Well, I mean, in overall, the opportunity for sourcing more exists for India. If you really look at it, we're only 2% of the global supply chain. We are going to be 10% of the global market just on the commercial aerospace side. And on the defense spend, we are one of the largest, increase in the spend is happening as a country. I think the both will bode well for the aerospace and defense as an industry overall for India. And I think it's a complex geopolitical situation, but India as a market, India as a geopolitical location where we are, will end up spending more money on this, both the industry, aerospace and defense.
Arvind, would that be one of the reasons, aside of stated goals post-IPO about the expansion plans? Tell us a bit about the expansion. When does it come on stream? What does it lead to? And is it possible to predict what it will lead to in the current landscape of changing economic and geopolitical situation?
Well, I mean, the investment is predominantly geared both on the aerospace and the consumer side. And some investments have already gone in. For example, we are investing close to 2,800 crore in the both consumer and aerospace and consumer together. And out of that, in the consumer side, especially it focused on the consumer electronics, about 800 crore is already invested into this, into Hubballi cluster. And the aerospace side, we are investing about 1,300 crore over 5 years. And, that's pretty much, if we generally look at our revenue to capex ratio is 1.5 to 2 times. So that predominantly gives you the direction where we are heading with respect to the growth coming out of this. And we feel very confident both the aerospace side and the consumer side, consumer electronics especially, where we stand, are both huge tailwinds we have. where we need this investment to capture that market share.
Arvind, good morning. Hiral on this side. You mentioned about the aerospace division where categorically, I remember from the previous conversations as well, where you've mentioned that you are pivoting from a precision component supplier to a system level defense and aerospace platform. With the kind of exports that you have, with the kind of partnerships that you have with, Israeli companies, German companies, and Ukrainian partners, are you seeing a shift that's already started to happen much in advance? Because the anticipation was that revenues from this aspect will start flowing in FY28. But with the geopolitical situation on ground, how have things actually changed?
Hiral, thank you for. We just want to clarify. I just want to clarify the current investment. What we're talking is predominantly focused on the commercial aerospace, not necessarily on the defense side of it. Defense is specifically the UAV side. What I talked about systems level is investing specifically in the joint venture with Ajna, with the Axel partners and the Vegas Defense. It's focused on the UAV market. Definitely, it is and also focused on India defense. And obviously, the globally what is going on right now is definitely going to drive the acceleration in that area also. And we feel very strongly on that. That's why, this announcement happened even before this war broke out. But this is, we believe in a long run, it is still a 28 plus kind of a revenue opportunity in there. But what we are talking current investments, which Neeraj brought out, has been an investment which is continue to add to our revenue currently as we produce right now, as we speak.
Okay. Arvind, hi, good morning. Alex here. A couple of points that I want to ask, and they may be slightly shorter term in nature, but I think this is something that everybody is asking various companies also like yourself, right? Which is that you have a 90% exports exposure right now. Are you seeing any hold-ups in terms of some commitments that you might have had that where maybe some of your clients are saying, hold off right now and we'll come back to you in a bit. So conversion of certain conversations that you were having, is that taking a little while? And two, because of this kind of exposure that you have to exports and the generation of revenue in foreign currency, is there a tailwind that you're currently enjoying with regard to the depreciation of a currency, or do you hedge some of your receivables?
Taking on the first question, obviously the cargo capacity has diminished, especially air cargo, with underbelly cargo being evaporated kind of out of the Middle East, which used to be a big carrier for quite a bit for India. And obviously that has put a little bit pressure on the total pricing for the logistics cost on the air logistics, and also constraints on the capacity. But it's manageable. It's not something, it's a big percentage of our business in terms of the cost of, actually logistic cost is not a big percentage of our business. So customers are fully aware of it and they are willing to support those things. And I think there is a disruption, I would say, more from the material flow perspective. Sometimes we see, although there may not be anything immediate, maybe a quarter down the road, we might see some of the, especially on the consumer side, toys, we see the pricing, especially on the polypropylene and ABS price shoot up quite a bit because they're all feedstock is all oil that is impacting. But definitely the customers are taking the burden of that. So it doesn't really impact our position, but it is just a pain in the neck to deal with continuously on this because we don't know the exact pricing. It has to be passed through. It happens on a monthly, quarterly, sometimes with the customers, but it's a process. And coming back to the second one, your currency, we are naturally hedged. We don't really do any hedging because we have a lot of imports also in dollars, or our customers pay us in dollars. Also, our imports in dollars. So I think there is definitely some amount of tailwind, whatever the margins are, apart from the material and equipment what we buy. And that's in general should be a tailwind for us and overall as the currency depreciates. But we don't factor these things in our planning. So we take as they come because we are naturally hedged. Sometimes it goes either way.
Okay. Well, Arvind, interesting use of term, the pain in the neck. You didn't use a term that somebody else from that geography used just a couple of days back. But yes, it is a pain, I can imagine. Thank you so much, though, for joining in today and giving us your thoughts. All the best for the quarters ahead.
Thank you.
Well, let's take us, and we'll have a conversation with them post the quarterly numbers are out to have a sense of the numbers. Most companies will be in a silent period right now. That stock is doing okay for itself this morning. Is this the time to deploy cash though? Is the key question, right, that we've been asking everybody. In a chat with Ganeshram Jayaraman, who's the MD and CEO of Avendus Investment Managers, I asked him whether this is the right time to do that. Listen in to what he had to say and where is it that he wants to deploy cash. Uncertainty that comes in because of a cyclical factor it might be welcome as well, right? This has a lot of imponderables, a lot of unpredictables, right? So therefore, when the markets, for example, have fallen, and I presume that you, knowing your DNA a little bit, you would have been sitting on a bit of cash. Do tell us how much was it? Have you started deploying? And what has prompted you to start deploying, if you have started deploying?
Yeah. It's a very important approach to stock picking our portfolio construction, that we said cash is very critical in our approach to investing. We want to pursue an absolute return strategy, and that too kind of an outsized absolute return mindset. So we need to buy stocks, the same stocks, when they are valued at a far better price, right? So yeah, we were sitting on about 35% cash end of February, okay? And yes, we have been
35% cash.
35% cash end of February. And
why? Because of valuation concerns?
Various things. And at the core of it was, we were a little concerned that the street was ignoring the risks, okay? The risks of what tariff was bringing, risk of AI, risk of the macro in India. We were cautious on how the mass consumer households leverage levels were a little uncomfortable. We were a little worried about the state government's fiscal side of things not being too good. We were a little wary of SME leverage or SME levels corporates. The large corporates are in great shape, maybe the best shape we have ever had them in maybe 20 plus years. But in SMEs, not as much. Premium households, no worry. The top 5 crore households, they are absolutely in pristine shape. The next 20 crore households, not too good. Central government, fine. State governments, not so fine. So this divided picture, coupled with the valuations which were there, and it was a call that we took for pretty much from October 24 till about February, March now, till that you need better margin of safety in the earnings expectations and on the multiples, and not that we could predict any of these, okay? That's not the approach, right? We are not trying to predict. For sure, I couldn't have predicted a war coming, or the impact of this on inflation, or interest rates, or currency, or fiscal challenges which will come. We couldn't have predicted. Those things cannot be predicted is the whole point, that we can't predict 20 moving parts, and all of them are important in how earnings play out. We can't predict it. What you can predict though, what you can assess though, not predict, is how well are these businesses capable of absorbing them? Are they vulnerable for it, or are they resilient to it? And more importantly, what price you are paying. That is in control, right? You control the controllables. What multiples you are paying, and those multiples are not PE multiples alone. You pay price to sales, okay? You pay EV to book value, okay? You are trying to assess what kind of valuations that you are paying. Are they building in some some bit of buffer, or are they priced for perfection? When you are priced for perfection, not that things can't play out, but sooner than later we have seen challenges come, and I'll give you some examples.
Please finish your example.
So I'll give you, in the last 25 years, every year, without exception, markets have corrected at least 10% every year, during the year.
Every year?
Every year.
Okay.
This didn't happen only in 2017. okay, when markets corrected 2 times in 2016, okay. Once early in the year when there were some fears of AQR, asset quality review by Reserve Bank, and later in the year due to demonetization, right? 2 times it happened in 1 year. So in 2017 was the only year markets didn't correct 10%. But 21 out of 25 years, if you had bought into a 10% correction, you made money in that year itself. Same year. 21 out of 25 years. 4 years, that 10-12% correction has led to a deeper cut, which is like less than 20% probability. So that gives you and it's any reason, elections, fiscal, Reserve Bank action, currency, wars, oil prices, you can't predict, okay? So that acceptance, or in some form humility, humble mindset that I can't predict, what I'll control is my action. So wait, give it that room for error, and that's the fundamental approach.
Okay, so where to deploy during these corrections, what's the approach one should be taking, that's the full conversation that, in fact, you can take look at hear the full conversation on our social media platforms as well. But moving on, we're talking about the crude surge that is happening, the hit that's coming in terms of ATF prices as well. In fact, the aviation ministry is in talks with all stakeholders to ease the pressure. Danish is here with all the exclusive details. Danish, what do you have for us?
Well, that's correct. Top government sources have exclusively told NDTV Profit that the government has factored in the hike that will happen from the 1st of April as far as ATF prices are concerned. But in order to ensure that there is minimal impact on the ticket prices, hence the Civil Aviation Ministry sources are telling us that they will be reaching out to chief ministers of state and they will be urging them to lower VAT. Because if you look at the overall VAT that these states charge in bigger states like Maharashtra, Delhi and West Bengal, which are bigger aviation markets, over there, we are seeing that the VAT on ATF is over 25%, and even in a state of like Bihar, the VAT is somewhere around 29%, and hence this translates into a higher ticket price. So, in order to ensure that the end user, which is the passenger, they don't suffer because of high ticket prices, hence the government is planning to write to the states to reduce VAT on ATF. Besides this, the Civil Aviation Minister is also likely to chair a meeting with
a slightly patchy line there. Danish, unfortunately, we've just hit that rough patch and could happen with technology. But thank you. You got the gist of the story, viewers. So good to have that. Okay, very quickly. EPL and Indovida have struck a big ticket merger. Let's get in. My colleague and her conversation, rather, Nisha Poddar spoke to Hemant Bakshi, the MD and global CEO of EPL, about this mega merger. Listen in.
Hemant, what's the rationale of this big transaction? Because Indovida is not just into manufacturing of the packaging material, but also into trading of the raw material for manufacturing the packaging.
Yeah. So, Nisha, let me step back and talk to you about the rationale of this deal. So firstly, EPL is in a really good position right now. We've declared double-digit growth for the last 3 quarters consecutively. Our EBITDA has grown by 300 basis points. So we think we have strong foundations for the next phase of our journey. And what we have said, our vision is to create the emerging markets packaging leader for the consumer business. So that's what we want to build. And there are 3 important pillars to this strategy. The first is we want to go into more emerging markets. We then want to make sure that we can expand beyond tubes. Right now, our business for the last 40 years has been in tubes, but there's an opportunity beyond that. So we want to build new formats. And thirdly, we want to become innovation partners for the large and emerging brands in the emerging world. So those are our 3 key pillars. And now talking about the rationale of the deal, firstly, it gives us scale. Our revenue goes up from where we are to $1 billion, so it doubles. Our EBITDA doubles, and in addition to that, our valuation becomes $2 billion.
Well, that's the interesting thing, and we'll get you the full conversation a bit later on as well. But it is that time of the show wherein we get you a very important voice who looks at the geopolitical situation very, very closely. And we loved the conversation that we had with Mr. James Dorsey from the S. Rajaratnam School of International Studies, and we requested him to come in again and try and give us his assessment of whether things have changed or gotten worse in the last 10 days that we last spoke. James, great having you. Thanks for taking the time out. And that's my question really. Are things looking a lot more opaque than what they were 10 days ago?
I'm not sure they're looking more opaque. I think they're looking more dangerous. You have negotiations or talks being mediated by various parties that really amount to motion without movement, or the dialogue of the deaf. With other words, you have two mutually exclusive maximalist plans on the table, the US 15-point plan and the Iranian 5-point plan. Both parties think that they are winning this war, have very little reason to compromise. And at the same time, you have escalation, the tit for tat between the Iranians, the Israelis, and the Americans when it comes to industrial plants, energy facilities, water facilities, the US military buildup that predicts some form of ground invasion potentially, or in any case, a naval blockade, for example, of Karg Island. All of that doesn't bode well.
James, good morning. Hiral on this side. So from what you're saying, does this mean that it's the Gulf states who could actually emerge as the players who could be forcing Iran to rethink their strategy of attempting that increased pressure when it comes to Donald Trump to negotiate from here on?
That's in effect the joker in the deck of cards, if you wish. The Iranian strategy is to increase pain on Israel, increase pain on the Gulf states, increase pain on American consumers, on global energy markets. The Gulf states are a crucial factor in that. If some of the Gulf states, for example, Saudi Arabia or the United Arab Emirates, possibly Bahrain, were to enter the war aggressively, with other words, until now, they have restricted themselves to intercepting Iranian missiles and drones. But if they were actually to aggressively join the fight, then the Iranian calculation falls in the sense that the Gulf states no longer would be pressuring the United States to end the war. They would be, or in any case, to end the war immediately. They would be pressuring the United States to end the war with a definitive result. In other words, either the absolute complete weakening of the Islamic Republic to an extent that it would be very difficult to recover, if not the destruction of the Islamic Republic.
James, in your wisdom, having looked at this for so long, do you believe that the conflict is anywhere close to an end? Because the common folklore of the last 24 hours is that a lot of countries are now doing back-channel talks to try and bring an end to this, because it is in nobody's interest that oil prices stay higher and inflation elevates. So do you believe we are close to the beginning of an end, or is it frankly difficult to say right now?
I think it's difficult to say. Having said that, I think the problem is this. Israel clearly doesn't want to end this war at this point. The Iranians think that time is in their advantage and therefore believe that a prolongation of the war, at least for now, is to their benefit. The one party that would like an out is US President Donald Trump. His problem is that he has boxed himself into a corner in which there is no credible way of declaring victory. And as a result of that, his only strategy has to be an expansion of the war.
James, what is being... Sorry, please continue.
Well, the one thing I was going to add here, there's a second joker in this, of course, and that is Yemen's Houthi rebels, who have entered the war, so far have only fired missiles and drones at Israel. But if they were to interrupt shipping in the Bab al-Mandab, which essentially links the Suez Canal with the Indian Ocean, then you get a significant broadening of the front. And that could, for example, be a trigger for the Saudis to enter the war, because the Houthis would pose a direct threat to their port of Yanbu, which is on the western side of the Arabian Peninsula, and it makes Saudi Arabia one of the very few, actually one of only two Arab states that are able to still export oil despite the closure of the Strait of Hormuz.
Yeah, that's true, and they are hitting records, so I think they would want that open. Let's see what happens there. But James, on social media, a lot of people are citing a 2005 movie and saying that the script looks so similar that in some sense the end game might be that the US in some fashion gets control over the Strait of Hormuz as well, and therefore controls two vital points of oil exports in the world: Venezuela, which is a producer, and Strait of Hormuz, which is the route through which oil may flow, and that could actually be a beneficial thing for the US over the long term, and therefore no reason for them to end the war until that motive is achieved. Have you thought about that?
Taking the Strait of Hormuz or wresting control of the Strait of Hormuz from Iran is easier said than done.
Okay.
It's going to have to involve taking or occupying Iranian territory, whether those are islands close to the Strait of Hormuz, whether that's the Iranian shoreline along the Strait of Hormuz. The Iranians are looking forward to that, at least that's what they're saying. They believe that they have a ground advantage, a home advantage, if they're fighting ground troops, US ground troops. Second of all, Iran has a standing army of somewhere between 800,000 and 1 million people. This is a battle-hardened military. Certainly the commanders go back to the Iran-Iraq war. The rank and file will have had experience, or some of the rank and file will have had experience in Syria. And as far as the Iranians are concerned, U.S. grounds on the troop to some degree levels the playing field and allows them to inflict higher casualties on the U.S. And they believe that higher casualties will increase U.S. public opposition to this war.
So James, okay, do you think for Iran right now, victory for them is going to be survival of the Islamic Republic? And if that is the kind of scenario, and if the regime survives, it would probably be a strategic defeat when it comes to US and Israel as well, and Donald Trump in totality.
I think we're past the stage where this is about victory, or this is about regime survival for Iran. The regime has survived. It's survived the decapitation strategy. It's shown that there is regime cohesion. We haven't seen splits in either the US, the military or the political elite. So now it's about securing their leverage in the region, which is a very different goal from regime survival.
So regime survival is not something that should be looked at now. We're way past that. But thank you, James, so much for joining. It's always a pleasure to speak to you, get insights and understand, what it would actually mean from here on and how things have actually changed and developed so far as well. So interesting moves coming in on the geopolitical front as well. But very quickly, let's just address the new kid on the block. I mean, it's a Coal India subsidiary which is listed at CMPDI. It's a weak listing that you're tracking. So far, a downtick of around 3.5–4%. There you go, 4.5%, 164.29 is what you're tracking in terms of CMPDI 1 is concerned. Let's see how the stock performs going ahead in trade. But we'll quickly slip into a short break. On the other side, Harold van der Linde of HSBC will be with us for some market talk and the kind of impact we're seeing, because multiple downgrades that have already started trickling in when it comes to India on the back of the impact of the war. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use.
Back with India Market Open and getting a very important global voice to try and understand what does he think of the current market situation. What would the global money be thinking about this? Harold Vanderlyn, Head of Asia Equity Strategy at HSBC, joins in right now with his thoughts. Harold, great having you as always. Thank you so much for taking the time out and being with us.
Thanks for having me on.
First, a broad macro view on Asia at large. One of the beliefs is that during times of geopolitical conflicts, money goes out from a lot of jurisdictions and makes way to the safe haven, which is the US. India has had its worst month, but I think some of the other countries are not too far behind either. Is that what is happening? Money is getting out of all kind of asset classes and floating to safe haven, which is the US?
Yeah, that's exactly what's happening. At least I think so. This morning, somebody asked me, says, where's the money flowing to? And I think it's cash. So people put in cash. If you look in Hong Kong, for example, interest rates have come down. And that's because there's a lot of cash. So what have we seen since the start of the conflict? India is down, but actually there are other markets which are down much more. Korea, Taiwan, Japan, they're down. Korea, I mean, India is down, depending on which index you look at, say 10%. Korea is down 16, 17%. That is not just because they buy more oil, because India buys oil as well. It's because this is where people were positioned. If you want to reduce your risk in your financial assets, you say, well, I'm going to go into cash and sell my equities. And you sell the equities that you own. And what do foreigners own? They own Korea and Taiwan because that was a story that everybody wanted to invest in. There was the AI story. So we've seen unprecedented sort of volatility in these markets and very substantial outflows. I mean, the total amount of outflows from Asia, from the markets where we have data from, some of the markets we don't have data, so this number understates this. It's about close to $60 billion since the 27th of February when the conflict started. That is almost twice as much as the outflow that we saw during COVID, first months of COVID. So pretty big flows coming out, and I think it goes into cash.
Interesting, Harold. I mean, did I just hear you say that the outflow is close to 60 billion, which could be twice the outflow that happened during COVID? So this is a clear risk off, right? The question therefore, Harold, is, and I would love to know what you're advising some of your clients as well about this, that if the conflict were to last a bit longer, because God knows Ukraine, Russia started with the same belief that it'll get over in a month and it's lasted 4 years. If this were to last longer, do you reckon that the pace of flows and the quantum of flows could continue as is, or at some point of time that momentum wanes?
Now, I think that initially this can continue because we've seen a lot of inflows, but actually, and the number I gave you is just for the March, 1 month. And then the number for COVID is also for March, it's 1 month. So we've seen in March pretty substantial outflows already. That can continue because it seems the conflict is still in a sort of an ongoing sort of form of escalation. And therefore, if prices continue to go up, that will remain very negative. But at some point in time, we will have to make a step back and say, okay, does this really mean that growth is going to collapse across the region? No, it's going to come down probably, but not collapse. Does it mean that the banking systems cannot function? That's probably not the case either. We're not having a sort of moment that we had in Asia in the late 1990s when the banking systems fell over. So the ability for Asia to withstand this, the economies, but also the markets, is there. but we're not at that point yet whereby we say this is the time to start to take a look at this. If we work on the assumption that you just gave me, this conflict is going to last longer, then yes, there is initially more outflows from these markets, and people will continue to sell the markets that they bought, and that is mostly North Asia, actually.
Harold, good morning, here on this side. So you're saying outflows could continue from here on. Now, if that is the kind of scenario one should be watching out for, and if you have to tie it up to where the valuations stand in terms of the Asian markets, say you look at China, you look at Taiwan, you look at Japan, you look at India, where does India fit according to you in that gamut? And what would you advise investors to do with India? Because you've noted time and again that it's very easy to exit the Indian markets, but the entry point becomes very important yet again.
Yeah, I think for the moment, valuations is not what is very high up on people's sort of thing. If this conflict were to continue, then it's really about where are there pockets of growth that probably are fairly resilient. And I think there are these pockets of growth across the region in India as well, that are fairly resilient to the ongoing conflict. Because that creates safety. Valuations comes in at a later stage. At the moment, the reason for that is also simple. Asia is not super expensive. I mean, India's valuations were high 2 years ago, but they've moderated, and it is probably still the most expensive market in the region. And there's good reasons why this is the case, but it's elevated. But in other markets, we've seen valuations go up as well. That was based on earnings sort of upgrades people expect to come through. That might not happen. But valuations across Asia were not extremely high to start off with. So valuations most people feel reasonably comfortable with. What it is really, it's now positioning that's key. And then eventually it's what can continue to grow where I feel comfortable to holding stocks. Before later on you say, I'm now going to reallocate my money again. So first it's simply about safety, and that's cash, or if you have to be in equities, in businesses that will continue to grow quite well, irrespective of what happens with the conflict.
So what should be the strategy, Harold, when it comes to stock selection at this point in time? Because if you're looking at an exposure to some extent when it comes to equity, strategy becomes key. Pockets of growth that will grow from here becomes key.
Yeah, I think there's three things you need to do. Firstly, you have to recognize, under the assumption that this conflict continues, you have to recognize that everything can come down. So if you say, I don't want that, well, then you're going to cash, of course. But if you have to be in equities, and there are portfolio managers who have to be in equities, that's their job, then you want to go into, and this is then the second thing, you want to go into those sectors where you think the impact is limited, more limited than others. You can think, for example, about consumer staples. Now, they will be impacted because they use packaging, and packaging will be impacted because of oil and plastic prices. But you go for the companies where the impact is much less than companies where it's much bigger. So that's one thing. Think about telecoms, consumer staples, utilities, and these sort of things. Another way to deal with this is to think about themes. What will happen in the world, what will continue in the world, irrespective of what happens in the Middle East. Now, for example, my suspicion is that over the next couple of years, defense industries or engineering companies that are related to that will continue to see growth. We will also see, for example, a continued surge in trying to get access to alternative sources of energy. Nuclear, hydro, wind, solar, whatever it may be. And you see in some countries across Asia already talk about trying to restart or accelerate that. So there are these sort of themes of sectors, you could call them maybe as well, that probably will continue to do reasonably well in this very difficult sort of environment. And that's another approach you can take and build exposure to that.
Got it. Harold, if the conflict were to come to an end in the next 15 days, God willing happens earlier, but I agree nobody knows, do equities as risk assets, because valuations in a lot of geographies have corrected, become the first ports of call, or do you believe markets or money might flow out of cash into more conservative investment avenues?
If this conflict stops over the next foreseeable future, right? And therefore, assuming oil moderates again and these sort of things, I think equities could perform globally initially very well, but it will be a struggle for us to get back to the levels where we were because growth is impacted. There are businesses in India or in the Philippines or in Taiwan that have been impacted. Some of them had to be closed. So the actual economic impact, the actual growth impact is already with us. So that will limit the upside to a certain extent. But yes, I think equities would be, it's a high risk sort of assets in most people's portfolio. So you take out when there's high risk is rising, but if you think risk is moderating, equities can outperform cash or bonds for these as alternative assets. So you can see a bounce, but I don't think it will be a bit of a struggle to go back to the peaks that we were only a couple of months ago.
That kind of sums it up, and Herald, really appreciate. Just one last question, very quick one. Would countries showing growth, the likes of India, etc., also become ports of call, or is that also a nuanced call with what happens to AI, what happens to crude and other factors?
All countries in Asia are being impacted in one way or another. Some of them more than others. And that's because they either have to directly import the oil or the dependency on oil is higher. This is also the case, not India, but Korea, Japan, Taiwan are large importers of oil. And these businesses, they need borium and helium and all sorts of other chemicals in their tech processes. And that is starting to become an issue. If there's one country where you say, actually, most of the money is domestically kind of generated, so the markets are not very dependent on foreign flows. India and China have that. Countries that have very high inventories of oil and therefore can deal with this price shock better. China is that in particular. So each of these countries will be impacted in different ways. But yeah, and that's what we got to keep in mind when we come to sort of country selection and how these businesses will be impacted.
Okay. Herald, really appreciate your time. Thank you so much, and may this conflict end soon.
Let's hope so. Thank you very much.
For all reasons, excluding not just the markets. But yeah, very well put by Herald van der Linden. I think the key point is don't expect the bounce back to lead markets back to levels that they were, because growth is impacted. Herald, can't put it any better.
Any better? I think, what we started off saying, that if the RBI entry in terms of intervention for the rupee would have come in, if the rupee had come to these levels without RBI intervention, markets would have read it well. But I think the markets read it really well because you're back at 94 to the dollar.
Yeah. Well, maybe it's a good message to the speculative elements that Tiger Abhi Zinda hai. Well, with that, it's a wrap on this leg of India Market Open. From Hiral, me and the team that put this show together, thanks so much for tuning in. Ask Profit is up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing all powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home.
Welcome to NDTV Profit. My name is Varsha. Well, Central Mine Planning and Design Institute is in focus on the back of company listing on exchanges today. Well, company offers consultancy and support services and also offers services across the entire spectrum of coal and mineral exploration and mine planning and design. But to speak more about it and what are the growth targets that the company has set for itself for next 2 to 3 years, I'm here joined by Mr. Chaudhary Shivraj Singh, who is Chairman and Managing Director at company. We have Mukesh Agrawal, Director Finance of Coal India, and Ashish Kumar, who is Director Business Development at Coal India. Well, welcome gentlemen, and pleasure to have you at NDTV Profit, and congratulations for your listing. Well, Mr. Singh, coming to you first, now that whole India will participate in your growth story, what are the target sets when it comes to central mine planning, considering your 2-year revenue CAGR of around 23%?
Thank you, Varsha-ji, and thanks to all your viewers, and thanks to all the investors who have posed their confidence on the growth story of CMPDI. CMPDI in the past 3 years has grown in revenue and profit at about 20% CAGR. And we are targeting to maintain this in next 3 years as well. So as we have already been telling about our growth story, which has the opportunity areas in exploration in not only in coal sector, outside coal also, and in downstream services of mine planning to finally closure of mine and rehabilitation of the mined out land. So that is how we are targeting that we will be maintaining our profit and EBITDA margins.
Understood. Got that point. Mr. Agrawal, coming to you on this, if you see the IPO is 100% offer for sale and the proceeds will entirely go to Coal India, how does Coal India intend to deploy these proceeds? Will be for debt reduction or capex or diversification, if any?
Yeah, madam. Actually, if you see, Coal India is always, from last 2-3 years, are deploying more than 16,000 crore rupees in the capex, and Coal India has made a roadmap of around 1 lakh crore rupees capex plan for the next 5 years, in which it works out to around 20,000 crore rupees capex will be there every year, and in which we had taken 4 streams for the coal to gas and renewable energy, thermal energy, and the critical mineral. So all these proceeds which we are getting from the IPO and the internal accruals will be deployed for the capex.
Understood. And Mr. Singh, how do you plan to structurally diversify companies' revenue away from Coal India over the next 5 to 7 years, considering more than 66% of your revenue comes from Coal India?
Yes, so we have brought down our revenue depending only on the anchor customer from more than 80% to 66%. And again, as we are going with Coal India into minerals as well as going on our own to minerals, especially critical minerals and REEs. So that provides a lot of opportunity for us, and I am very much confident that the Coal India and government part, which is at about 90% at present, will come down to 70%, and will be having 30% of outside Coal India and government.
Well, that was the recent listing of Central Mining, largely a day which has been dominated on the downside, and hence stocks down 4%. And even the 40% EBITDA profile not yet enthusing investors, at least at this point of time. Hello and welcome. You're watching Ask Profit. My name is Puneet Zaveri. With me is Somit Sarkar, and we'll try and solve all your stock-related queries in the next 1 hour. So if you haven't already, do start sending them on the numbers that are flashing on the top of the screen. You can also call us. That number of the landline number is also on the top of the screen as well. Before we go to our guest, take your stock-related queries. A very quick check of the markets. The GIFT Nifty did indicate a downtake of almost 250 points, and the market continues to be in that mode today, very close to a 22,500 mark. It's not in terms of giving any support at this point of time, so we'll continue to monitor those levels. But the heat map shows you the pressure that is on the banking index, led by some measures by the RBI, and hence all those banking index, HDFC, ICICI, all down. Kotak Mahindra Bank, Shriram Finance, Axis Bank, the top 3 losers for the Nifty 50. Bajaj Finance is also some of the other ones. So is SBI in the top 10 losers for the Nifty 50 at this point of time. The sectoral heat map also will reflect this pressure that's visible on the banking index and the other indexes as well. So you're seeing PSU Bank, Nifty Bank, as well as the private bank index and financial services, which are bearing the brunt of most of those losses. But realty continues to be down in trade today. India Defence down 1.4% as well. But very quickly look at the advance decline ratio, and it's not going to be a very pretty picture as well, because we're seeing a sea of green across spaces, across stock as well. So the advance decline ratio also will reflect that pain in the broader markets, and almost a 1:5 in terms of advances for now. So almost 5 stocks declining for one that's advancing, and the BSE 500 also very quickly shows you that perspective. Now, individual stocks like KNR Construction buzzing on the back of an order win today, but IRB Infra also got a huge order win a few days ago, and that momentum has continued. NALCO continue to be in the uptrend today, but City Union Bank, Minda Corp, Delta Corp all down in trade today as well. But let me welcome in Saurabh Jain, Equity Head Research at SMC Global Securities, on the fundamental side of the show. Kunal Rambia, Fund Manager and Trading Strategist at The Streets, now joining on the technical. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query from Mohit from Ludhiana. He is holding shares of NMDC at just 19 rupees per share. He's holding roughly around for those 500 shares. And his question is, shall I book those profits on that investment, or continue to hold for the next 3 to 5 years? Saurabh, welcome to the show. What would be your recommendation?
Hi, good morning. Thank you for having me on the show. See, we are quite bullish on the metal and mineral resources. NMD is one of the good pick out of the metal bag, and we see the prices are likely to move up, which will inch up the earnings and the margins for the company. And it is good to hold for the next 3 to 5 years.
From Andhra Pradesh is holding 233 shares of Ease My Trip, bought at a price of 21 rupees. He wants to know what's the long-term outlook on this counter and should he buy on this on the dips that we are looking at currently. Saurabh, any view on Ease My Trip? Is currently sitting on a big loss here.
See, I think the management has gone wrong on various its strategies, and there were some corporate governance issues were also there. And the stocks have been languishing and underperforming for the last so many quarters. Now it has reduced to, I guess, in a small cap category, or maybe micro cap category. There is no point in sticking with this stock. In my opinion, it is better to get out.
Better to get out of Ease My Trip is what Saurabh recommends. But the next question is coming in from Sanjay from Bengaluru. He wants to, average IRFC as well as Tex Macro Rail. So he holds both of these counters. He's not mentioned his buy price, but Kunal, welcome to the show. Would that be your recommendation? Would you recommend Sanjay to average both of these counters at this point of time?
Good morning. So if I look at IRFC, again, this counter is absolutely underperforming, and we saw the highs of around 225, 230 somewhere in July. Counter is now trading at 90, and in spite of such a massive correction, there is no sign of bottom formation so far. So I'll suggest to stay away from these counters. I'm not saying to sell, but right now, wait for the consolidation to happen. V-shaped recovery is anyway rolled out. So once we see some kind of consolidation, we can take a call on averaging out. So for now, just wait on the position which you're holding rather than averaging at this level.
Kunal, the next query is for you, and it's from Balaji from Chennai. He wants to know, can he buy Sundaram Finance at current levels for the next 3 to 6 months? Any target that you could suggest, Kunal?
So on the Sundaram Finance chart, again, since I guess Jan 2024, this counter is sideways consolidating. Recently, it has come down from 5,600 to 4,400. This is a massive correction. Now it is reaching near the previous bottom of 4,300. So yes, if the counter consolidates near the present level, one can think of initiating a buy with the stop loss of 4,300. But at this point in time, where the counter is trading 3.5% lower even in today's trade, avoid buying at this level, but watch out for the levels of 4,300 as a strong support.
Got the view, Kunal. But the first call for today, dialing in from Hyderabad, Chandu has a stock query for us. Chandu, good morning. Welcome to the show. What's your query?
Very good morning. Very good morning to all. My query related to Sectoral Finance. I have like 500 quantity at average price of 678.
Okay.
I'm a long-term investor, but it went to around 60%. I got it, but I'm unable to book profits and all. But I wanted to hold a long-term view. Will I book and I move to some other stock, or it's going down now?
Got it. Well, Chandu, this is a very pertinent query. Consistently this particular counter. But Saurabh, what do you make of what's happening with these CV financiers, right? We're seeing pressure on Chola, seeing pressure on HDB Financial as well. Is there any structural play for the CV makers, or is it that the larger, broader market correction is hampering all these stocks? And what would you recommend Chandu to do?
I think it is the mix of both. It is the broader market corrections which are, getting down stocks even from the stronger baskets also. And there is also a concern for the market that maybe going forward because of the higher crude prices, which may impact the industry and all, may taper down the demand going forward. So for that matter, I think there is a bit of pressure. But in case with respect to the Shriram Finance, I think they have done a recent deal, and the outlook for the next 3-5 years look quite optimistic. Since he has talked about next 3, 4, 5 years, then I'll suggest him to take a longer term view and keep holding your stock. Otherwise, I think in the short term, many investors have lost money in the short term. So I think there is no point in looking at the current market scenario. Stick with your investment with the next 3, 4, 5 years.
Okay, the next query is coming in from Kotresh. He wants to know whether can he buy Lodha developers at the current market price. Any targets that you could suggest on this, Kunal?
So it's a linear decline. In fact, in the last 1 month, this counter has come down from 1100 to 680, and still there is no respite on it. So avoid buying such counters. I'm not denying the support which we might see near 550, 560 levels, but why to catch the falling knife, right? So wait for some kind of consolidation and think of initiating a buy at that point in time rather than just catching the falling knife.
Got the view, Kunal. The next question, that's coming in now. It's from our viewer Udit from Mumbai. Udit, good morning. Welcome to the show. What's your query?
good morning, gents. My query is on EPAC prefab. I've been continuously following your narratives about these shares, and I know the fundamentals are strong, but over the last couple of weeks, this is sort of going down. And is it worthwhile to catch the falling knife now, or wait for these things to go down and then try to average it out?
Got it, Udit. So your pertinent query is on EPAC prefab. Is that correct? And you're asking if it's pertinent to average down at this point of time within this particular counter. Would that be correct?
That is the correct reasoning, Puneet.
Okay, but Udit, your buying price are 109. I can see that the 52-week low is also what's hit today. So how did you buy it at 109? I think the IPO price was also over 190 to 200 rupees, right?
No, I got that wrong. I think I'm falling on a loss, Puneet. That figure which I told to NDTV Profit is wrong. I'm on a loss now.
Okay, you're in a loss. So what would be the average price you're holding this counter at, EPAC prefab, right now?
200.
200. Okay, got it. Saurabh, this counter post quarter 3 results has continued to be weak, right? Should Udit continue to hold, maybe wait for quarter 4 results to just get some perspective from the management? Would that be your view?
I think it is, yes, he may choose to wait for the March quarter earnings. It is a recent earnings, and the confidence usually comes after 3, 4, 5 quarters when we see the results after the listing and the kind of the management commentary, whether the management commentary is matching up with the result coming out or not. In this case, I think it is too early to make a comment. I think it will be wise to wait for the March quarter earnings.
The next query is coming in from Murthy from Visakhapatnam. He's holding 50 shares of Amara Raja, bought at a price of 1,150. He wants to know the long-term view. Should he average or exit? Saurabh, any view on Amara Raja?
I think while the space is good, but I think in the short term, what is happening with the commodity, I think commodity started running even before this war broke out. And I think this is the material cost which may be disturbing all these companies. In the short term, I think the pain should be there. I think the earnings and the margins will continue to bleed. So in my opinion, I think it is better to get out in case you get any opportunity.
Got the view, Saurabh. But next question that's coming in. It's from Rajesh Maheshwari from Indore. He is a regular viewer. Asking on a counter that has been beaten down, bruised, name it, it's Ola Electric. He's holding roughly 1,400 shares, bought at 49 rupees per share. He's asking in the present scenario, does it make sense to stay invested or exit out of this counter or move on? Saurabh, let me come back to you because the financial year is almost ended and it seems to be like at least a 30 to 40% volume decline is expected in FY26 for the company. Is this the bottom? Would you suggest continue holding since he's bought it at 49? What would be your view?
I think in the market, the stock price generally goes up when there is an enthusiasm, and enthusiasm comes from the earnings. When the earnings are seeing erosion, how the stock price can go up. I think there is no point in chipping. Otherwise, also there have been quite issues with their management and their guidance also. So market has no confidence in this company, and that is why we are seeing the stock price cooling off in the last so many quarters. I think, in my opinion, it is better to get out.
Next is a caller query coming in from Bangalore. Mohammed, you can go ahead and ask your query.
Hi, good morning to you all.
Good morning, Mohammed.
I have Azad Engineering, bought it at the rate of 1,551 average price, around 50 stocks. I want to know what is the short-term view on this and what should be the stop loss?
Kunal, short-term view on Azad Engineering, any stop loss if you could suggest?
Absolutely. In fact, this counter is consolidating in a broader range. The support on the chart, which I can see, is around 1385, and at the same time, resistance is at around 1900 levels. I think last week only it hit the exact support level of 1360. So consider that to be a good stop loss. 1360 can be a good stop loss. One can think of, in fact, buying this counter because the risk-reward ratio is favorable, and that support is not broken since 1.5 years. So yes, it can be bought, and if our viewer is already holding, I think 1360 can be the good stop loss, and the targets can be around 1800 levels. Now this is again on a weekly chart, so it's a positional target.
Positional target from Kunal coming in on Azad Engineering. But next question is coming from Tulsi from Hyderabad. Again, a question that we've been getting quite a bit on HDFC Bank. Now, Saurabh, she's asking if it's the right time to buy into this counter. Now, you've seen the RBI measures have an impact on the stock, so it's trading at levels that we've not seen for the last few years. Are you in the camp that suggests buying HDFC Bank in one go in a staggered manner? What would be your recommendation?
I think at this point in time, I would not be a contrarian with respect to the market. I would suggest, I think it is better to let it go. Do not chip into the HDFC Bank. Maybe there are some issues which investors are not being privy to. I think instead of chipping into HDFC Bank, I think ICICI Bank looks much promising in the private sector space.
Okay. The next query is from Venkat Ramanan from Bangalore. He's a senior citizen. He is invested in multiple banks, Bank of India, Equitas Small Finance Bank, Yes Bank and IndusInd Bank. Currently, he is sitting on a loss of around 10 to 15% in each of them. He wants to know which of these can he add, exit or hold. Saurabh, any view on Bank of India, Equitas Bank, Yes Bank and IndusInd Bank? Which should he hold, which should he exit, which should he average?
In my opinion, I think he should exit Equitas, IndusInd, and the other name you said is?
Yes Bank, IndusInd Bank, Bank of India and Equitas Small Finance.
Apart from Bank of India, I think you can sell all the remaining three. And if you would like to be in this space, I would suggest you to go with the maybe Indian Bank and ICICI Bank.
Got that view. So Saurabh's definitely not liking a lot of those banking names this morning at this point of time, barring something like ICICI, and got that view, Saurabh. But the next question coming in from Zakir from Dubai. He's holding shares of transformers and rectifiers bought at roughly around 280 rupees per share. He wants to hold for the next 6 to 12 months. Kunal, would you recommend that? Any targets that you can give for Zakir?
So on the transformers and rectifiers chart, if I look at the weekly chart, this counter is consolidating well between 230 levels to 330 levels. But on the daily chart, yes, it is now again, breaking this small minor consolidation. So the good support, which I just mentioned, is 230. I think that can be the level to watch out for. If he gets the opportunity to buy near those levels, he can think of averaging out also. And again, the positional targets on that can be 325 to 330. But at this point in time, which is at 259, I think we should wait for the price to come near those extreme levels to have the favorable risk reward ratio.
Okay. The next query is coming in from Mahesh from Andhra Pradesh. He's holding 67 shares of Tata Tech, bought at an average price of 727. Should he continue to hold this counter for long term? Saurabh, any view?
See, we have a very negative view on the IT sector, and with respect to the Tata Tech, the company has seriously disappointed over the last many quarters. I think that is why the stock has been languishing. There's no point in sticking with it. I'll suggest an exit.
Got that view, Saurabh. But the next question on ADF Foods. Now, Sonu Kumar from Haryana actually bought it at 182, currently sitting on a loss. Kunal, what would be your recommendation on this particular stock? Should he continue to hold? And I know you're against averaging, but what would be your view?
See, now counter has come down from 350 to as low as 150. And if I look at the January 2023 lows, December 2022 lows, those were around 140, where the counter consolidated for quite a long period of time. So yes, now it is reaching near that support level. Advisable to hold on for now with the stop loss of 140. And again, as I mentioned earlier, if counter consolidates near this level of 140 to 160, one can think of initiating a buy, but wait for a while. I think this support level should be held. Looking at the volume activity, it's a bright possibility.
Very interesting, Kunal. But viewers, Saurabh as well as Kunal, time now for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell and hold. The first question coming in from Meher. She wants to know about IRCTC now that the stock has hit a 52-week low. Kunal, what would be your view?
Avoid it.
Rani from Tripur wants to know whether should she buy Nalco for the next 2 months. Kunal, any view?
Again, avoid it.
BHEL bought at 272. Saurabh by Ramesh. What should he do with his 485 shares at the current juncture?
Keep on holding.
Anil Singh wants to know whether is it a good time to buy PCBL Chemical. Saurabh, any view?
Avoid.
Hindustan Copper bought at roughly 470 by Sunil. A view, Kunal, on this counter?
Support is 450, hold with the stop loss.
Murli Mohan from Kerala has bought 2,000 shares of Suzlon at an average price of 60 rupees. Can he buy more for the next 6 months, Kunal?
Consolidation phase, support is 39. Think of buying with that stop loss.
Kamlesh is holding 500 shares of Samman Capital at 155. Saurabh is asking, in view of the acquisition by another company, what should he do with this counter?
Hold.
Abhirup is holding 235 shares of Bank of Maharashtra at an average price of 64 rupees. Can he continue to hold this counter for the next 5 years, Saurabh?
Hold.
Between SBI as well as Canara Bank, Saurabh, since we are wrapping up the banking discussion with you, what would be your view for Kaushik? Is this good to buy now?
I think go with the both.
Siva from Amravati is holding 2,000 shares of IRFC, bought at an average price of 200 rupees. Should he sell or wait for the next 6 months, Kunal?
Exit.
We got the fundamental view on HDFC Bank, Kunal, but on the technicals, this is a good time to buy, is what Akhilesh is asking.
Absolutely, I'm very comfortable with the present level. The consolidation breakout is 775. Look at the buying above that level.
Sunita from Hyderabad wants to know whether is it a right price to buy Sirma SGS for long term, Saurabh?
Yes, you can buy.
Colgate, Saurabh, bought at 2213 by Sudhir. What should he do with his 195 shares now?
Keep on holding.
Chandra from Bangalore is holding the shares of DCX system. Should he hold it for short term, Kunal?
Exit.
The next question, that's coming in, it's from, let me pull up this counter. It's on Suzlon actually, bought by Murli Manohan. He's holding 2,000 shares at 60. What would be your view, Saurabh?
Hold for the next 3 years.
Okay, Alkesh Devidan is holding shares of ICICI Bank at an average price of 1,366. Should he buy more at the current level or any other price that you would suggest, Kunal?
Absolutely, buy with the stop loss of 1,200.
BEL bought at 408. Saurabh, what should Mr. Sharma do with this counter now?
Hold for long term.
Got it. Well, that's the end of the rapid fire as well as the first round of the rapid fire as well. But viewers, stay tuned. Kunal, we'll let you go on that note. Thanks so much for joining in. Saurabh, stay with us. A lot more stock-related query viewers on the other side of this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of people, language and politics Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries. You can also call us, talk to us directly for those stock related queries with us, with our guests as well. Before we move on to those, a very quick check of the BSE FNO setup for today, because we continue to see pressure on the markets. The Sensex also shows you that at this point of time in terms of stocks, because that has been the key aspect, right? A lot of those stocks in the banking space continuing to be under pressure. Axis, Kotak, Bajaj Finance, Finserv, SBI, top 5 in that space down in trade today. Even in the gainers, very, very minuscule to form a trend. So continuing to be under pressure for now, down 1.4%. Apart from that, also, you are seeing the BankX also continuing to be in a similar trajectory for now. And the banking index, basis of what you're seeing on the Sensex heat map also continues to be under pressure today. So continuing to see those stocks which will be hampered, and the banking names and the Nifty Bank will be something to watch throughout the day. In terms of long build-up, you're seeing Nalco as well as SAIL continuing to show momentum today. Short covering seen across Hindalco and Coal India. Now, Coal India, you also had one of its subsidiary lists today, so potentially could be a trend, but only up 1.4%. In terms of long unwindings, though, you're seeing Syngene feature on that list. So is L&T Finance. While a build-up of shorts seen yet again, and no surprises here in terms of the banking names. So continue to track all of these names. But let me welcome Ajit Mishra, SVP Research at Religare Broking on the technical side now. And Saurabh continues to stay with us. Ajit, very good morning. Thanks so much for joining in. Before I come to you, let me just go across, take the next stock-related query. It's coming in on Indigo from Nitish. Now, he wants to know a short-term outlook and if it's the right time to enter. Ajit, given the volatility, is it visible on the charts as well? What would be your recommendation?
Yeah, good morning, Puneet. So yes, the stock has corrected considerably from the record highs. We are currently hovering around the key support area of the long-term moving averages on the weekly chart, which placed around 3940, 3950 zone. But still, the crude is still a headache, not only for the airlines, but for the other related stock sectors like, paints and tires and all. So that is what reflecting that every recovery or rebound attempt is usually attracting selling pressure, and the stock is still hovering below its short-term averages. So in my opinion, if the view is short-term, one should refrain from any aggressive buying in the related sectors. And for Indigo specifically, wait for a decisive break or a recovery above 4300 mark for any fresh buy.
Okay. The next is a caller query coming in from Bareilly. Arvind, you can go ahead and ask your query.
गुड मॉर्निंग सर। सर मार्केट की हालत तो बहुत बुरी है। मेरा क्वेरी था, मेरे पोर्टफोलियो में एक शेयर है शक्ति पंप करके, मैंने 557 के रेट पे ले रखा है सर। अभी मेरे पोर्टफोलियो में 15% गिरा हुआ है, तो मैं इसको एवरेज करना चाह रहा था। क्या और भी गिरावट देखने को मिल सकती है जिस हिसाब से मार्केट है, और आप लोगों के और भी मैं शो देख रहा था, तो कहीं पे मतलब ऐसा तो लगता ही नहीं है कि मार्केट यहाँ से रुकने वाला है। तो
अच्छा, आप ये शेयर लॉन्ग टर्म के लिए होल्ड कर सकते हैं बराबर?
लॉन्ग टर्म देखिए सर ना, कि अगर लॉन्ग टर्म बोलते हैं ना, तो मुझे अपने गुरुजी की याद आ जाती है। उन्होंने मेरे को जो उन्होंने स्टॉक मार्केट सिखाया था, उन्होंने कहा मार्केट में कोई श्योर थिंग नहीं होती है, इवन एज एन कॉन्डम भी अनसेफ रहता है। तो उसी हिसाब से मार्केट की हालत है, अर्निंग्स तो आएंगी नहीं कंपनियों की।
ठीक है सर, बट आप लंबे टाइम के लिए होल्ड कर सकते हैं कि नहीं, वो बताइए।
तो मैं मैक्सिमम 3 साल के लिए।
3 साल के लिए, ठीक है। सौरभ, एनी व्यू ऑन शक्ति पंप? शुड ही एवरेज एट द करंट लेवल एंड होल्ड फॉर द नेक्स्ट 3 years?
देखिए, मार्केट में जैसे आपने बताया अनिश्चितता बनी हुई है, सेलिंग बनी हुई है, स्टॉक्स काफी गिर रहे हैं और खासकर वहां पर ज्यादा सेलिंग आ रही है जहां पर अर्निंग इरोजन हो रहा है। शक्ति पंप के केस में वैल्यूएशन भी ज्यादा था और अर्निंग इरोजन भी हो रहा है। अगर आप लास्ट के कुछ क्वार्टर देखेंगे तो नतीजे अच्छे नहीं आ रहे हैं, डी ग्रोथ हो रहा है, तो मेरी सलाह से आप निकल जाए इसमें से।
Got that view, Saurabh. So an exit is what Saurabh recommends at this point of time. The next one, Saurabh, also coming back to you, is on ITC. Our viewer Jayesh actually holds 10,000 shares, bought at 350. So currently sitting on a considerable loss. Seems to be that he might have bought post what we see in terms of the cigarette price hike. Now, what should he do with this Saurabh? Because he is, of course, holding a considerable number of shares. Would you recommend him to average down now, or what would be your view?
First of all, I think the recent hike was enormous. I think there has been a hike of I think in the range of 20 to 40% in the case of cigarettes, which is not well taken by the markets. And in fact, in the days to come, we'll see how when the March quarter earnings will come, how it has impacted the company's volumes on the cigarette side. And in my opinion, I think the market has taken cognizance of the fact, and that is why the stock has been hammered down since that hike has come. So in my opinion, I think there is no point in getting average of such a huge quantity. Rather, I would suggest him to better, I think, reduce his position and maybe look for the space in the metal and banking sector.
Okay. The next query is coming in from Anuj from Delhi. He's holding 1,000 shares of Suryodaya Small Finance Bank at an average price of 121. Any outlook on this, Ajit? Suryodaya Small Finance Bank?
So, Sumit, this stock is still lingering with the negative bias for almost several months now. Though there were multiple attempts of recovery, rebound in between, the stock inch toward 150 mark, but it couldn't sustain. The good part is that he have bought it at recent levels. So my recommendation would be to exit and sit on the sidelines, let the stock stabilize above let's say 145 mark or a dip towards 100. Not in between.
Got that view, Ajit. But the next question, it's coming in on KIMS, Krishna Institute of Medical Science, and our viewer Suresh Nair from Hyderabad is actually a long-term investor. He's holding shares at 702, so currently sitting on the loss. Ajit, how do you view KIMS? It's also done a recent 1,500 crore QIP to reduce debt, but seems to be that Suresh might have bought it at a little elevated level. What would your recommendation be to him?
So Puneet, if you see that at the early of this calendar year, the stock rebounded very swiftly, means from roughly around 560 to 760. It was very close to the record highs. But after that, we are again seeing that the stock is witnessing pressure in line with what we are seeing across the board, and especially in the healthcare basket as well, which were holding strongly earlier. But across the board now, we have started seeing correction, be it Apollo, Astra DM and all. Comparatively, it still looks better if we compare it with the other spaces wherein the damage is average 40 to 50% from the record highs. So I believe that there could be a possibly consolidation around the current area. Maybe 580, 600 could be the zone where the stock might stabilize before the next leg of the up move. So fresh adding or adding to your existing position is not recommended, but yeah, you can continue to hold your longs with 580 as a closing stop.
Divya Divya has bought 150 shares of Swiggy at an average price of 396. She wants to know whether should she hold this counter for the next 3 to 6 months. Currently, she's sitting at a heavy loss here. Ajit, any view on Swiggy for the next 6 months?
So Sumit, the stock is trading at the record lows. Means earlier that in the month of May, around 297 was the previous record low, and we've decisively breached that mark, and it's gradually inching lower with every passing day. So there's no sign of recovery. I understand that she is sitting on losses, but since the market tone is negative and the stock is already at the 52-week low record lows, the prudent approach is to look for exit opportunities. So in case if there will be any bounce, let's say towards 280 to 90 levels, you should consider exiting. In the interim, do maintain a stop at 250.
250 would be a stop is what Ajit is recommending. Down and out discounter yet again over the last few months. But Ajay is calling us actually now from Mumbai with a stock-related query. Ajay, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. I wanted to know about Indigo Paints. Is it the right time to accumulate Indigo Paints, or should I wait for some more time?
And Ajay, do you have any other paint counter in your portfolio right now? Will this be the first one?
Nothing in paints.
Nothing in paints. Got
Nothing in paints.
Saurabh, we've seen price hikes actually, and we broke the story on NDTV Profit this morning by Berger Paints as well as Asian Paints. Indigo is differentiated in terms of the way they report numbers, also volume as well as value separate for all categories. So, would you recommend Ajay to buy into this counter now?
I think it will be a contrarian buy, but yes, after the news of price hike, I think by the Asian Paint and the other companies, I think some kind of a sanity should come into the prices. And on the valuations side also, since it is a smaller company and the valuations have also become more attractive now. So I think if you have a horizon of maybe more than 1 year or 2 years, then you can chip in.
Okay, the next query is coming in. From, the viewer hasn't mentioned his name, from Vedant, and he has bought few shares of IIFL Finance at a price of 505 for the he wants to know whether should he continue to hold this counter for the next 2 to 3 years. Saurabh, any view on IIFL Finance?
Not particularly on the IIFL Finance, but yes, overall on the bank and NBFCs, we are positive, and for the next 2 to 3 years, it looks positive.
Looks positive for now, according to Saurabh. But taking across the next query now, Mr. Lobo actually is holding shares of REC. Now, we've discussed this, stock over the last few weeks between the merger between REC as well as PFC, but he holds roughly 10,000 shares and he's sitting at a profit of 1.9 lakh rupees as of now. Now, REC has come off quite a bit since this impending announcement. Saurabh, if he still wants to hold, would you recommend him to book profits for this one and maybe buy into PFC? Would that be a better play?
Yeah, of course, that would be a good play. And from both the stocks, from the valuation standpoints, looks attractive, and there is a good dividend yield play also. And the growth should be there for the next 3-5 years, close to 14-15% CAGR.
The next query is coming in from Akhilesh. He wants to know, whether is it a right time to enter graphite India for the next 2 to 3 years. Saurabh, any view on graphite?
Metal space is looking interesting, and it is more of a related play. So yes, he can chip in.
The next counter that's coming in is from K Guru from Chennai. He wants to buy into Power Grid and Coal India for the next 2 years. Saurabh, would you recommend that, buying the stock now?
I think you can chip into the Coal India, and with respect to the Power Grid, I would suggest better to look for NTPC. Okay,
the next is a caller query coming in from Bangalore. Venkathe, you can go ahead and ask your query.
Very good morning, gentlemen. I've been a very, regular viewer of your show. You have all been doing a very good job. And my query is regarding, Mahindra and Mahindra Finance.
Okay.
Okay. This stock I recently bought about 3-4 months back. And because it has been backed by Mahindra Automobiles, which I have been making a good money, I bought it. And my buy price is on an average 306.
So can you hold this counter for long term?
Yeah, I can hold it for long term, and I hold 250 numbers.
Okay.
Is it a good stock to hold for a long term, or I should get rid of it?
Okay. Saurabh, should he hold the M&M Finance for long term, or should he move to some other counter?
I think a lot of volatility is there in the. I think a lot of volatility is there in the company's financials, and if you look in the last few months, the stock has been underperforming consistently. In my opinion, I think it is better to get out and switch to maybe in the banking side, maybe a stock like Indian Bank.
Indian Bank, got it. Well, the next one's on Geo Finance. Ajit, our viewer Ashish has actually bought it at 304. What should he do with his 300 shares? Is it a good time to average down?
So Puneet, in case if the view is short term, definitely I would not recommend averaging down, considering the overall market tone and its volatile swings also that the stock has experienced in the past. As of now, indications are in the favor that this decline may further extend in case if it fails to hold this immediate swing low close to around 224, 223. So that then probably maybe around 220, 215 is something the stock might test. So since you have bought it at higher levels, my recommendation is to wait and let the stock stabilize. In the interim, 220 should be your closing stop loss. In case of rebound, the first hurdle could be close to around 245 to 46. So around that area, I should review his position.
Okay. Ashok Reddy from Vijayawada wants to know whether should he continue to hold Quest Corp and Sterling Wilson Solar for long term for the next 2 years. Saurabh, any view on both the counters, Quest Corp and Sterling Wilson?
Negative.
Okay.
Negative on either counters. Got it. Well, the next question coming in, it's a space that's doing well today, the sugar space. And Neha from Bangalore actually wants to know 1 to 3 month view on these stocks. Ajit, does today's rally show some legs, or is it too early to call out this momentum as of now? Would you recommend that to enter Dwarkesh or Dhampur Sugar at this point of time?
So Puneet, we all know that the recovery or the move in sugar space is largely cyclical, and in case if you end up holding these counters for longer duration without any stop losses, you might end up holding it for several years. So in my opinion, it's prudent to avoid any fresh position in these counters. In case if somebody is looking for only for sugar space, then Balrampur is a better candidate. Means if you see that the stock is still holding up with all the major averages and very close to the record highs also. So comparatively, it looks better structure. So with stop at 468, one can look for Balrampur as a candidate in this space.
Okay. A caller query coming in from Ludhiana. Suresh, you can go ahead and ask your query.
Hello.
Yes, Suresh.
Hello. Good morning, sir.
Good morning.
I am holding the IRCTC shares at the rate of 804 last from 1.5 years.
And you can continue to hold this counter for more than 1 year?
Yes, I can continue to for more than 1 year. My question is whether averaging this stock can help me to exit in a some decent price when there is a recovery in the market.
Okay. Saurabh, should Suresh average IRCTC at current levels or continue to hold or just exit?
I would not suggest certainly to average it down, and in my opinion, I think he has bought when there was a PSU rally going on and the valuations were high. And in fact, even after the correction, I think the stock is still hovering around 8 times to book value, which suggests that the stock is still not that cheap. So maybe a hold would be a good option for him.
Hold on IRCT is what Saurabh would recommend. The next counter is Nalco, and Vani actually holds shares at 165. Ajit, she's holding 400 shares, so she's almost doubled her money at this point of time. Would you recommend exiting, booking those profit and taking it home? Is that something that you would recommend, Ajit?
So metal as a pack, Puneet, largely, some of these stocks like National Aluminium, Jindal Steel, JSW Steel, they have done exceptionally well, VEDL including that list. And the good part is that National Aluminium is still holding the ground, means during the corrective phase, the decline is nominal, and we're largely seeing more of time-wise correction instead of price-wise correction. So at least, partial profit definitely can be considered in case if this stock is a considerable portion to his overall portfolio, and maintain a trailing stop at 340, which is the recent base now. So with that, she can continue. Next leg, probably once, let's say we cross 410, 420 levels, then probably around 480, 500 is something that the stock might inch towards in the coming months.
Arvind from Mumbai is holding 2,000 shares of Canara Bank, bought at an average price of 160. He wants to know whether the share prices could touch around 180 levels by next year. Saurabh, any view on this?
On the banking space, Canara Bank in particular, good on valuation, and the strength is there on the balance sheet. Good stock to hold for the next 3-5 years.
Got the view. Well, Satyan is asking the next question to us. He is, of course, a regular viewer. Now, he's asking on Sirma, but we've already answered that. So, Hyundai is the other one. Now, Saurabh, we seem to be seeing a very corrective phase on Hyundai, right? All the way up from 28 to 2,900. Stocks now hit 1,771 today. What would your view be? Is it largely that the sales growth not being adequate compared to some of its peers is now having a hampering, and the momentum forward also doesn't look that impressive? Is that your read also on the stock? Because seems to be a considerable pain in this stock, right, for the last at least the last month or so.
You're absolutely right. I think there is a peer pressure in terms of volume growth, what Hyundai is experiencing. And moreover, the growth per se for the industry is also tapering off now. And now the commodity cost is also rising, and the fuel cost is also likely to rise after some state elections, the way the crude is moving up. And so there is a added pressure on the automobile space. I think it is better to get out from Hyundai in case you get an opportunity, and maybe park your money in the metal and banking space.
Has bought 50 shares of Jindal Steel at a price of 1,350. He wants to know whether can he add more at current levels for the next 2 to 3 months. Ajit, any view on Jindal Steel?
So like Sumit, we were discussing about metal counters holding comparatively well, and Jindal Steel also has retraced from its record highs, but still we are holding above its major averages on the multiple time frames. So this gives us comfort that probably around this area, close to 1,080, is something that the stock might hold amid this corrective phase. So you can continue to hold, avoid averaging at current levels, and in the next leg, a decisive break above 1145 could trigger the next leg of the up move. So around that area, he may consider adding in case if he wish to. But at current levels, he can continue to hold with 1,080 as a stop.
1145, a key level to watch out for JSPL according to Ajit. But Saurabh and Ajit, as well as the viewers, time off for the second round of the rapid fire in this edition of Fast Profit. You guys know the drill. First one's coming in from Dennis from Kerala on Tata Motors commercial vehicle. Saurabh, another counter that's now slipped below the 400 mark as well. Would you suggest buying now in this counter?
Avoid.
Neeraj is holding 50 shares of Dixon Tech, bought at a price of 10,200. Ajit, should he continue to hold this?
Yeah, hold with 9,200 as a stop.
ABFRL bought at roughly 254 by Lalita. What should he do with this counter, Saurabh?
Hold.
Ravi from Mumbai wants to know whether is it a right time to buy Max Healthcare for long term, Saurabh?
You can buy.
KPIT Tech bought by CJU at 655, Saurabh. He wants to know a 3-year view on the stock.
Negative.
Gunit from Mumbai wants to know the short-term view on Bajaj Finance, Ajit.
Short-term looks sideways, 770 stop.
Within the defense space, is it a right time to buy MTAR Tech, Saurabh?
Avoid, rather go for Bharat Electronics.
Sudhir is holding 195 shares of Colgate, bought a price of 2,213. Should he continue to hold this for long term, Saurabh?
Hold.
Edelweiss Financial, Ajit, we've not discussed this stock for a while, is what Shashi is asking. Should he buy into this counter now?
It do have support at 97, but wait for a sign of recovery. Buy only above 110.
Mahalakshmi is holding few shares of DLF, currently sitting on a loss. Should she continue to hold this counter for long term, Saurabh?
Exit.
Another huge performer, HUL, Saurabh. Our viewer wants to know if it's a good time to add now with almost zero returns for the last 5 years.
I think better go for Dabur or Marico.
Ramesh from Bangalore is holding 16 shares of Coforge, currently sitting on a loss. Should he continue to hold this, Ajit?
Just for a rebound with 1,050 as a stop loss and around 1,250, 1,300, review the position.
We discussed EPAC prefab, Saurabh, but on Interarc as well. Anthony wants to know if it's a good time to buy for the long run.
Avoid.
Venkat Ramani wants to know whether should he buy Time Technoplast at the current level for long term. Saurabh?
Avoid.
Amara Raja Ajit bought at roughly around 1036. What should Dilip do with this counter now?
Trend still looks negative. Marginal support at 640. So use recovery around 710, 722. Reduce your position.
Arjun from Bangalore wants to know whether is it a right time to buy Force Motors, Saurabh?
You can buy.
ACC bought at roughly 2600. Ajit, what should Priyanka do with this counter?
See, hold, but avoid averaging. Let the stock stabilize. So maybe close around 1200, we might find support.
And viewers, of course, standard disclaimer, the channel that you're watching is, of course, part of the Adani Group, and so is ACC, as we discussed right now. The next one that's coming in, it's on FEM Industries. Saurabh, I think we've discussed this before, but would you continue to have a positive view on the stock?
Yes, it's a hold.
Manohar from Pondicherry is holding 5 shares of L&T, bought at a price of 3,800. Is it a right time to add more, Saurabh?
Avoid.
IDFC First, is it a good time to buy, is what our viewer is asking, Saurabh. What would be your view?
Avoid, rather go for Bank of Maharashtra.
Raghav from Hyderabad is holding 40 shares of Varun Beverages, bought at a price of 420, currently sitting on a loss. Any short-term view on this, Ajit?
Use recovery to reduce 410, 420, strong resistance.
ITC Hotel bought at 194, Ajit, by Suman. He's actually asking if he should sell it today and buy it again in a couple of days. What's the momentum in the near term?
Momentum definitely looks negative. He can do so.
Got it. Well, that's the end of the rapid fire. Ajit and Saurabh, as well as the viewers, thanks so much for sending in your queries, and thank you to Saurabh and Ajit for helping us solve all of this, because we've solved a considerable number of 80 queries in this last 1 hour. A lot more stocks related queries at 2 p.m. for the afternoon edition of Ask Profit. But viewers, all the time on this edition of the show. Thanks so much for watching. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो, बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, Join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. On Saturday, outflows.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me.
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put focus on that one company that is on our radar today. We've seen broader market correction, but Nifty Realty as a space has been hit the hardest, and hence a company from that index, a company in the real estate space, and we're talking about Marathon Nextgen, a Mumbai-focused real estate developer, largely residential as well as commercial projects is what they operate, with the portfolio spanning across the affordable, premium, luxury as well as the commercial and the retail space. So you get the whole gambit with this particular company. Did turn net debt free as of Q3 of FY26 with a very interesting QIP that the company did of almost 900 crores raised back in June and July. That has had an impact on the shareholding of the company, and we'll get to that, one of the parameters, in just a bit. But a 5-year profit CAGR of almost 43% has been quite strong at this point of time, given the post-COVID rush as well as sustenance of the same as well. Profit have also expanded consistently post FY22, as I mentioned, and one of the biggest aspects was the merger of Marathon Nextgen Township, which is effective of FY25, and hence there's a lot more to talk to the company about this. When you look at the primary products portfolio of Marathon Nextgen, though, the residential as well as the development as well as the affordable and premium housing is what the company operates in. So that has been a space that they want to earn, and it's very evenly balanced. In terms of some of the key projects though, Monte South in Baikala, the next zone in Panvel, which is a big, huge township that the company is developing, as well as new homes in Bhandup are some of the exposure that the company has in the MMR region, and that's Mumbai Metropolitan Residential Region for those who are new to this space. So this has been where you've had a decent uptick essentially in land costs as well as the price per square feet, and all these companies benefit from that. Amongst the other key project has been the Nirvana collection that the company launched back in November of 2025 at Panvel, almost a 600 crore gross developmental value, which essentially means the development potential of that particular land parcel. Amongst the segments where I've spoken about, revenue has been 60% or majority of that coming in from the residential space. You've seen roughly realization of almost 18,000 rupees per square feet. But look at the revenue mix for commercial as well, because you see a higher realization there. So 40% coming in from this aspect. And while it's not as stable as a residential project might be, given that you could go out and sell out a number of projects within a particular span of time, you might have to deal with renters amongst others. The realization makes up for it at this point of time. Now, very importantly is, and as I spoke about, the diversification, right? Commercial segment drives the higher realization as well as margin stability. But when you look at the diversified product mix, because of the townships in Panvel as well as projects in Bhandop, the affordable residential portion has now come to almost 30%. Now that's the blue bar down at the bottom. You are seeing roughly 24% come from the mid-size residential, and the commercial, which we spoke about a higher realization, is almost 26% of the company's revenue, with almost 20% coming in from the luxury space, where the company actually started out in Lower Parel, where they have a major commercial mix. So hence the realization and the meat of the margins comes from those commercial businesses. But in terms of the affordable side and the residential township side that the company has done, it's coming in from this residential side, which is almost 60% of the revenue. Move on and look at the key rating parameters now, because we have been talking about how important it is for a company like Marathon to give us some perspective on the income statement, balance sheet and cash flow as well. Now, you would be seeing that volatility across years for some of the key real estate makers, and hence what I would urge you to look at is the historical time frame that we're presenting, because those 3 years give you that perspective much better than that individual time frame as well. We'll also look at return ratios at this point of time. Along with that, look at the shareholding, which I've mentioned would change a little bit post the QIP. Street cred has been something that you and me are well versed with in terms of valuations, as well as the stock price that it has been impacted. Put some focus there as well as the operational metrics over the last 3 years, what have been the company's period at this point of time. The next part has been the first parameter that we look at, and that's income statement. Now, when you look at FY 24 to 25, you see that variance I was talking about, but the 3-year CAGR, both for revenue, its EBITDA as well as profitability, has been quite decent, especially on the bottom line. So a 70% CAGR from the FY 23 levels. We have hence given this company a thumbs up at this point of time. But the quarter 3 also a very, very interesting time, because you saw that impact coming in for quarter 3. Labor code was a big impact. So you've seen profits dip by almost 33%, and so has the EBITDA, with a marginal growth in terms of revenue. So in quarter 3, the company's booking number was also in the lower side, and hence the margins hit the lowest, which it has been, but has been consistent at the 30% range, and hence a lot more to go for the company at this point of time. In terms of the balance sheet, that has been the other aspect. Share capital is largely reduced, but the increase of reserves from 762 crores all the way up to 1100 crores gives the confidence in terms of what the company's strategy has been in the long term, while the total equity has also seen a substantial increase because of the reserves at this point of time. We continue to monitor the company's borrowing, and they have gotten net debt free as of this. So you are seeing a 560 crore number as of FY 25. That's literally become zero for the company because of the QIP, and this was something that they had spoken about over the last couple of quarters in conference calls. The net debt free was one of their agendas, and now has been achieved. Cash in bank has also remained quite stable at about 100 crores, and hence a thumbs up that we have given to Marathon Nextgen also on this particular parameter. So that's 2 in 2. Does the cash flow give us that perspective also is the other key aspect I want to focus on, because cash flow from operations as well as is one of the major drivers from profitability as well, and here is where the variance of the company is. So in FY25, because there was the negative CFO, and it's largely also basis of what the company has been investing, you see that operations to PAT number largely been missing from here. But the company has been, in terms of the net cash flow, got back to the positive net cash flow trajectory. But because there has been that variance, a lot of new projects coming in on stream in FY27 amongst others. Hence, we've given this a neutral rating for now. A lot more to watch out for, essentially at this point of time for Marathon Nextgen within the cash flow side of things, and hence a neutral rating for now. Look at the return ratios though, and that gives you another perspective. It's better to look at a whole 3-year CAGR. 13 to 14% is a decent number for a real estate company, as well as amongst other sectors that we look at. Of course, a much better improvement from FY21 levels, but within this time frame, and hence given this neutral rating for now yet again has been the other factor in terms of sustenance of that and improvement from this. ROE is the other factor, very decent of between 16 to 18%, and hence while the ROC might be a little lower at this point of time, you would expect a lot of investment made in townships amongst others, and hence a neutral rating on the return parameters as well. Shareholding is the other key factor. We've consistently highlighted that because of the QIP, you will see a big difference between the promoter shareholding between March as well as December. But what's interesting is the increase in foreign investments as well as domestic investors substantially between those 3 quarters, and a lot of that QIP effect you see across the parameter now. A 24% shareholding from the public is also giving you that confidence that retail investors have bought into the story. So for that, as well as the promoter maintaining about a 50% share, we have given this company a thumbs up. Future debt raises will be something to watch out for, because one more raise of equity will dilute this number further, as well as for the existing shareholders as well. So continue to monitor shareholding, but for now, given the historical evidence that we have, we've given this a thumbs up. Look at the street cred though, and here is where we've been talking about the disappointment that across the space, because of the Israel-Iran war, has started to hamper the company's share price performance. Amongst other key factors, along with Nifty Realty, has been the other key impending impact of down almost 31%. 1-year return is down almost 21%, but the 5-year return for the company, though up 5x, still the near-term underperformance has been quite constrained. And now with FY26 almost over, with the company yet to report Q4, you're seeing debt being pared down, and hence this could be a very interesting play going into FY27, and we'll quiz the management on that too. Valuations is the other factor. As for real estate, we try to look at the EV by EBITDA metric for these companies. You've seen roughly a 17 to 18% metric for a lot of these companies trading in that valuation. So Marathon, of course, Sri Lotus, a recent listing, while the Nifty Realty as a whole also trades at roughly around 20 times. So you're seeing Suntech also trading at almost 22 times EV by EBITDA. This one, of course, is something to watch out for. So it's not extremely expensive, and giving the correction gets you into a lucrative factor. Finally, in terms of operational metrics, that is the other factor. We've consistently highlighted that the area sold by the company has consistently increased. So has the booking value. Will remain stable in FY25, but is yet to jump in back again in FY26. Pardon me. And collection been quite decent as well. Given this a neutral rating for now, to get some more perspective from the management in terms of the booking values, that will be something to watch out for in FY26, because we have seen the 3-quarter numbers has been quite decent as well. But go back to look at some of the key parameters as well as which we've spoken about, highlighting that the financial performance gives some perspective for income statement, which is a thumbs up for now. We've also given a thumbs up on the balance sheet, while cash flow and return ratios gives you a neutral rating for now. In terms of what we've seen the company's shareholding post the QIP, there has been a change in structure, a thumbs up here as well. Street cred, like the other real estate companies, has been down, so we'll continue to monitor that. But valuations as well as operation metrics give you some more confidence at this point of time. So overall, when you pull up the ratings, the company is trading at 5 out of 8 of the ratings for KYC right here on NDTV Profit. But important to get some perspective now from management. Mayur Shah, the Vice Chairman of Marathon Nextgen Realty Limited, is now joining us to give us exactly that. Mr. Shah, a very good morning to you, sir. Thanks so much for joining in right here at NDTV Profit. My name is Puneet. Just the first question, right? Because we've seen Marathon transition continue to maintain in terms of the luxury space and now going into affordable housing as well. Give us some perspective of the company's strategy to have and go into townships at this point of time, and in terms of how that would change your financials, if any perspective, to start us off.
Good morning. Marathon has always been looking at a very balanced portfolio in every cycle of the project cycle, particularly luxury, commercial, outskirt township, and affordable segment within Mumbai. So we've been balancing that portfolio for quite some time, and going further also, we would like to balance it because we are seeing a very strong push of infrastructure by the government in almost all the across Mumbai MMR, and we feel that luxury as well as affordable and outskirts, including commercial within city, is going to do very well in the next 3 to 5 years.
So how would you see the change? So because we did pull out, Mr. Shah, the change between the metrics. So affordable continues to be at almost 30% of your portfolio. Residential is almost, the mid-size residential is almost 24%. Commercial is almost 26%. So how would that mix change with the townships coming in? Do you feel that the overall residential metrics close to 60% will increase slightly over the next few years?
Yes, but see, it depends on the cycle of the project also. Many times you have commercial projects start reflecting at the end of the project because it's all sold in a ready inventory kind of a thing. So we'll be starting building a new commercial inventory in the next year and next 2 to 3 years. So more or less this would balance will be similar to what you are seeing right now on the screen because of the affordable housing in the outskirts where our portfolio of Panvel is doing very well, and we really want to increase that portfolio to some extent. And also the Bhandup, where we have SRA portfolio that also contributes towards affordable. These two, affordable housing has a very ROI is very high, and the sales velocity is much better than the luxury, which we have seen over the period of the time. So, we keep tweaking this, balance between the portfolios which we have in our whole micro markets.
So, two key questions now, Mr. Shah, from what you said, that you will be looking to rebuild your commercial portfolio yet again in the next 2 to 3 years, because a lot of your legacy commercial portfolio in Lower Parel has been doing very well, that your average realization also quite high. Where can we expect in terms of this commercial properties to come in? Will that be largely in the outskirts, as you mentioned, or will that be in these spaces where your realization has been quite high, because it is a very competitive market there? So what would be the strategy be there for the commercial portfolio? Which kind of areas would you want to be targeting at this point of time?
So we will be targeting commercial portfolio. A major portfolio will be within the city.
Okay.
We are looking at a central Mumbai type of development, very similar to our Marathon Future X type of location. We are also having like Millennium project, which is on the Mulund, on the next to touching to the metro station. So that type of inventory where within the city a good office space, small business space are also in demand. And thirdly, in the outskirts, we are looking at Nextgen. We are doing close to 1 lakh square feet of retail space of the completed. The phase 1 and phase 2 is already completed. Phase 3, we are looking at a large retail component in the 5 lakh square feet development. So we, office, retail kind of a combination which we would like to create for the next cycle.
And Mr. Shah, you also mentioned about how within your residential portfolio, your affordable portfolio also has a very high ROI. Your return on investment is quite high. The sales velocity is quite high. But what we've seen in the last 2 to 3 years has been that the luxury side of the portfolio for amongst the other listed real estate players also has been quite strong. The collections have been quite strong, has been quite robust as well. So when you talk about affordable over the next couple of years going through, is your strategy that you want to address areas where there is a higher potential of first-time buyers coming into areas where it's still untapped, because that's been something that the market hasn't yet rewarded yet in that sense, if you know what I mean, in terms of stock price performance, because the luxury one, much more stable in that sense. So could you give us some perspective for this rationale?
So luxury will continue. See, for our Monte South ongoing project where we have already done Tower A and Tower B. Now we are already constructing in a very high speed the Tower C, which is 400 units. And we have a portfolio of a Tower D, another 1600 crore kind of inventory. So as and when we have scope available, we are again going to jump into a luxury residential. Even Tower C upper floor between 35 to 64 floors are yet to be launched during this year. So you will see luxury on a similar pace coming into our portfolio of the realization.
Okay, got that view, Mr. Shah. So you also had raised the 900 crore QIP in the last year. Roughly 340 crores was for debt reduction, which is now hampered. And so many congratulations for that, because you wanted to pay that off very quickly. Talk to us about the rest of the amount. What was that was, of course, for newer investments into new properties. Has that already been done? So is that 900 crores already utilized?
Yeah, for the debt part, as you rightly pointed out, it is already been utilized. The balance we are infusing as per our QIP statement into our ongoing projects. But we have set aside 300 crore for the new acquisition, which result we have been negotiating with various projects of redevelopment, JD, and all those things in particularly South and Central Mumbai, and a high value kind of a realization should be more than 40,000 square feet on carpet. We are looking at only those markets, and there you will see during this year we'll be announcing at least 3 to 4 very big projects to add into our GDV.
So is there any target? Because the follow-up question, of course, would be on your return on capital employed, right? Because your ROEs are quite strong. Because you're holding so much cash in your portfolio right now in your company, you are seeing the 13 to 14% range largely maintained until last year. So could we expect that deployment of 300 crores to happen in FY27, and hence any target ROC that you are maintaining over the next couple of years?
Yeah, see, thing is, the deployment of the funds are depending on the projects acquired, and when it goes through the cycle of approval and all. So we are very confident that within the next 1.5 years, we should be able to deploy the entire fund which we have now, as per the projects which are under negotiation. And definitely, you'll see those announcements. We are looking at least 4,000 crore of GDV to be newly added during this span of 12 to 18 months by way of these new acquisition projects.
So 4,000 crores gross development value over the next 12 to 18 months, got that view. How much of that would be coming in from your Panvel landscape as well? Because you've seen a new airport come in Mumbai, that's also coming in Navi Mumbai. And hence all those around areas, as well as CM Devendra Fadnavis talking about the Naina city coming in. So as a third Mumbai in that sense, you have almost 200 acres of land there. Could you give us some perspective of the development of the same, as well as a rough timeline of what could be the expectation, and how much of this 4,000 crores will include land parcels from there as well?
So for the Panvel phase 3 of the next zone, roughly 600 crore has already been launched, and that is under progress. The Nirvana collection, which we already going through. For the Mumbai 3.0, there are very big plans of infrastructure development, particularly in our land bank, Panvel to Karjat rail connectivity, which is going on in a very high pace. And we expect that by 27 or latest by 28, we will have a local train going through Panvel to Karjat. And those stops of, Chikle, Mope, all those where these are the land bank which we are having, will be really accessible for something, similar happened between Kalyan and Ambernath, something like that. The development will take a very high pace. As on today, we are looking at some of the land bank coming into the development in 18 to 24 months by way of villa and plotted development. That is what we'll be focusing initially. But however, once this infra has been fully developed, like we have Sea Link already operational, airport Namia is already coming up full way. Some connectivity between the two airport, high-speed railway is also coming up, and all these infra which is been planned in a big way. I think will really bring these lands into a development in a fast manner.
Got it. So a lot of those, public infrastructure connectivity projects is something that you will take advantage of. Got that point. Mr. Shah, the way you're talking, it just feels like you want to stay in MMR. So would that be a safe assessment that you're not looking to diversify out of this region for now, given the potential that you have also on realization and growth? Would that be a fair assessment?
Yes, very much. Because we at Marathon treat Mumbai as almost 19 to 20 different micro markets. And if you look at MMR's sale data for the last year, almost 34% of all India sales happened in Mumbai MMR region. Almost 1.6 lakh units are sold in Mumbai MMR. And if you look at even the inventory, is only 20 months inventory remaining. So, with huge infrastructure push, if you recollect today morning only, government has announced a very big push of, transferring almost 80,000 acre to the MMRDA region to push 3 lakh crores of infra projects, where 300 kilometers of metro, multimodal, all entire coastal ring road, and all outskirts area to be very well within 45 to 50 minutes to the central Mumbai is something which has been the vision of the government. And with this in mind, I think nowhere in the world such kind of a huge infra push is happening. So we would really like to be taking advantage of all our land bank situated whether in Panvel, Dombivli, Bhandup. All these land bank will be much better utilized within the Mumbai. And we really feel Mumbai MMR is going to be growing faster than all other cities.
Well, Mr. Shah, we'll have to leave it at that. Thanks so much for joining in. A lot more questions on cash flow amongst others probably in our next chat. But hopefully, best of luck for your quarter 4 results. Look forward to our next conversation. But thank you for joining us today.
Thank you. Thank you very much for having me.
Well, that was Marathon Nextgen. A lot more, in the next 12 to 18 months, almost 4,000 crores of gross development value to watch out for. But viewers, that's the end of this time of KYC. Stay tuned. A lot more action on the other side right here on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal, on Saturday. How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New Year.
Nifty continues to sulk on the last trading day of the financial year, hovering above 22,400 as weakness persists in the market. Crude surge and geopolitical uncertainty looms on Dalal Street, with all the sectors trading under pressure. Rupee opened the week in green, recovering sharply in early trade after regulatory intervention aimed at curbing banks' currency exposure. The turnaround follows a directive issued by the Reserve Bank of India, which placed a cap of $100 million on the net open position that banks can hold overnight. Sugar stocks surge as rising oil prices make ethanol more profitable. Global supply tightens and investors rush into a rare pocket of strength in a shaky market. Coal India subsidiary Central Mine Planning and Design Institute lists at a discount of 7% to its IPO price on the stock market. Now, the initial share sale was subscribed almost 1.05 times. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take you through the market. Extreme pressure being seen on the Indian markets, and that's on account of two factors connected to each other. First, of course, no sign of de-escalation of the Middle Eastern tension, and what that means for India is always crude oil prices, higher prices of that really putting pressure on the Indian market because it'll have a wider economic consequence. And that's where Brent crude holding at $115 per barrel is very bad news for India. And that's also putting pressure and also making the FIIs nervous. So therefore, that pressure really showing on Nifty 50, 22,500 odd levels, struggling to stay at above 22,500 levels, 1.3% down in trade. But if we really look at all the sectoral indices, barring a handful with minor greens like metal index as well as oil and gas, it's most of the sectors under extreme pressure and selling pressure. When we take a look at the banking sector, that's really underperforming the key index by a huge margin, over 2.5% down in trade. And remember, the banking space, the sector and the index is a quasi-investment into the economic prowess and strength of the country. And therefore, banks losing steam and underperforming is showing the worry that the market has. IT sector too is lower in trade. PSU banks take a bigger hit. Nifty Energy is in the green by a small margin. All right, let's take it straight across to Sonam Srivastav, who's the founder, CEO at Right Research, joining in. Sonam, a pleasure, having you on NDTV Profit. It is a very weak day in trade, several uncertain factors, as well as crude really showing that pressure on the Indian market. How does one really tread in this kind of market condition?
Yeah, I think it definitely is a tricky situation right now with the geopolitical crisis in place and no solution coming out as of now. And, I think escalating news of maybe boots on the ground from the US or closing of the Strait of Hormuz and the related, the other state as well. I think that is putting pressure. That's what has led to escalation in the Brent prices. And the only resolution here would be some sort of ceasefire that comes in place. And I think we can see that today, therefore, you're seeing a movement in crude prices. Metals are also rising a little bit because of, supply shock from Iran in the aluminium trade. So I think I would suggest that, we have to be careful because, this situation is highly volatile. But yeah, I think given the level of correction that we are in, right, we might be near to the bottom. And if you are looking to allocate, I think we're getting a lot of requests from clients to top up or requests from clients to invest more. So I think it could be a great time for people to actually buy for the longer term, right?
What are people buying, Sonam?
So see, it's an interesting market where, you're seeing the flavor shift towards industrials, towards capital goods, automobiles, etc. So I think there are a few sectors that are in flavor right now. I think even in the financials, certain NBFCs are attractive. But like you said, the broader banking sector is seeing pressure, right? But yeah, I think the amount of fear that is there in the market right now is quite extreme. The sentiments have been hit quite a bit. But India's institutional flows, from the domestic market are robust. Valuations are very attractive right now. And yeah, I think it is actually the best time to invest for the longer term, right?
All right. So you're saying invest for the longer term, but Sonam, always the question is how much lower will it go, and am I really, taking that risk? But thank you so much for joining us with your insights on the market and investment strategy. All right, let's shift focus to one particular sector which has been fairly resilient to the war impact, and how does it really impact and also gain momentum when it comes to the green energy and other energy sectors, while we are grappling with the shortage of crude oil and other fuels from overseas. Let's take it across to our special guest exclusively joining on NDTV Profit to talk about this impact on the energy sector. We're talking about JSW Energy. Sharad Mahendra, who's the CEO of JSW Energy, joins us now on the show. Sharad, always a pleasure to speak to you and welcome you on NDTV Profit. My first question, even when the markets were showing extreme weakness, it was the energy sector, the green energy sector, which was showing a lot of resilience. As a sector leader, how do you see the entire energy space in power production really benefiting or being impacted by the current war situation?
Yeah, thank you. Thank you, Nisha. In fact, yes, very pertinent. What the observation is absolutely correct. What we have seen, the different modes of generation in the country, we have seen a very huge capacity growth addition in 2025, which is the pre-crisis period in the green energy space, which was more than the demand. But definitely with this West Asia crisis which is coming, there are huge pressures, especially on the certain gas-based power generation is coming under pressure. And also knowing that solar capacity addition, which has been a significant addition last year, takes care of the power demand during the daytime, and intermittently the wind energy also takes care during the daytime. But definitely the round-the-clock reliable power supply around the clock, it is the thermal coal-based generation which is becoming the prime generating factor, especially when there is a significant reduction we are seeing in the gas-based power generation. Just to support this with number, if you see the pre-crisis, when we talk of, say, maybe January, February, the share of coal-based generation was almost 70% in the total power generation in the country. But gas-based generation, which was ranging between 15 to 18%, in the month of March, the gas-based generation has come below 5% power generation, and that too only to the regulated sectors. Share of coal-based generation from 70% has increased to 76%. And Government of India, also the Ministry of Power, has issued the emergency clause of ensuring that all coal-based generating power plants are available 100% and generate the power at maximum load factor. So these are the positives for the sector, especially keeping in mind the extreme weather conditions which we have started witnessing as compared to last year. I think the peak power demand is expected to reach about 270 gigawatt during this summer.
All right. In fact, extremes of that summer is also something we are bracing for. Sharad, a point very rightly mentioned, while we are energy deficient on different pockets. But you mentioned that coal-powered, that is thermal assets, are now coming to more utilization. And thank God to that whole debate about renewable versus thermal power. And thank God that we did not give up on our thermal power projects. This is where we require that the most. But what about the coal price increase also? And what is the impact of that? Because as all the energy resources really escalate in prices, of course, the mark is also translating to also the coal prices. And that could put an impact on the coal-based plants as well?
Yes, to limited extent. Yes, but just speaking in continuation to what you said very rightly, that definitely we maintained our coal-based power generation and not just focusing on the green energy, because the sustainability part, energy transition, continues to remain focus of the country to reach 500 gigawatt of green energy by 2030. But now with this crisis and the way the demand growth and the industrial growth the country is witnessing, one of the fastest growing economy in the world of this size, I think the energy security also, Government of India has clearly stated that energy security is the focus. That is the reason that in next 7 to 8 years, almost 100 gigawatt of coal-based capacity, new capacity additions are going to take place. So one is this, and definitely in terms of the demand when we are seeing, this will be taken care by the thermal capacity addition, which is going to take place to ensure the reliable power supply.
Right. So reliable power supply, and we are bracing up for that also in extreme summer. But Sharad, when we talk about your company, of course, we are ending one quarter, and the last quarter, there was a three-pronged strategy which really impacted your company, and you have been consistently growing in. You're also increasing your thermal power projects and capacity there and pushing the generation over there. The second, you have bolstered your overall portfolio with acquisitions as well. And new organic renewable energy setup capacity is also really adding to the momentum. How do you see this whole mix really panning out? And also, are the kind of deliverables that we saw in the last quarter gone by with a huge generation capacity really pushing in the sales, is that going to be maintained in this particular year, this particular quarter as well? Or was that the peak that we saw in the last quarter?
Yes, very correct. See, one is that definitely we are growing in across the segment, whether it is coal-based, whether it is wind, solar, or hydro. There is a significant change in our thermal capacity increase. Is that we have moved earlier, maybe till few years back, we were totally dependent on imported coal. What you asked some time back, the our to impact to our business on change in the dynamics in the international coal supply or prices, we are insulated to a large extent because all is a long-term tied up power, and any impact on currency or any impact on the international coal price is a pass through. So we remain insulated from that, and whatever capacity, our share, which used to be till few years back 100% dependence on coal, now our total thermal capacity, more than 65% is domestic coal-based capacity. And we have not seen any change in the domestic coal prices because there is a huge availability in India of domestic coal. So that is a big positive, and our two of our big plants are next to the coal mines. So
Yes.
that gives the advantage to us. And also in terms of generation growth, what you said, yes, the capacities, like we started the year, this year, the year which is ending now, we started the year with about 10.8 gigawatt of capacity. End of December, what we have announced of almost 13.3 to 13.4 gigawatt of operational capacity, a mix of this 100% from 10.8 to 13.3, 13.4 is all the green energy capacity which we have added and commissioned. And
Yes.
more is getting commissioned during the this quarter.
Yes.
So this all will further add to the generation which you saw. And Q3 generation normally is not the best of the generation because the hydro is low. It is not the wind season.
Yes,
So
it's
going forward,
it's a
it's going to be
seasonally
further
weak one.
increasing. The generation growth will be further there significantly.
All right, Sharad, I got your point that, Q3 being seasonally weak still performed, so Q4 could be better than that, is what you're saying. But my final question and a quick answer to that, finance cost because of your expansion as well as also M&A has also increased on a YOY basis substantially. Also, your 3,000 crores preferential promoter, approval has also come. So that is going to add to some strength when it comes to the equity side. How are you going to use this? Because your debt to EBITDA is at 4.9x. Are you comfortable with that?
See, when we talk of debt to EBITDA, normally removing the construction work in progress, which definitely is going to give the margins and the revenue going forward, I think 4.9 is a very reasonable debt to EBITDA ratio against the industry benchmark of 5.5. So I think we are comfortable. And when we are in a high growth phase, and this is a 3:1 debt equity annuity business, debt equity. So definitely we will be maintaining within the industry benchmarks and our guardrails in terms of the debt to EBITDA. And growth we will continue to maintain. And as and when required, we will be raising the equity, for which we already have the board approval. And of course, this preferential shares, this process has already been completed. Part of the money we have received and we'll be receiving in due course as and when the company needs, but definitely maintaining the debt to EBITDA ratios for which the benchmarks are protected and maybe the rating agencies also are comfortable.
All right, Sharad, thanks so much for that clarity, because when expansion goes hand in hand with the key critical ratios as well, that needs to be maintained when it comes to net debt to EBITDA and net debt to equity as well. Thank you so much, Sharad, for giving us a lot of insights on the power sector and also the company's momentum towards greater generation of capacity. Thank you for joining us.
Thank you. Thank you very much.
All right, let's move on to another important news developments, and this comes in from the deal street. EPL and Indovida have struck a big ticket merger, and the deal created a scale packaging major. That is the aim, with a combined valuation of around $2 billion that we are talking about, bringing together the complementary product portfolios and also global manufacturing reach. In fact, I spoke to the management of EPL, Hemant Bakshi, the MD and global CEO of EPL, about the mega merger and also what it brings to the table for the company and value creation for the shareholders. Listen in. Hemant, what's the rationale of this big transaction? Because Indovida is not just into manufacturing of the packaging material, but also into trading of the raw material for manufacturing the packaging.
Yeah. So, Nisha, let me step back and talk to you about the rationale of this deal. So firstly, EPL is in a really good position right now. We've declared double-digit growth for the last 3 quarters consecutively. Our EBITDA has grown by 300 basis points. So we think we have strong foundations for the next phase of our journey. And what we have said, our vision is to create the emerging markets packaging leader for the consumer business. So that's what we want to build. And there are 3 important pillars to this strategy. The first is we want to go into more emerging markets. We then want to make sure that we can expand beyond tubes. Right now, our business for the last 40 years has been in tubes, but there's an opportunity beyond that. So we want to build new formats. And thirdly, we want to become innovation partners for the large and emerging brands in the emerging world. So those are our 3 key pillars. And now talking about the rationale of the deal, firstly, it gives us scale. Our revenue goes up from where we are to $1 billion, so it doubles. Our EBITDA doubles. And in addition to that, our valuation becomes $2 billion. Secondly, this is a growth accretive deal because this takes us to many more emerging markets. 90% of Indovida's business comes from emerging markets. Post the merger, 75% of our business will come from emerging markets. Here, the penetration is low. The growth opportunity is much higher. This deal is also margin accretive. As a result of this, both our EBIT and ROCE will improve. It's also good for our balance sheet because Indovida is totally cash debt-free. It's a net cash positive business. And after the merger, our debt to EBITDA ratio will drop to 0.25. Right. We've also identified significant revenue synergies in the range of about 35 to 50 million, which will come through expansion of our footprint, expansion of our formats. But I think what's also very interesting is that this comes at a very attractive valuation. The EPL business has been valued at 12.5 times EBITDA, which in share price terms would be 339 rupees. Our share price today is 205. So it's a 70% premium to that. We've also been valued at 55% premium to the Indovida business. So in some ways, this ticks all the boxes. It gets us into new markets. It allows us to go into a new format of rigid plastics, and it allows us to leverage the technologies which Indovida has to become an innovation partner. So that's really what we are doing here, Nisha. But to answer your specific question, Indovida as a business is only in packaging. It's part of the larger IVL group, which also manufactures the raw material. But Indovida, the company we are merging with, is only in packaging.
Right. Looking at the structure now, Hemant, Indorama Ventures will have a controlling stake and they'll be the co-promoters. So how will this really now, EPL as a business work? Because the controlling majority has also shifted hands as part of this particular transaction. And you also said the parentage is into the raw material manufacturing as well.
Yeah. So as a result of this merger, once the approval comes through, IVL will have 51.8% share. Blackstone will be diluted to 16.6%, but both of them will continue to be joint promoters of this business. Rest of the stake will be with the public. So that's how the structure is. And in some ways, we believe this is very, very good for us. Blackstone has been pivotal in our journey. We've gained enormously by their thought leadership and access to the very extensive network they have. And they remain very engaged with the business, and we'll continue to benefit from that as we go forward. IVL has been a large business, and I have now worked with them for the last 5 months, and I've been really impressed by their business acumen and what they've done. In the last few years, they've executed 50 acquisitions and integrated them successfully into their business. So that again is something which we will benefit from.
So in all, deal making that Hemant, I would see this as Blackstone's part exit at a much higher valuation that you command in the market, that is 70% higher. What is the rationale for ascribing such a premium in this transaction to the company?
Yeah, so the valuation has been done by independent experts. And I think they are valuing the strength of the EPL business. We've made a pivot recently towards beauty and cosmetics. So while oral remains very important, beauty and cosmetics has now become 40% of our business. This is a faster growing business and has much higher average selling price. And we are doing exceedingly well in this. Last quarter, we grew by 20%. We've been able to enter new markets. We entered Brazil about 3 years back, and the success in Brazil has been absolutely stunning. And more recently, we've gone into Thailand, which gives us access to Southeast Asia, which again is a fast-growing beauty and cosmetic market. So therefore, we've done geographical expansion, we've moved into new segments, and we continue to be seen as sustainability and innovation leaders in the market. So I believe this value has been ascribed because of the strength and robustness of our business model, which is showing significant growth.
Right. All right, so that was the management of EPL on that large transaction. Remember that Blackstone, which is the promoter of EPL, is now being diluted. It's going to be a co-promoter with Indorama Ventures. So the parentage of the company also changes with this particular transaction. With that, it's a wrap on this edition of Markets at 12. But keep it with NDTV Profit. Lots of news and views and market action on the other side. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually...
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Somit Sarkar standing at the NDTV Profit market pit with all the action. Somit, good afternoon. You know, a slight bit of a recovery that we are seeing in terms of markets as well, but what is that setup looking like right now? Is sustainability the key?
The setup continues to remain weak. This is for the second consecutive session where we are seeing a downtick that has come into the markets. And in the last two trading sessions, we have declined by close to around 800 points that we have seen, at least for the benchmark. And the intraday support is something that we have seen around the 22,450 level, while the intraday resistance continues to be around the 22,700 mark when it comes to the benchmark index. And today the lowest level was, in fact, Nifty's lowest level that we have seen since April 2025. So 11-month low is what we have seen, at least for the benchmark coming in trade. And given the fact that today is the last trading day of the financial year, for the entire financial year, Nifty is trading or has reported its worst financial year drop that we have seen since FY20. That is the COVID year drop that we had seen. And Nifty is down nearly 4% in FY26. Now, if you look at the sectoral indices in trade today, it's the metal and the PSU index that have been gaining in trade, while on the flip side, banking index has been under pressure, largely led by PSU banks that we have seen in trade. And when it comes to the metal index, the gains are largely led by aluminium players. Hindalco, Nalco, all have been gaining in trade, and that's pretty much the market setup that we are looking at. Benchmark support seen at 22,450. Yes, we have seen some kind of recovery from that level, but resistance continues to be around the 22,700 level for the benchmark.
Okay, you know, I mean, that's what it looks like so far as we speak. But let's quickly look at the watch list. Now, heavyweight banks are under focus and they've been seeing pressure on the back of RBI tightening the forex positions.
and capping the net off. Shriram Finance is down 17% in the last 1 month. Bajaj Finance, we've seen a large block that's happened. Auto OEMs are in focus as well, ahead of the auto sales numbers that will start trickling in day after tomorrow. Aluminium companies are in focus on the back of the price hikes that have come in as well. Moving from there on, if you see in terms of other names, you have Coal India. They've done a JV with DVC for power. Defence stocks, where DSA has approved a 2.38 lakh crore order. So some buzz happening there. IRB Infra is trading ex-record date in terms of the bonus. KNR Construction on the back of the order win. And you have Urban Company, which has now started InstaHelp, where they've crossed 1 million monthly bookings. IRB Infra is another one that we've already spoken about. Sugar stocks are in focus, where Brazil has cut the exports and India benefits. Blue Star has said that the key supplier issues are resolved, but there could be concerns on the back of the impact of the war. So that's the watch list. But let's go to Somit Sarkar to take the rapid fire from here on with Gaurav Sharma of Globe Capital. Over to you, Somit.
Well, thank you, Gaurav, for joining us. Firstly, on rapid fire, it's IRB Infra. Now, the company has set its record date for bonus, but the interesting part here is also that the fact that in 2026, the promoter has bought nearly 2.1 crore shares from open market. Any view on IRB Infra, Gaurav?
Hi, Samad. Good afternoon. Thanks for having me today. A stellar up move witnessed today on back of a good amount of volume. 2300 is pretty much likely. 23 levels are likely.
Okay, KNR Construction is another interesting counter. Order win of close to 1,734 crore rupees from NHI. How's the chart looking like for KNR Constructions?
A reversal uptake pretty much imminent here. One can take a stop at 114 and look for targets close to 126.
And when it comes to Urban Company, they have announced that their InstaHelp has crossed around 1 million mark, which means that the daily booking counter has moved to 27,500 as per analysts for the fourth quarter, as against 17,500 that we had seen in the previous quarter. A strong uptick that we are seeing on the InstaHelp counter. But on charts, any view on Urban Company? I know it's a recent listing, but any targets?
Good volume back buying was witnessed earlier as well. That somewhat subtle, and today again an uptick. I see it heading towards 125, 130 levels in the immediate near term.
Okay, when it comes to aluminium names like Nalco, Vedanta, Hindalco, all have been gaining in trade, and this is largely because the two Middle Eastern aluminium producers were hit, and Middle East accounts for nearly 9% of the total production. And even in the Asian markets, if you look at all the aluminium producers have been gaining in trade, and similar is something that we are seeing when it comes to the Indian market. On charts, is it a right time to enter these counters?
Firstly, a disclaimer, we have recommended it to our clients so they may have a positions. We are bullish on all the three of them: Hindalco, National Aluminium, Vedanta, in that order.
Okay, when it comes to Coal India, the recent news is that they have formed a JV, but the stock has been on an uptrend. On a YTD basis, it has gained more than 15% on the back of rising prices and higher demand that is expected to come in the summer. But on charts, does Coal India look like an attractive buy?
Certainly, it is looking impressive. Existing shareholders can maintain their position. Fresh longs also suggested immediate target of 475. Thereafter, it will head towards 510, 525 levels.
Last couple of names will be on NBFC, both part of the Nifty 50. Firstly, Shriram Finance, down around 17% in the last 1 month. But in a recent conference, management has reiterated its guidance. They are seeing growth to be anywhere around 18 to 20%. They're expecting their cost of funds to come down. And also they're expecting the credit cost to be lower the next 2 years. That's on the fundamental side. But on the technical side, how's Shriram Finance on charts?
It is looking very impressive. Again, a disclaimer, we have a buy rating on this stock, so our clients may be having position in it. Any decline from the current level is a good attractive buying opportunity. Even at current level, it is very impressive. Hold and buy is the recommendation.
And lastly, when it comes to Bajaj Finance, even that counter is down around 17% in the last 1 month. On Friday, Society General sold off some of its stake in the counter. But the recent concern is largely coming in from the fact that it has a higher exposure towards unsecured MSME. And that is one of the concerns why Bajaj Finance is down, at least on the fundamental side. But on charts, Bajaj Finance, how's it looking?
It is looking good. It has reasonably retraced to almost 50% as per the Fibonacci theory. Another stress towards 750 is likely. If that happens, a very firm buying opportunity. Hold and add.
Back to you, Viral.
Okay, thank you so much for that. so far in terms of the watch list. But before we head across to the stocks which are trending on Google, let's quickly address the flashes at the bottom of your screens where the new ECMS scheme has been announced. The production target is pretty strong, where they've said that they've achieved production of 4.51 lakh crores under the ECMS scheme. But I would want to talk about the beneficiaries. First up, we have a Dixon Technologies, which is in focus. Now let's pull up that one and see what Dixon is doing in trade, because the quantum is something which is interesting for a Dixon. I think it's 1,000 odd crores that you're watching out for in terms of Dixon Technologies. Sirma Strategic Electronics, which is again Sirma. They will be investing around 588 crores for laminates as well as flexible PCBs. That's what you should be watching out for. IFB Industries is another one that will be in focus as well, because they have also committed close to 40 crores for parts of capital goods under the ECMS scheme so far. So overall, if you're looking at close to 3 to 4 companies which are in focus. IFB, Sirma, Permanent Magnets is another one, which is a listed entity as well, which has been, which will be investing around 62 odd crores for relays. So far, 4 companies that are in focus on the back of the ECMS scheme. Very quickly, Gaurav, any views from a Dixon to a Sirma to IFB and Permanent Magnets, 4 stocks that we would want to talk about?
We will still refrain from taking position in Dixon. It will still take some longer time. But as far as Sirma is concerned, among the 3 mentioned stocks that we track, this stock looks attractive at the current juncture. I don't see much of a slide coming in. 750, 740 is a very important strong support zone. So any further decline would be a good adding up opportunity. Take a stop at 700 around that levels and go long for targets close to 850 and beyond.
Okay, so that's with regards to where the ECM scheme goes. But let's focus on stocks which are trending on Google currently quickly and see what trends are indicated from that and as well. If you see in terms of stocks that are trending, IRB Infra, HEG, interesting, CMPDI is the new listing, Acme Solar and Bharat Forge. A quick one in terms of IRB Infra as well as HEG, because HEG Graphite have been on an uptrend since the last couple of trading sessions. Gaurav, anything that you're witnessing right now in terms of strategy?
I think IRB is looking quite attractive at current juncture. 2300 is the immediate upside target. If that is taken out, this stock will quickly head towards 24 and much higher levels. Apart from this, even HEG that you had mentioned is also looking good. It has witnessed a dip. This is a good buying opportunity after a steep buying witness in the previous trading session. Therefore, this can also be considered as a trading position. Take a stop at 520 and look for targets close to 600 and beyond.
So that's with regards to stocks which are trending. But thank you so much, Gaurav, for joining in. Always a pleasure to speak to you. But moving on to our next story, which is trending, which is the Reserve Bank of India on Friday issued a directive asking banks to limit their net open positions in the onshore derivative market, deliverable market, to $100 million each. In fact, this move is aimed at curbing the depreciation of the Indian rupee. Bankers, however, are worried that this move will dent their Q4 profitability because this will actually hit their treasury income to some extent. We're talking about 3,500 to 4,000 odd crores, which is the overall impact to the treasury income of all of these banks put together. And apart from this, if you see in terms of the rupee movement as well, if you just pull up the intraday chart of INR, that will tell you we've bounced back to those levels of 94.69. The idea was to, get further easing to the tune of a rupee, but the bounce back has come back yet again. Piyush Shukla joins us to tell us what's happening. Piyush, over to you.
Yeah, thank you, Hiril. We have heard that banks have sought a 3-month timeline for this rule to be implemented. Most of these tenures of these securities is within the 1 to 3 month period, and that is why they're saying give us 3 months to wind down our positions. And also they have mentioned how this will dent their profitability, Bankers are asking the RBI, please, that you should make this directive applicable from a prospective basis, not a retrospective basis as well. They did meet with RBI official, the large bank treasury officials met with RBI on Saturday, conveying some of these concerns. Now, we have learned from sources that large banks have upwards of $250 to $300 million of exposures in such market, and now they will have to wind down their positions before April 10 as per the RBI directive. Previously, the RBI had allowed banks to park 25% of their overall Tier 1 capital in such markets. RBI essentially introduced these directive to curb the rupee, which fell to the level of 94.84 on Friday. As Hiral mentioned, the rupee has recovered today. Back to you, Hiral.
Much for that, for getting us what it could mean. Let's get in Sachin Jasuja from Centricity Wealth Tech. Sachin, welcome to the show. My question to you is, we're talking about a hit to the bank's treasury income in the fourth quarter. How would you look at this kind of a move? Is this a short-term, problem, but longer term? Any dip in terms of any of these major banks could be a buying opportunity?
Yeah, if you talk about the treasury income perspective, I think then if the stocks are down, it creates a buying opportunity from that perspective, because the market will always look at that what kind of credit costs these companies are having, how they are growing in terms of credit growth, etc. And this looks like, there has always been a free market in that sense, but RBI has to come up to bring these norms to curb the speculation specifically, right? So from that perspective, welcome move from RBI, and because it affects only 1 quarter treasury income, so I don't think that it impacts materially to their valuations, etc. So it creates a buying opportunity for most of the larger banks like ICICI, HDFC, or maybe SBI, who will be affected most, where they have got the exposure above $100 million.
Sugar stock is something that have been buzzing in trade. All the counters are up over 5% in trade. Let's get in Jasmeet to understand why we are seeing this kind of a move, Jasmeet.
Well, thank you for that, Soumit. If you look at overall sugar as a sector, we see Brazil being the largest producer of sugar, and those Brazil companies are cutting down the production of sugar in the coming season of April. This is because they want to convert more of sugar into ethanol as the energy demand increases. So given the reduced demand for overall sugar and reduced production by Brazil, it would lead to Indian price rising in the future. So that's why the sugar is buzzing in trade. Now something like Dwarkesh sugar is up 39%, while Mawana sugar is up 8% in today's trade, given the increased demand for the sugar going ahead, as Brazil will cut down the overall production in the coming season.
Right. Well, that's all you had to know about sugar. But Sachin, how are you looking at sugar counters? Any stock that looks attractive at the current valuations?
Sugar has been a cyclical, play always, but now, given that, ethanol has become a very critical play, and where the, blending has gone up, now it is 20%, maybe in coming years it will go up, even if we cap it here. So from both the perspective, now it is slightly diversified. So the play has become better as compared to the past, but still, I think the better play will be engineering companies who are playing with this ethanol play, the companies like Paraj Industries, rather than the pure play on sugar side.
So with regards to where sugar companies go, but let's talk about India's defense sector. A big boost coming in on the back of the 2.89 lakh crore outlay that has been approved by the DAC. Varsha standing by to tell us all the beneficiaries. Varsha, over to you.
Well, thank you so much for that. The 2.38 lakh crore approval, this spans across or covers Army, you have Air Force and Coast Guard. And also, if you see, a government has given 2 small contracts to missile systems and, of course, aircraft servicing with Boeing India Defence Limited. Talking about why is government spending this much or why the money is being spent, of course, because India wants stronger security, modern weapons and less dependence on imports. Talking about, where this money will be utilized or where this money will go, let's start with Army. Under Army, India will require air defense system to stop enemy missiles, then tank ammunition, then Dhanush guns, of course, the 300 units are being needed, then military communication systems and surveillance drones are some of the areas where money will be utilized when it comes to army. Talking about Air Force, a 60 transport aircraft will be needed, that is 1 lakh crore project. Then you have S-400 missile systems for long range defense, you have combat drones. So these are the areas when it comes to Air Force where the money will be utilized. Talking about Coast Guard, air cushion vehicles is one of the area where money will be utilized. Lastly, if I were to talk about which companies will benefit, because that's what is investors interested into. You have Bharat Electronics Limited, which is present in electronics and radar system, will see benefit out of this. You have Bharat Dynamics Limited also, which is present in missiles, will see the growth prospect from here. Even L&T, if you see, will see benefit considering the defense systems that they have, and also Ashok Leyland, which manufactures your army vehicles, will also be in focus. So these are some of the companies which will benefit from 2.38 lakh crore approval by DAC.
Okay, thank you so much for that. In fact, a couple of your shipping companies also are in focus along with this, like a Garden Reach, which is seeing some smart moves in today's day of trade. Sachin, any view when it comes to the defense players, because the outlay is pretty strong? The only concern that everyone has is with regards to execution, because order books are absolutely mind-blowing. What would you advise investors to do?
I think absolutely, Hiral, you're right. Execution is the key in this segment. Though we have been improving in that front, but yes, going forward, what we see, the kind of new companies which have emerged in defense space, data patterns, even, editor just discussed about, Bharat Electronics, where there's a lot of push on the electronics, radar size, jamming, right? So the new segments where the warfares now are quite designed first, into that segment, that initially on the aerospace side, you have to be really strong on the radar and communication and electronics. So from that perspective, all these companies, data patterns, MTAR and BL will have a better edge as compared to the other defense companies.
Well, given the rising temperature, AC companies continue to remain in focus. Now, we spoke to the management of Blue Star to understand the inventory level and how the price hikes have been received by customers. Listen into what their management have to say.
Is there a worry on the market sentiment? I mean, thus far, at least the brokerage notes that have come out are saying that or investors who go and visit on-ground channel checks are saying that the consumer sentiment has not been hit very badly thus far. Do you differ there?
Invariably, it will happen. Today, they are not seeing the pressure, basically because inventory that was built at old prices are there. The price hike is to the tune of around 13%. See, 5% comes out of energy label change, around 8% due to input cost material, excluding plastic. And the styrene, polystyrene prices are going up now. So let us imagine that is not necessary at this point of time. So the moment they see the prices are higher, and it all depends on when this Middle East crisis will end.
Mr. Tyagarajan, I just want to get a sense of the timelines, right? Because the last time we had spoken, you had said, and this is before the conflict, so you had said that you were looking forward to a build-up of certain demand from the dealerships because prices were expected to go up. So I'm trying to understand the timeline of events from that point to this point. The prices have increased, and has it only been that 13%, or is that the latest round that is yet to take place?
No, December 2025, energy label change is going to commence from 1st January 2026. We are allowed to bill to the dealers, and the dealers can buy that product and sell till that inventory is lost. So therefore, the dealers end up buying. That price increase due to energy label change, like to like. Strictly speaking, let us say old 5-star is becoming a 3-star at this point of time, for argument's sake. The price remains the same only, but there is a new 5-star now with a higher energy efficiency, which will cost more.
So that's the management in terms of pay. Blue Star talking about how the summer could potentially be difficult as well. The stock down nearly 3.5%. Such in quick view when it comes to AC or, cooling companies, because the summer has not started as much, the way everyone had intended it to be, but there is still hope.
Yes, there is hope. Last summer was not good, so it impacted almost all the companies like Blue Star, Voltas, PG Electroplast. But yes, there are hopes that this time it will be better. And, the companies are also changing their models, getting more energy efficient. And even though the inventory is taken care of, till now, that's what we hope. And going forward, the season should be good. But yes, still, I think what investor can do, that they can always go for the companies where the AC is a bigger play, but it's not the only play. Where the companies like EMS companies who are building up ACs also, washing machines also, and there are other electronic components also. So it gives a diversification from that perspective. So from that perspective, PG Electroplast, Dixon kind of play can be more resilient and diversified play rather than the pure play on the AC side.
Okay, so that's with regards to our AC manufacturers. But thank you, Sachin, so much for joining in. Always a pleasure to speak to you as well. But the key from here on is going to be, how is April expected to look like in terms of markets? How have they been historically? And, this time probably maybe slightly different. But let's understand the seasonality in the month of April. Somit is with us to take us through that. Somit, over to you.
Yes, April month has always been good for the markets. At least that is what the seasonality is indicating to us. Now, what we have done is we have analyzed the last 10 years of April month, and what we have seen is that Nifty has managed to close in green nearly 8 times in the month of April, and the average returns, if you look at, is positive 3.1% that we have seen for the benchmark. Now, positive returns of more than 3% is something that we have seen in 2018, 2020, 2023 and 2025. And the most interesting part here is the fact that the highest return that we have seen in the month of April is in 2018 and 2020, where index gained 6 to 15%. And in both these instances, in the month of March, we had seen a weak month and a weak closing. Even in this time, in the month of March, we are down around 9%. So we can expect similar trend that could happen in April 2026 as well. Now, if you look at the mid-cap and the small-cap index, both the indices have closed in green. 9 times is what mid-cap index has closed in green, while the small-cap index has closed in green 8 times, while the average returns are close to 4.8 to 5.6% for both the mid-cap and the small-cap indices. Now, if you look at the sectoral indices, it's the Nifty Auto Index, which has closed in green maximum number of times, 9 out of 10, average returns 5.9%. And when it comes to FMCG, energy and bank, all these 3 indices have closed in green anywhere between 7 to 8 times, while the average returns are anywhere between 2.7 to 4.7% for these indices. Now, apart from that, the other indices, if you look at metal, pharma, real estate and IT. Now, out of this, IT is the worst performer. Down, gained only 3 out of the last 10 Aprils, while the average returns is negative 0.4%, while the other indices have managed to close in green 7 times, while average returns are anywhere between 5.6 to 6.1%. Now comes the most interesting part. These are the stocks that have closed in green more than 8 times, and the average returns are also more than 8% that we have seen. JSW Steel, Aurobindo Pharma, SRF, Godrej Properties and M&M tops the list. These are the top 5 stocks that have given the highest return in the month of April, on an average anywhere between 9 to 12%. Another interesting counter which is not part of this list is Divi's Lab. Now, that is one stock that has closed in green in all the months of April in the last 10 years, and average returns is more than 8%. Now, on the flip side, there are 2 stocks that have closed in red 7 times, and average declines is more than around 2%. Alchem Labs, average returns of negative 2%, and Infosys is another counter which has declined around 7 times in the month of April, and average returns has been negative 3% in the month of April.
Okay, so that's with regards to what the historical data is suggesting for the month of April as well. Thank you, Somit, for that. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Somit, the team that put the show together, and myself. Lots more lined up on the other side. In fact, this is going to be a special discussion on the RBI move when it comes to the Indian rupee and the impact it could have on the banks, on the economy as a whole. And Nisha Poddar will be taking this forward. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chunk.
Hello and welcome to NDTV Profit. I'm Nisha Podar. Let's dive into the biggest story of the day. The Reserve Bank of India on Friday issued a fresh directive aimed at arresting the sharp slide in the rupee, asking the banks to cap their net open position in the onshore deliverable market at $100 million at the end of each business day. Now, this move comes after the rupee fell to an all-time low of 94 rupees 84 paise against the US dollar. That was on March 27th, which reflected sustained pressure from global risk aversion. Now, dollar strength and speculative positioning in the currency market by tightening limits on banks' open forex positions. That's the move the RBI is seeking to curb the excessive dollar bets, reduce speculative activity, and also ease the pressure on the domestic currency. Now, this is also the first such directive from the central bank in nearly 15 years, underlining the urgency of this situation. To discuss more about this particular aspect and how it impacts not just rupee economy as well as the bank profitability, we are joined by a whole host of experts right here. Let me welcome on the show Dinesh Khara, former chairman, State Bank of India, Amit Pabari, who's the managing director, CR Forex Advisors, Kunal Sodhani, who's the head of treasury at Shinhan Bank, and we also have with us Teresa John, who's the deputy head of research and lead economist Nirmal Bang. But before we head to our guest, let's also understand this particular matter. If we have our colleague who will be joining us to really explain what this move really means. But my first question to you, Dinesh Khara, this particular move is one of the most important moves that is coming in from Reserve Bank of India, where RBI has been stepping in, and now it wants the banks also to cooperate in their actions to avert rupee fall. How do you view this?
No, I think what we have been observing is that ever since, it was possible to... Hello, am I audible? Hello?
Yes, sir.
Yeah, so, ever since it was possible to get into the overseas market, into the NDA market also, to hedge the positions. So there was, frequent move in terms of open positions in the domestic market and also covering in the overseas market. So this move essentially is meant for the onshore market, and in the onshore market, they have restricted the open position. Earlier, some of the banks had a tendency of having some percentage of their capital allocated for managing this kind of a currency movement. So now RBI has said that it should be confined only to 100 million. So essentially, they are trying to curb the speculative tendencies on the currency, which was essentially leading to the currency falling. We have seen that in the current financial year, rupee has already depreciated almost about 11%. And ever since the war has broke out, it has actually depreciated by about 4%, which is quite substantial. In the past, we have seen that generally, on an average, rupee used to depreciate about 3 to 4% a year. But as against that, within a month, we have seen this kind of a tendency. So I think essentially to ensure that, if at all the dollars are available, then it should be brought to market and it should actually, calm down the market. This is what the intention is. And of course, I think the broad message is that not to get into the speculative trends at this point of time. When, as it is, we are having a pressure on the foreign currency. When it comes to oil import, we have already seen the crude prices have gone up. When it comes to, remittances, there seems to be some kind of pressure. And when it comes to, the FPI, we have seen the kind of trends. So in this kind of a situation, just to ensure that, external factors should not influence the movement of the rupee dollar parity, that is why it has been done. I think in the overall interest of the economy, this is a very welcome step. And it will go, at least for the time being, it will help in terms of keeping the markets calm for the time being. Yes, of course, there is a challenge in terms of MTM, and it will probably have an impact on some of the banks who are holding significant open positions. They'll have to probably wind down their positions, and which lead to some kind of a losses also. but that I believe is a temporary phenomenon. But in the overall larger interest of the economic interest, perhaps it was warranted. And we have seen that way back in 2011 also, similar kind of currency volatility was seen. And to curb that at that point of time, RBI had come out with a regulation saying that a certain percentage of the capital has to be earmarked for allowing such open positions. But yes, of course, now it's in absolute term. So I think it is essentially to ensure that the volatility of the currency should be curbed.
That's right. So Dinesh Khara, what you mentioned, several of those aspects there. And of course, these are unusual times. This is a global war situation. And therefore, RBI is taking some of these measures which are rarely taken by the Reserve Bank to avert the rupee fall. Let's ask the economist also, Teresa John, how do you make of this particular move and the way the FPIs are really taking out money from the country? Both of them really offsetting one another, because we did see a little recovery in rupee today, but then it is again falling with the pressure built on the market, the FII is pulling out, and also as dollar surges, rupee falls further. So how do you see this particular situation impacting the rupee fall?
Well, I think, yeah, please. I'm sorry I missed out.
So I think we have a double whammy situation. You have pressure because on the rupee because of higher oil prices. You have an increasing trade deficit. So that is one aspect. And as you mentioned, on the capital account side, you have substantial FPI selling as well. So both on the current account and capital account, you have pressures. And this is probably one among the few years where you will actually end up with a BOP deficit, and potentially that could move into FY27 as well. So fundamentally, the rupee should trade with a weakening bias, and I think what RBI has done is appropriate, given that I mean there is a lot of speculative attack on the rupee, and by curbing the open positions, you can actually, at least to some extent, curtail those speculative positions. I mean, it could be a hit on banks' profitability because of MTM losses, but at least in the interest of the broader economy, this should help.
It should help overall, and of course the pressure is building. So Amit Pabari, as a forex expert, how do you see the transactions, and how much of the year-end transaction pressure and account settlement pressure has also come into the mix to put pressure on the rupee?
I think the kind of move what RBI have taken is fantastic. They have taken a move called Dhurandhar kind of a move, or telling to the market that main hu na. So basically, in the short term, it is definitely a positive step, and because of which we are expecting we can get some amount of appreciation in the dollar rupee pair. Saying that the overall trend will depend on geopolitical tension. If the geopolitical tension persists, oil continues to go higher, FII will continue to take out money, and trade deficit will increase. So structurally, these are the major things which is going to put pressure on the rupee. But in the short term, we can expect rupee to get stronger towards 93.5 kind of a level, and any dips will be bought by importer, because structurally, till the time issues are there, importer will go and buy, and probably exporter will stay light on the hedging side.
Right. Amit, thanks so much for putting that into perspective. But let's ask one head of Treasury, Kunal Sodhani of Shinhan Bank. Kunal, so you have to really execute what RBI has stated. How executable is it, and what will be the impact on the banking sector?
I think I'll just move 2 steps back. First, obviously, it's important to understand that why this move has come. If we talk about the forex reserves India has, it's around $698 billion, out of which the gold reserves are around $120 billion. Roughly, the RBI net short position in forwards, as per my personal estimate, is around $100 billion. So the net impact, the FCA, I mean, the net position is around $470 billion roughly, which means it is less than 9 months of import cover. Which possibly during the crisis where the geopolitical tensions are still underway between US, Israel and Iran, that's a concern from the FX reserves perspective, where the net position of forward position is already short. Thus, they cannot add more short positions because it will just spiral that effect more furthermore. Secondly, also the other reason I understand is the liquidity conditions being March end. If we talk about the March end, the liquidity because of GST, advanced tax outflows, and even the book closing of corporates, the liquidity is very thin for INR. So if further selling happens into the market by the Reserve Bank, it will further create deficit into the liquidity, INR liquidity, which is again a concern. So I think these two were the major reasons why possibly RBI might have thought of the NOOP limit of $100 million, on the onshore market. Yes, it did create some appreciation in the morning where the rupee opened around 93.59. The NDF was actually showing 90 to 96 levels also, but we did open slightly higher at 95, 93.59 levels. The estimation as per us is around $25 to $30 billion of excess positions, which overall banks are holding. On an average, a bank is having around $300 to $400 million of position. Yes, there can be some M2M and some losses which can be taken by the banks. But I believe this is a temporary measure. I would not say this as a permanent measure of improving the rupee appreciation, but a very right measure considering the challenges which the central bank is facing at this point in time. Lastly, I want to just add that it's not only about the measures which are taken. It has been also countered by the 10-year US Treasury yields, because if we see the Fed is now not looking forward for any rate cuts. When that is not happening, I think the flows which are in the Asian countries are moving off the market, which means they are moving out in terms of the FPI outflows. So it's not only the geopolitical reasons which we are talking about, but also the US Treasury yields which have been rising. So thus we have seen outflows to the tune of $13.3 billion from equities already, which were last seen in 2020 during COVID time in March itself, around $14 to $15 billion. So bond yields, yes, it's important to watch out. Liquidity, very important to watch out. Couple of more measures can be expected, as my personal opinion states, is some FCNRB or NRI inflow related incentive systems can be further added and thought of maybe, which can further assist and support rupee also.
All right, many important points there, and the measures don't stop here. That's also something that the experts are pointing out. Thanks, Kunal, for that. But Dinesh Khara, the banks are going to meet the RBI with their, requests for giving a longer time period for really executing this ceiling. How do you see the situation from just the bank's profitability and bank's balance sheet perspective?
I think RBI as a regulator has a responsibility to ensure that the system should remain stable. So when it comes to banks' profitability, etc., that would be an impact for the time being. And in any case, we have to see these kind of actions in the larger context of how does it serve the economy. So I think on that particular point, my view is that perhaps RBI will be focusing more on the system stability than to look at the individual bank's profitability.
That's right. At the current moment, the focus is very different because our purchasing power has become so weak in the global market, and with crude oil prices also increasing. For us, the amount of rupee that we have to really spend to get that crude oil is just getting too high, and overall impact on the economy as well. But Amit, when we talk about this ceiling coming into effect, what are the other aspects which get impacted besides also averting the rupee fall? Do you think that the volatility is going to increase because of the semantics and the movement and the offshore overbearing nature on rupee's movement?
Definitely, after 10th of April, as the banks have been limited to operate, we can see a lot of volatility, and offshore market is again going to determine the value of rupee on the onshore. Before 2020, that was the case. That is why RBI bought this regulation. As again they have moved back to the old regulation, we are expecting volatility is going to go up. Second, gap up, gap down chances will increase. Third, hedging cost across the tenure is going to increase. So in the long term, it is a negative aspect. In the short term, it is going to support the rupee. But the idea is that when the things were good, RBI allowed banks to go and hedge or take a position in the offshore. When the things are difficult, they have come back and said, let me protect the situation currently and take a corrective action so that speculation position do not build up. My sense is that they are going to come up with many more steps like that to curtail the volatility. So it's a situation where you trade off. What is more important? Whether it is important to curb the volatility at this point of time, or whether it is important to look into banks' profit at this point of time, or whether you want to increase the hedging cost. So RBI have taken a bold step stating that currently I want to reduce the volatility and I'm not going to allow rupee to weaken drastically what has happened in 2008, 2013 kind of a scenario.
Right, Teresa, John, given this scenario, what are the key figures for rupee levels that you're really penciling in the short term and medium term because of this particular move?
So over the short term, we think the rupee could depreciate if the situation persists. So it could cross 95 to the dollar. But fundamentally, I think, the rupee has seen a sharp depreciation. So once the situation settles, we think we could see a pullback. So the average for FY27 for us would be closer to 93.8.
All right. So uncomfortable level, Dinesh Khara, would be 95 to the dollar. And that's where looks like RBI has really stepped in because they were not penciling in such a steep fall. What is it that you're expecting from the RBI governor in the upcoming monetary policy? Looks like the entire focus is going to be on the economy as well as rupee this time around.
Yeah, I fully agree with you. And I think when it comes to interest rate, etc., the stance which has been taken, because RBI would be equally concerned about the growth potential. We have already seen that CA has already gone in on record saying that they might be required to be readjusted towards the lower side. So I think the overall impact of the evolving global scenario will actually show up, and that will be something which RBI would be very watchful when it comes to the next policy meeting is concerned.
All right. In fact, on the other hand, the monetary policy move and the stance could also be changed. I'll come to you on that later. But Kunal, at the particular moment, what is on top of minds of the bankers to avert a situation in which they are impacted too much? And how are things going to develop when they meet with the RBI? Give us a sense on what all requests are getting placed and what all, negotiations or at least the requests with the RBI could be.
I think the requests were already made by the large banks with respect to the extension of timing, which is till 10th April. But the banks have been supportive. The bank appreciates the RBI's vision and the measures. And I think the banks are in synchronization with supporting the central bank. So I don't think that's a thought that banks are not ready to absorb losses. Obviously, the concern remains because of the year end also and the quarter end also. So thus, in terms of profitability of the bank, the concern was from that perspective. But I don't think there is no missync. Everyone remains in sync in order to support rupee. One thing which I just wanted to add again here is, if you might have observed the oil prices, they have moved from almost around $59 per barrel to $119 billion per barrel. But the end use, the retailers have been not charged any hike in terms of the petrol or diesel prices. Initially, the OMCs, government and retailers are the three parties who are involved. The OMC started bearing all the brunt on themselves. Later, they stated the government, and then the government cut the excise duties, which again supported the OMCs to, share some losses. The last leg remains retail. So in case if this war continues to persist for a couple of more days also, I think it will be passed on to the retailer, which means the inflationary risk starts going much higher once again, where the monetary policy decision making remains much more important to watch out, particularly from the liquidity perspective. Maybe
Yes.
addition of more VRRs, buy-sell swaps by RBI, or maybe some other measures which they may look forward for. So I think the last leg is still left, which can impact the inflation to some extent, at least to 1.5%. That's as per my estimates.
That's right. These are very pertinent points. Trisha, John, very quickly, the overall impact of the rupee movement, oil movement, and what could be weighing on top of RBI's mind in the monetary policy, in your view?
I think RBI will be in wait and watch mode at this policy because we are still only a month into the war. Definitely, I don't think there'll be a change in stance or a change in rates. But what they will commit to is continued provision of liquidity because that will be the most crucial point, at least at this point in time. And then they will wait and watch how things pan out and at least on the rate and the stance, I think at least in the next policy.
Right, all eyes would be on the next policy. Dinesh Khara, last word to you. Summing up, the most important aspect is that a lot of foreign brokerages have also reduced their expectation of the GDP growth of India. A lot of investors have written off India in terms of the worst affected market because of crude oil prices going up. The crude prices are impacting various sectors in terms of transportation cost as well as fuel and raw material cost, increasing the inflation. So when growth and inflation are at these levels and liquidity is also a concern, what are you expecting from the Reserve Bank of India, and from your vantage position as a banker, how do you see this particular bit developing and impacting the economy?
Well, I think these are the trying times for the economy, and also when it comes to RBI has been very, very pragmatic and mindful of the ground level realities, with a very clear focus in terms of supporting the growth. But yes, of course, if at all inflation is very clearly seen on the horizon, then perhaps they cannot ignore these risks also. So I think for the time being, I expect that as far as RBI is concerned, I expect a pause movement from them. I am really unable to comment about what will be the outlook, but nevertheless, my sense is that as far as the policy rates are concerned, there should be a pause. That's what my sense is.
All right, there should be a pause. That's the verdict coming in from Dinesh Khara. Of course, too early, all the experts say. But Amit, one quick question to you. As the forex movement, how do you see the rupee really averting further fall? Because today we saw enough amount of volatility, but the market pressure is really weighing heavy despite RBI's new mandate coming in for the banks. How do you see in the next few days rupee movement from your channel checks and from the trading perspective?
What we are suggesting to our clients is that between 94.5 to 95.20 kind of a level, they should participate and increase their hedge ratio. The entire theme is that if RBI is very clear, they want to protect the overall rupee weakness. So there are high chances the rupee might get stronger and move towards 93.5 kind of a level. And if the war gets stopped, probably we can see 93 or 92.80 kind of a level. So basically, if the entire move from 90 to 95 has happened, so now 95 is going to act as a very, very strong resistance, and probably this is the best time where an exporter should increase their hedge ratio, an importer should stay put probably towards 93.50 or 93 kind of a level. They should start getting longer. So the idea is do not get panic on the buying side, get activate on the selling side. Technically, equity markets are at bottom. FII exited the market when rupee was at 83. So now rupee is at 95. So probably, once things get settled down, we might see good amount of interest coming from the FII side also. So FII coming back, war getting stopped, crude oil price getting lower,
yes,
RBI protecting, these are all positive
All right, and that is also utopian to think of right now, Amit, but I like your confidence and positivity on this. But we have tried to cover all corners at this particular point, and yes, rupee has recovered because of RBI's action. The market pressure, FII pressure still remains. Thank you so much, gentlemen, lady, for joining us on this discussion with all your perspectives. Thank you, Dinesh Khara, Teresa John, Amit Pabari, as well as Kunal Sodhani for joining in. So that was the full perspective coming in on RBI's action on rupee levels, as well as what to watch out for in the next monetary policy. Keep it with NDTV Profit. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers with me, Varsha. Let's see what we're gonna focus on today's show. Well, we'll be speaking to the management of Interact Building. Now, this is on the back of approval of QIP. Also, we'll be talking about KNR Constructions. Now, the stock is in focus on the back of order win of around 1700 odd crore. This is from NHAI. We'll be also, speaking about why the sugar companies are, buzzing today, because ethanol push may cut Brazil's sugar export by 14.2% in 2026 and 27. So this is, a benefit to the Indian sugar companies. So we'll be talking about Dwarike Sugar, Mawana Sugar and Sri Renuka Sugar. All the stocks, if you see in trade, are up today. Well, we'll also talk about Ganesha Ecosphere. The stock is up. This is on the back of volumes. The volumes are at 3 times of its 30-day average. We'll be speaking about Shivalik Bimetal as well. For the same reasons, if you see, the stock is buzzing on the back of volumes. Well, now let's focus on markets. If you see, Nifty is down almost 1.53%. Well, talking about the sectorial indices, all sectors are in red. Talking about, Nifty Bank is down almost 1.5%. Nifty IT is down almost 1%. Nifty Midcap 100 is down almost 2%. Talking about small cap, let's see which are the stocks which are in focus when it comes to small cap. Well, on the gainer side, you have all the sugar stocks, as I was saying, are buzzing in trade today. You have Hilton Metal, which is, the stock is up on the back of volumes. Volumes are trading at 8 times of its 30-day average. There you go. The stock is up almost 20% in trade. You have KNR Construction. Again, the stock is moving on the back of order win. Stock is up almost 9% in trade today. Ganesha Ecosphere volumes are at 3x. Suven Life is also, buzzing. A lot of things can happen in this company. Do keep a watch on Suven Life as well. On the losers side, though, you have Vertos ADV, you have FCS Software, Bhagiratha Chemicals, and Royal Orchid, which are under pressure as of today. Well, moving on. Interact Building Solution is one stock which is in focus. Now, this is on the back of approved QIP. So, company has approved QIP to raise capital. The company is doing a lot when it comes to the capacity expansion. We'll also speak about that. But to speak about more on QIP, what lies ahead for next 2 to 3 years and what are the growth triggers, we are here joined by Mr. Arvind Nanda, who is MD at Interact Building Products. Well, Mr. Nanda, welcome at NDTV Profit. Always pleasure to have you. Let me start with the QIP that has been approved. Just wanted to understand if you could highlight us with the details. What is the amount that you're going to raise and what is the utilization of funds going forward?
Thank you. We have been seeing that there has been a lot of uptake in business, especially in the demand for heavier structures going forward, which we were doing very low business in. So companies which are setting up high-rise buildings, data centers, steel plants, power stations, they are requiring a lot of heavy structure, pre-engineered structures to be manufactured and delivered to them. That was one area that we were not really very prominent in. So we decided to set up a new plant last year. We started that in October, November last year. And the first line will be in production by June, July of this year, now next quarter. So while we were at it, we realized that the demand is currently picking up at a very great pace. So we took approval of the board for a QIP so that we could prepone that capital expenditure, especially in the heavy structure. Going forward, rather than wait another year before starting it, we decided that we will start it now only and have it in production by November, December, or latest by January, instead of 15 months later as we had earlier planned. So that is the main reason for raising the QIP, for preponing the capex, where we are seeing a lot of traction right now. A lot of demand is happening. And pre-engineered building, capital expenditure is going on as planned. Gujarat plant will come in stream by June, July also in production. And the second phase of Gujarat plant is planned between 8 to 10 months after that. So that is still on plan. So our growth plans for pre-engineered building remain as they were, targeting about 2,500 crores for 27-28 sales target. With margins remaining very similar. But heavy structures, we are a little bullish on because 2 reasons. Number one, there's a big demand coming up. And also our side, we are really doing really nothing much. So we can do a lot of addition to that for our company.
Right. Mr. Nanda, talking about your Gujarat plant, which is the next leg of growth for your company, what is the expected commissioning date and how long will full utilization take place, and also what's the peak sales potential that you're expecting from this capacity?
So our Gujarat plant is nearly completed. The machineries will start arriving by April, and by May, June, we should do trial production. So that is just a matter of another 3 months for the phase 1. Phase 2 will take another 5 to 6 months. That phase 2 is planned in such a manner because manpower you get slowly. You can't get manpower to that same level as we would need. So while the first phase is completing manpower, then the second phase will start hiring. So the peak production from Gujarat plant should happen by December of 2026. And that, like most of our plants, adds between 450 to 500 crores for the full plant, first phase 1 and 2 for our pre-engineered building. So that will be our 5th complete plant for pre-engineered building production. So by end of this year, we should have a capacity of about 2,500 crores plus for pre-engineered buildings with Gujarat plant completely online, phase 1 and 2.
Okay. So if you could also take us through what's your current order book, how has been the order inflow so far in the fourth quarter, and for FY27, any targets that you have set?
So the order book that we declared last was after our board meeting in the month of February was 1,650 crores. Considering that pre-engineered building normally don't hold a very large order book, because most of the orders have to be, even the large ones have to be executed within 9 months, maybe maximum 10 months. So that was the fullest order book that we could have with our present capacity. I think the same tempo will be maintained in quarter 4 also. We will announce the figures once the accounts are announced, financial figures are announced. But the tempo is the same. And in fact, we are seeing an improvement in the tempo. But we have to be limited by the amount of business, amount of deliveries that we can make by our capacity. So I think till the new plants come in, Gujarat in the first quarter of next year, and the heavier structures, and then that, the order book will substantially remain about the same till we are in an improved position of delivering, because delivery is very important.
The business that you're in and the current market scenario that we're looking at, the cost of raw material for you must have definitely increased. Are you confident that you will be able to pass it on to consumers, or is it some part of this impact you will take on your books and the rest is something that you will pass it on? Can you just explain how does this work for the company?
So we are constantly taking new orders, and whenever we take new orders, we always price at the latest pricing that we have, plus whatever we think the future pricing will be. Normally, steel is very cyclical. So January, February, March is always a quarter where the steel prices go up. You are right. This time it's a little bit more than normal because of the world situation as it has happened. But it's always going up. And this extraordinary rise in prices, what has happened in the last three months, will be a little bit of a hit in the margins, but that will be for the first quarter next year. But we are assuming that our customers will also understand that it's been a little different, little more than what is expected, and they will give us substantial price increases, so that overall in the next 1 year we do not expect any margin to be hit. Maybe a little bit in the next quarter, but overall in the whole year we don't expect any change, because steel is cyclical. It keeps going up and down. At the end of the year it balances out, and our orders are always at fresh pricing. We don't have a fixed price that we must take the order at that. And when the variation is a little bit more, as it's happening now, we have also shifted to taking orders more at variable pricing. Customer also likes that, and we are also benefited by that, so we can pass on. So both the things are happening. Pricing is increasing. Customers are looking at giving us better pricing even for orders obtained because of this unusual situation. And we are shifting more and more to variable pricing till the prices stabilize. So overall, I would say 26, 27, there will be no change in the margin.
Okay, so we can expect 7 to 8% of PAT margin, sir, in FY26 and 27. Is that the conclusion?
Yes, yes. Both the margin percentage as well as because of heavy structures getting added onto our turnover, the quantum of the profits will also go up. That is also very important to us. It's not only important how do we get a better margin per se, but how do we also get the total profitability to increase so that the investor can benefit from that as well. So both we are trying to do, and we are confident about that.
And sir, any impact on you when it comes to the gas shortage also?
No, as a factory of our own, we don't really use any gas, except very little. So most of them are not. We are not using gas, but that is a very small quantity which we have no issues at all. We have had zero issues as far as shortage of gas for some of our welding is concerned. At site, we don't need any gas because everything is ready made from the plant, so there is no requirement over there. I think what is happening is that gas shortage has affected some of our steel suppliers, especially the galvanized steel suppliers. But I think being a very old partner with them for last 25 years, we've been buying steel from all these steel majors and having very strong relationships. So we are not affected even in the steel quantities being supplied to us. So we have not really seen any adverse impact at present.
And so lastly, for FY26, you have raised your revenue guidance from 1700 crore to 1900 crore. For FY27, you've given a target of around 2100 crore. Considering the historical growth rate that you have been, that 11% of growth over FY26, is it a bit conservative in your opinion?
Well, this year's growth we had given that it will increase to about 1850. We hope it will cross that figure. So 1850 we had given a 15% growth target to take it up to 2100 plus. It is conservative because we need the capacity also. Last year we managed to put the capacity in place a little earlier, get the orders and execute it. But the future capacity now was planned on the earlier basis. So we need the capacity to supply that material as well. So it is conservative, but we have to keep in view the position of our supply and our deliveries that we need to make. So maybe let us see during the year if the situation improves for our supplies, factories come into play faster, production comes into play faster, we might change it, but we don't want to say anything at present. A lot depends on supply. We are not seeing so much of a problem in the order intake. The market conditions for the business are still very, very bullish. More is our own capacity to deliver. So earlier, our target was to deliver 22,050 crores in 26-27, which has already increased to cross 2,100 crores. So if you look at from the original figure, it has crossed it. But yes, from the current, because currently if we cross 1850, it will only nearly be a 27-28% increase instead of 17%. So we have utilized our capacities faster. But I think we will have a more clearer picture for next year by maybe August, September, once our new capacities are in place also.
Right, got that view. Well, thank you so much, Mr. Nanda, for joining and having a conversation with us. Thank you so much. Pleasure to have you.
Thank you.
Well, this was Interarc Building Products, outlining the growth prospects for the next 2 to 3 years. Well, let me also invite our guest for the show, that is Lancelot Deacona, who's CIO at ValueX Wealth Connect. Well, Lancelot, welcome at NDTV Profit. You heard the management of Interarc. Just wanted to understand your view, considering the company is doing, is expanding its capacity and it's betting on the next leg of growth.
Yes, I think, the company has a market cap about 2,600 crores and is actually building a good business model in terms of providing prefabricated steel structures. However, if you look at it, since, at this point in time, based on the current mix, the profit margins are not that high. And while the new plant capacities will start, will increase the capacity, so overall profitability may go higher. It's important to see how the product mix changes. And as the management had mentioned, that they are looking at taking on much larger size of prefabricated steel products, which could increase the margins. At the moment, their margins are, around 8 to 10%, which is a fairly low profit margin for a business. And any kind of material shocks can impact this margin going forward. So that is a big risk that one looks at. And if you compare it with the current PE, it's trading at about 20 times earnings, which is, fair price earnings for a company growing at this pace. But one needs to factor in the higher risks as well.
Now, before we move on to our next small cap counter, exclusive coming in on India's largest stock exchange, that is NSE. Now, this IPO has been delayed for quite a while, but right now the company has, or the NSE, the exchange has started or kicked off its IPO process. In fact, they have sent emails to their investors regarding this IPO, and they're seeking investors' expression of interest via the IPO for the OFS route, which means that they are seeking investors' interest whether they also want to participate in this IPO via the offer for sale route, which means that whether investors want to sell their shares in this IPO, that will be launched very soon. So it is one of the steps that NSE has taken to kick off this. In fact, what we are also understanding is that the last date to submit this expression of interest is April 27th. So keep an eye out for that one. This will be one of the most interesting IPO because they have already announced nearly 20 bankers for this IPO, and the IPO size could be as large as 20,000 crore rupees. So one of the largest exchange will be coming out with its IPO soon, given the fact that it has kicked off the shareholder process for this IPO, which will be coming off soon. Well, before we get into the next small cap counter, let's get in Puneet to understand what has been buzzing on the F&O side today.
Well, thank you for that. It's definitely been a very interesting day where we've seen for the BSE Sensex, of course, continuing that pressure. So only one stock right now, Power Grid, that's up 0.5%, but largely a day where we've seen financial being under pressure. So Kotak Mahindra Bank down 2.8%, Bajaj Finance, Axis Bank, SBI, all down 2 to 3% in today's trading session based on the regulation and the news flow coming in from the RBI. Apart from that, also when you look at the long unwinding stocks, those are some of the key ones that we continue to focus on. Nifty Bank, of course, because of this same regulation, has been under pressure, but the metal pack continues to outperform. So SAIL as well as Hindalco are up and about in today's trading session. When you look at the short coverings, again within the metal pack continues to favor in covering of shorts for Nalco as well as Coal India. In terms of longs which are being built up in the system now, you're seeing stocks like LIC as well as Ashok Leyland, but look at the momentum very, very quickly. So you've seen longs being unwinded in both these counters despite expectation of a strong sales growth for Ashok Leyland for tomorrow and the day after for the month of March. And largely in terms of build-up of shorts, you've seen Bandhan Bank as well as AU Small Finance Bank, both these counter being under pressure. So these are some of the key stocks to watch for investors as part of our BSE F&O setup today.
Right. Thank you so much, Puneet, for all the details. Well, moving on, sugar companies are in focus now as Brazil is expected to cut shipments by 14% in 2026-27 seasoning beginning April. Now, as Brazil will cut imports, Indian companies will benefit. But, to speak more about this and to give us more details, we are here joined by Jasmeet. Jasmeet, over to you.
Well, Varsha, thank you for that. The overall positive momentum and sentiment for sugar stocks for say, if you look at the overall trajectory and why the overall up move is, firstly, we have something like as ethanol price spiking due to the oil. That's something that's supporting the sugar prices. But we also have something like a Brazil, the largest producer of sugar in the world, is cutting down its production by 40% in the coming season of the sugar from April month onwards. Now, why they're cutting is the mills want to convert the sugarcane into ethanol oil because the high demand for energy requirement, and that's what they see converting the overall sugar space. So that's the reason why they're cutting the production. Now, while if they cut the production, the demand of sugar still stays the same, which would in turn take more demand for something like Indian sugar brands, and that's why the stocks are buzzing in trade. If you look at the key counter like Dwarka Sugar, it's about 13% in today's trade, while Mawana Sugar is up 8%. Even Balrampur Chini remains a key focus alongside Renuka Sugar as well, where they have been spiking in trade today on the back of the similar news.
Got that view. Well, thank you so much, Jasmeet, for all the details. Lancelot, what's your view on the overall sector, and also your view on Dwarka Sugar and Sri Renuka Sugar, if you cover those counter?
Overall for the sector, one has to be investing when these stocks are at all-time lows, because this is a cyclical industry. It depends a lot on on the prices of sugarcane, the availability of sugarcane, and it's not merely the ethanol blending that will change the future. It's also the cost of input. And if you look at the current valuations, like Dwarkesh Sugar is trading at almost 45 times its earnings. So these are all expensively priced at this point in time, and one should wait for serious correction and then look at investing in the sugar counters. Yes, the news is positive, but based on news flow, it's not always the best time to invest.
KNR Construction remains in focus. A 3,400 crore market capitalization company wins an order worth nearly 1,700 crore. Let's get in, Puneet, with more information.
Well, thank you for that. As you rightly mentioned, 1,700 crore order win today, and stocks up and about in trade today because of that. It's a hybrid annuity model, or a HAM, in the state of Telangana, and construction will be for 730 days with roughly a 15-period operation concession period as well. Now, importantly, this will also come on the back of some recent order wins, roughly around an 83 crore order win just a couple of days ago on 26 March in the same state, 850 crore order win on March 12th, and a 2,000 crore order win that the company had won in 17 Feb. So quarter 4 has led to order wins. But despite that, stocks been, if you look at the one-year chart, has been in a corrective phase because of 3 back-to-back quarters of weak financial numbers. Now, in terms of the order book, as of quarter 3 of FY26, stood at almost 8,800 crores. So when you all add up all of these orders, roughly around 4,000 crores of orders have been won because of that. But despite that, and despite giving a 2-year revenue visibility from year on, stock's been under immense pressure given the margin compression. And what's interesting is that for FY26, management has guided for a revenue range of 2,000 crores. That will be a 40% dip compared to the same time last year. Expectations for FY27 is also not that great, of just 2,100 to 2,200 crores. And expectations of margins are between just 9 to 10% from roughly 13 to 14% earlier. So continues to be a stock that is buzzing today on order win, but the last 3 quarters don't give much confidence to investors to enter at this point of time.
Lancelot, any view on KNR Construction? As Puneet was mentioning that the last 3-quarter performance was not quite interesting here.
Yes, what we have seen is that during the last 2-3 quarters, there has been a decline in the overall sales and order book, and that is putting pressure on the company. Also, if you look at it from a working capital perspective, the number of days working capital has increased considerably over the last 3-4 months, and which means that from a cash flow perspective, more and more the company's, let's say, cash flows are getting blocked up in their working capital. So falling order book and a falling sales or execution, is, as well as a lengthening working capital cycle, does not augur well for the client. So while you may see some movement on the basis of a hike in, orders or announcement, I think it's better to stay away from this company for now. Wait, there may be better alternatives or stronger alternatives, because as the environment becomes a lot more difficult, we have seen, interest rates will start moving up. This working capital issue will only, only create more problems for the company going forward.
Right.
So it's wait.
Right, got that view. Well, thank you so much, Lancelot, for joining in and having a conversation with us. Always pleasure to have you. Thank you so much. Well, moving on, Ganesha Ecosphere is in focus. Let's pull up that stock. The stock is, buzzing on the back of volumes. Well, we have Parth joining us to give us more details on that. Parth, over to you.
Thanks a lot, Varsha. So Ganesha is the largest PET bottle recycling company in India, as they recycle around 16 to 18% of India's PET bottle waste. The company has a total installed capacity of almost 2 lakh tons, and they serve almost 400 customers across more than 16 countries. In the recent conference call, the management highlighted that the textile sector is witnessing some headwinds, and the company's volumes were impacted due to regulatory concerns. The management said that FY26 remains transitional for the company, while adoption in FY27 should be on the normal levels. The key strategies that the company will be focusing on in the future is that they'll be looking to strengthen their presence in overseas countries. They will be also targeting around 65% of their revenue from value-added products, which is around 40% currently, and they'll be increasing their granules capacity to meet the growing demand. About their stock performance, the shares are up more than 8% today, but in the last 6 months, they have fallen around 30%, and year-to-date, the company is still flat.
Right. Well, thank you so much, Parth, for giving us all the details. Viewers, this is all the time that we have on this edition of Small Cap Puzzle. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? Outflows.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and address all of them. So if you haven't already, do start sending them on the number that's flashing on the top of your screen. You can also call us, talk to us directly on your stock-related queries as well. Before we move on, a very quick check of the markets, because we've seen consistent pressure today yet again, and there's no new news to it in that sense. We're below the 22,500 mark, so almost down 380 to 390 points now at this point of time. Losers continue to be the banking pack, led by the regulations by the RBI, and hence you're seeing all those names led by SBI, led by Kotak Mahindra Bank, Bajaj Finance. All of those continue to be under pressure. And you're seeing that pressure on the Nifty Bank as well, now down almost 1,650 points. We spoke about in the morning that 52,200 is not a support for the banking index. 51,800 could be one of the earlier ones. But then since then, we've broken 51,000 as well, and on course to hit a new 52-week low as we speak today on the banking index. In terms of the mid-cap and the small-cap performance, though, that's the other key aspect, because we've consistently seen pressure on the index down 2.2% at this point of time, and the BSE 500 also, the individual names, while there have been some winners like KNR Construction on the back of an order wing, we've seen, and IRB Infra, of course, there as well, and the sugar pack continues to do well. You're seeing Delta Corp, Mahindra Life, Hindustan Copper, Power Industries, all of them that are down in trade today. But before we take all those questions and your stock-related queries as well, there was the ECMS approval that had come in, just a while back, and Dixon as well as Sirma, both those counters, while they are down in trade today, have gotten approval under the new ECMS scheme. Now, this is the round 4. The government was expected to have a press conference today, and hence the proposals for both these companies, along with the others, have been approved at this point of time as well. But it's important to get some perspective directly from the management as well, and my colleague spoke to both Sirma as well as Dixon exclusively on the same. Let's quickly listen into what they had to say on this approval win.
Congratulations on the fresh approval that has come in as part of the ECMS. Talk to us about your plans. How much are you willing to put in, and where all will your facilities be?
See, the entire facilities will be coming up in Naidupeta, Andhra Pradesh. And with today's approval of CCL and HDI and Flex, we are present in the entire value chain of the PCB industries, starting with the input of CCL, going to multi-layer and HDI and Flex.
So what is also the rupee amount that will go in across these two facilities?
We plan to spend approximately 1,600 crores over the next 3-4 years for these three facilities. The PCB plant is already under construction, and the construction is going full blast, and we expect that the civil structure should be ready to start receiving the machines by about August, September, such that by December or latest by January to March 27, we should be able to start the trial production. And we will be the fastest block from the time when the approval was given on 27th of October. In about 15 months' time, we should be into trial production. Yeah.
So sometime early next year is when we can expect.
End of this year or early next year.
So end of this year or early next year. Also talk to us about the other sort of categories within ECMS that excites Sirma, sir. Talk to us about where you might be coming up with further applications.
So I don't think we are currently going to come up with any further applications in the ECMS. The window is already closed. So we have approvals for camera modules. There also will be starting the production towards the end of the year. And I think we have full work on our hands to first deliver at a fast speed. Because if you delay the execution of the project, then you lose out. So having got the approvals, our first view now is the efforts are to get onto the construction and commercial production.
So lastly, the minister also pointed out to the speed, and he expects more from the industry. What is your opinion on what the minister had to say?
See, speed, we have already communicated that we are focusing on execution. Now, of the 4 asks which the minister had said, on Six Sigma quality, we are already working on it, and very structured way. We'll share the details with the minister as he has asked. We have just received, as a part of our quality journey, a TISEX certification, and we are told we are the first company in the country to have that. On sourcing from local supply chains, we are, as a company, committed to source all equipment which are made in India and available in India, to source that. And we have entered into contracts with some of the companies which have got approval in this ECMS policy, where we're sourcing all our automation, testing and material handling lines and systems from them.
Fresh set of approvals under the ECMS. Talk to us about the sort of investment figure that you're coming up with. Where will these facilities come up, and what's the sort of production target that you're aiming for?
So I think this, as I mentioned, that this ECMS scheme that has been launched by the Ministry of Electronics and IT is very timely, because now that we've achieved a very large scale, the whole focus shifts now to creating a robust and strong component ecosystem, so that the value addition in our sector goes up and the success that we've achieved in manufacturing of the finished product is sustainable. So we in Dixon have already received the approval for the camera modules, for which production has already started. Today we have received the approval for our display factory, which will be coming up in Noida, Greater Noida area. And once this facility is operational, the capacity is going to be eventually almost 60 million pieces of mobile phone displays, on almost 24 million pieces of the IT hardware display. So I think it's a very significant step. And as a country, what we're achieving now with this announcement, that the value addition, which was at around 18% in mobile phones, is going to go up to almost 40%. And as you know, this was one of the issues, and the critics rightly pointed out that the value addition in this sector was very low. So I think that issue has been resolved. And with this approval, we are confident that we'll be setting up the factory maybe by July. The trials will start in July. And once it's operational, we would have put an investment of almost around 1,100 crores.
Well, that was the management of Syrma as well as Dixon, both those heavyweights in the EMS space. Stocks not reacting one bit today, probably given the market condition. But let me welcome in Avinash Gorakshankar, as well as he's, of course, the head researcher, Avinash Mentor Research Services, as well as Vishnu Kant Upadhyay. He is the AVP Research and Advisory at Master Capital Services. Gentlemen, both of you, thanks so much for joining in. Let me actually go across and take the first question from Daniel from Mangalore, and he's actually asking on Dixon Tech itself. Now, Avinash, believe it or not, his buying price is 531. I hope this is this is true and there's no mistake in it, because I don't even remember any time that stock went to those levels. But just in case, Avinash, your view on this ECMS approvals also that have come in. I think this is the second round of approval for both Syrma as well as Dixon. How are you viewing the space, and just a specific query for Daniel as well, what he should do with Dixon Tech now?
So I think, Puneet, my sense is that he has a very significant amount of margin of safety because his buying price is significantly low. But if you ask me what is the strategy he needs to adopt, unless he requires money, he should hang on. I think currently the market sentiment being so bad, I think this news in a good market would have re-rated the stock, but unfortunately the market sentiment being so weak, this news has got no impact on the stock price. My sense is that over the next, say, 2 years, this gives a very strong runway for players like Syrma as well as Dixon. And I think both these companies should do well. As far as Dixon is concerned, I think this is the next leg of opportunity for them. And I think as the investments come in, the new facilities go on stream, you're going to see a new revenue stream coming in. And that is definitely going to be, earnings accretive. So my sense is, I think if he doesn't require the money, he should hold on. He should not get worried on the market conditions, because these kind of, conditions are completely uncontrollable. And you need to carry on, and you need to face the adversity in the near term. But yes, longer term, Dixon should continue to do it.
Got to have you, Avinash. But the next question that's coming in is from Ramesh from Bangalore, and he wants to, buy into Canara Bank right now for the short term. Vishnu, good afternoon. Welcome to the show. Would you recommend Ramesh to buy into Canara Bank? Is this a good time to enter?
Well, very good afternoon, Puneet. So from technical standpoints, the stock is looking quite bearish because the stock has fallen below its all short and long-term moving averages, and currently it is trading around 125. So I believe this losing streak should remain intact with a potential downfall towards 119, 118 sort of level. So let the prices come down towards that point, and from that support area, we can accumulate this.
Got that view, Vishnu. And so that's on Canara Bank. Stock's been consistently out of favor, and one of the casualties in that sense in what we're seeing in the market move. The next question is coming in from Satyan. He wants to know if he should book his loss right now, Avinash, in Sundaram Fasteners and Sterling Tools and buy into Sirma. So I think you gave your view on the EMS pack, but would you recommend exiting Sundaram Fasteners and Sterling Tools at a loss right now to Satyan?
I think, Puneet, both these companies are fundamentally very strong. Sundaram Fasteners represents the TVS group, and Sterling Tools is a very well-established fastener. And incidentally, both of them cater to the automobile sector. And our ground reports suggest that within the auto sector, activity is going on very strongly. I think not only the fourth quarter, but even the year ahead, that is FY27, is going to be a lot better. So unless the investor has a short-term view, he can exit. But as far as Sirma is concerned, I think unless he's got a 12 to 15-month time frame, because these are also companies which are well identified, and whatever earnings benefits do come in from the new expandable facilities, that is going to take some time. So I think he needs to take this point into mind that if he's a short-term trader, then it's better to just book your loss and stay, in cash, I think, rather than getting onto some other stock, because this is not a short-term call. You'll have to give in a time frame of at least 12 to 15 months going forward.
Got that view, Avinash. But the next question, it's pertinent today on the sugar pack actually, and Dalmia Bharat Sugar is what our viewer is asking on. He has bought 100 shares at 332. Let's pull up the stock today and see what it's doing. So the sugar one, yeah, that's right. So it's up 11% today on the back of these news flows that we've seen on ethanol. Vishnu, would you recommend him to exit? He's bought it at 332, so currently he's sitting on a profit with today's move. Should he exit, continue, or the chart suggests that this move could continue at least for some more time?
Well, Puneet, so, following this news, yes, we have seen some sort of, buying in the counter, and definitely the picture has been turned bullish in the space. I'm expecting this gain should remain continue till 424, 25 sort of levels. But yes, we cannot rule out the possibilities of some profit booking from the present juncture. So yes, he, should not get in panic and should continue with the position for the target of 420, 425 sort of levels.
Got your view, Vishnu, but let's go across and take our first caller for today from Andhra Pradesh. And Mansa, I hope you're pronouncing your name correctly, is calling us. Please go ahead with the query.
I'm holding Sandur Manganese and Iron Ore. 300 shares I'm holding.
Okay.
Currently, I am at 24% loss. So I would like to know the, upside potential in this stock. Can I hold for long term, or I have to exit?
Got it. Avinash, on Sandur Manganese, she's sitting on a loss of almost 24%, as she highlighted, with a buying price of 228. Should she continue to hold? Would you suggest a good time to average as well?
Yeah, Puneet, I think, if the investor can hold on for the next, say, at least, 12 to 18 months, I think definitely Sandur Manganese is a well-established metal player and has been doing pretty well. In fact, this is one of those stocks which, from the mid-cap category had done remarkably well. Metal space, according to us, is doing pretty well. I think, of course, there are going to be, times of volatility, and that is exactly what is happening for the counter. I would not be surprised that the fourth quarter, which is going to be due now, is expected to be reasonably good. And the forthcoming year is also going to be pretty encouraging. So, if the investor can hang on for the next 12 to 15 months, this is definitely a stock which is not worthwhile to sell at a loss. Fundamentals are good, the management quality is good, and overall the tailwinds in the metal space definitely look quite good. So I think continue to hold, but one can average if the view is going to be for the next 12 to 15 months only.
Got that view, Avinash. But the other counter that's coming in is on DCX actually, and our viewer Vanita had actually asked us this question last week, and I think one of our guests would have recommended a buy. She's currently, because the stock's fallen in the last 1 week, she's currently sitting on a loss. She's not mentioned if she should her time frame, but Vishnu, what would you recommend in terms of DCX? It's been a volatile counter, but should she continue to hold?
Well, so technically, stock is in completely bearish, picture, and the good part is that the stock is currently trading near it's a very crucial horizontal support that aligns somewhere around 154, 155. So with the stop loss below 154, one can hold the counter, but still the stock is not looking good on the higher side. I believe if you find level somewhere around 179, 180, try to get exit from the counter.
Next one's on JSW Energy, and our viewer actually holds shares at 497, bought almost 100 shares, and this is Swati. She wants to know if she should continue to hold for the next year or so. What would you recommend, Avinash, for this counter?
No, I think JSW Energy definitely looks interesting, and I think the investor needs to take a slightly longer term call. The numbers have been very solid. The scalability of the business is also pretty good, and I think we should see stronger Q4 numbers. Plus, the coming year should be reasonably good. So, if the investor has a slightly longer term horizon of say 12, 18 months, I think definitely one should stay invested. The fundamentals of the business are solid. Plus, the management bandwidth is very good. So I think you need to stay invested, although the times now are really challenging, but definitely numbers when they come out should be reasonably better as compared to last year.
Got the view, Avinash. Avinash, let me stick with you because Mr. Rao from Hyderabad, he has been following our show. So thanks so much for that, Mr. Rao. And his question is, he wants to invest 35,000 now and asking for a best banking stock at this point of time from a long-term perspective. Avinash, we've seen the PSU bank actually rally, wane away. HDFC Bank also has also given up some of those gains. Which camp are you in? Are you pro HDFC Bank at this point of time, or do you still continue to like ICICI? What's your pick in this space right now?
No, I think I would still bet on ICICI Bank, Puneet, because clearly we don't know what's the kind of damage has been done at HDFC Bank. At least for a couple of quarters, HDFC Bank may underperform, although it's come down to very attractive levels. But ICICI Bank looks pretty good. I think, if he prefers the PSU pack, then even SBI at these levels, which is one of the largest PSU banks, can be a good, investment kind of entry point. I think one needs to be a little constructive here because I think the new RBI norms for the rupee have given a little bit of uncertainty, making people and most analysts expect that possibly there could be large M2M losses because of the currency, M2M factor. But I think we need to wait for the Q4 numbers and only then we could get a little bit of clarity. But SBI and ICICI Bank are strong bets in the banking sector. Somebody who wants to take a long-term exposure can definitely buy into, an SIP approach and obviously, stay invested here.
Well, got that view, Avinash. But viewers as well as Avinash and Vishnu, time for the rapid fire round in this edition of Fast Profit. Request you to keep your answers on buy, sell and hold so that we can take as many in the next couple of minutes. The first question coming on Tata Motors PV. Would you recommend buying into it right now? Avinash is what Santi is asking.
No, I think as of now, not now, because I think there has been some other, closure of JLR. I think that could impact the numbers.
On Shriram Finance, is it a good time to buy, Vishnu?
Well, yes, we can buy.
Avinash, you did answer partially, but Ramesh wanted to know if we can accumulate. He's intending to accumulate 300 shares of HDFC Bank. You just answered it partially, so would that be a no?
No, I think not as of now. It's better to wait for the Q4 numbers.
On Karur Vyasa Bank for the next couple of years, Avinash, what's your view is what K Guru is asking?
I think can be a good entry point provided investor has got at least 18 to 24 months time frame.
And on Tata Power, is it a good time to buy is what Ravi is asking, Avinash.
Yeah, I think Tata Power can be a good bet. Again, from a long-term point of view, he can buy in SIPs.
Varun Beverages is his next counter. Veera from Hyderabad is holding shares at 641, Vishnu. Would you recommend averaging down at this point of time?
Well, no.
The next question coming in. Sorry, Vishnu, go ahead with your answer.
The stock is currently in the bearish phase. I would not recommend to buy at the current juncture.
A very smaller counter, Vishnu, on Infobeam Technologies, so roughly around 1,300 crores in market cap, and K. Mallikarjun has actually bought shares at 179. What would you recommend on this counter?
Yes, we can buy with keeping a stop loss below 190.
Ashok Leyland bought by Stani from Bengaluru at 209. Since then, of course, it's been in a corrective phase. But Avinash, is it a good time to accumulate now or wait for the bottom?
No, I think one can slowly accumulate now. I think Ashok Leyland should be a key beneficiaries of the uptick in the CV cycle.
Shankar from Bangalore wants to accumulate 1,000 shares on Network 18 at the current price. Vishnu, would you recommend that? And he's a short-term viewer.
Well, definitely not. The stock is likely to extend this losing stick towards 25-24 of levels.
Kansai and Aerolac bought at 163 by a viewer who holds roughly 60 shares. So probably bought it today. Avinash, given whatever is happening with the paint industry, what would be your view?
No, I think as of now, if he's not purchased it, it's better to wait because crude prices are likely to be elevated. So I think it's better to hold. No fresh buying suggested.
DMart bought at 4240 by Mayur. Vishnu, what should he do with his 10 shares?
Yes, he can, stay long, and I'm expecting prices to, extend again towards 43 sort of levels, 4300 sort of levels.
Got it. Siemens Energy bought at 2987 by Tatyamati from Telangana. What would you recommend here, Avinash? Should she wait or can buy a little bit more now?
No, she can definitely average more, but keep a time frame of at least 12 to 15 months.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. Avinash, as well as Vishnu, thanks so much for solving our queries. With a net total for both the morning as well as afternoon edition, we hit 106 queries today. So thanks so much for helping us hit that magical number of 100 again. But viewers, all the time on this edition of Fast Profit, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's Saturday? Outflows.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hello and welcome. You're watching India Market Close on NDTV Profit, where we will be dissecting the key market trends in this last hour, where we are at the day's lowest levels. With me, Samit Sarkar and myself, Hiral Daria. Clearly, if you see, Samit, in terms of markets, we are at the day's lowest levels. A 1.9% cut. We're talking about a sentiment which has been weak, which was expected to be weak as well, and lots happening in the markets.
Yes, in fact, we have even trading below the 22,400, which is expected to be one of the crucial support level coming in for the benchmark, but we are now trading below that level.
In fact, to add to that, if you see in terms of Bank Nifty as well, that's the key over here. A 3.4% cut coming in terms of Bank Nifty. It's the PSU banks as well as the private sector banks which are taking a beating, and this obviously is on the back of the treasury losses that we could be seeing in the fourth quarter so far on the back of the RBI action on the Indian rupee. But what is interesting is the bounce back that's come in terms of the Indian rupee as well. If you just quickly pull up that one on the screens before we look at the broader markets and the advanced decline, we are back at that 94.73 levels yet again. So, that 1 rupee easing that we were seeing seems it's getting nullified somewhere right now. So that is something that we need to keep our eyes on as well. But very quickly, let's just look at the heat map in terms of Nifty 50, and then we'll look at the sectoral indices as well in trade. In terms of where we started off, it's only Coal India which has come in as the day's highs right now, but Hindalco continues to stay there. ONGC was the other one which was also trading in the positive. What is taking a beating majorly is your financials. So from a Bajaj Finance to your Geo Financial Services, Bajaj Finserv, your banks, Axis, SBI, HDFC, all of them that have been trading under pressure. Let's just look at the contributors, because which are the ones which will be actually putting pressure, and that will give you an idea. HDFC, Bharti Airtel, SBI, ICICI. Majorly it's the banking space. Not that kind of support that we could have seen from a Hindalco, Coal India as we speak. In terms of broader markets, let's look at the breadth first, and then we'll look at the individual indices and contributors as well. In terms of the statistics, if you see, we are widening. Your declines actually have gone up to 2,195, pretty much where we started off. So even Stevens right now in terms of the advanced decline ratio from where we started off to now. And very lastly, if you see in terms of broader markets as well, let's just pull up that one on the screens. What's happening, Somit, is on the broader markets, the cuts are deeper today. Your mid cap 150 is down 2.5%. Small cap as well, similar kind of cuts. So I think that's what is not supporting the breadth as well.
Yes, the rupee depreciating from the day's highest point that we had seen, plus crude price rising and also increasing this pressure overall on the market. Second consecutive day of decline, more than 800 points is what we have seen. The markets coming off from over the last couple of trading session, and now we are trading at its lowest level that we have seen since April 2025. So 11-month low is where the benchmark is trading. Among the sectoral indices, metal index is the only sectoral index that is trading in green, and this is largely led by aluminium players. Nalco, Hindalco are the top gainers here. And if you look at the support levels, 22,400, 22,450, major support seen on an intraday basis. We are trading now slightly below the 22,400 level, but we could see some support coming in on that front. And when it comes to the intraday resistance, we are seeing it at around 22,600 and 22,700, which is also the day's highest point. If you look at the India Volatility Index, that has spiked about 28, which is the highest intraday level that we have seen since April 2024. So that is a cause of concern coming in, and the sell on rise strategy is expected to continue overall in the market until and unless Nifty clearly moves above the 23,000 and the 23,200 level. Some statistics or some data coming in on the financial year end fund, given the fact that today is the last trading day of FY26. Nifty is heading towards its worst financial year loss since FY20, and FY20 was the COVID year loss that we had seen. We are down more than 4% in trade, and in the month of March we are down nearly 10% in trade. This is the worst monthly decline that we have seen since March 2020. Obviously the Middle East war and the FII selling is the reason why we are seeing this. FII selling in fact has crossed more than 1.1 lakh crore so far in the month of March.
Okay, so these are the factors we are watching out for, but let's get in Hemen Kapadia from DR Choksi Fitzer. Hemen, good afternoon and welcome to the show. Always a pleasure to speak to you, Hiral, on this side. My question to you is, the sentiment continues to remain weak. We are trading at the day's lowest levels. It is a truncated week. What should the strategy be on Nifty and Bank Nifty?
A very good afternoon to you, Hiral. Thank you for having me on the show. Like I said, it's such a pleasure to talk to you. Like you said, Hiral, it's a truncated week. You have 2 holidays. It's a monthly expiry. We should have got the whole week as a holiday. But seriously speaking, Hiral, one would have thought the markets are deeply, deeply oversold. One would have thought that around the previous low, we'll get respite. I won't say double bottom, but we'll get support from the earlier low and we'll bounce back. That isn't happening, and HDFC Bank is sinking the Bank Nifty. So frankly speaking, with a holiday tomorrow, I wouldn't advise going short because if currently it sounds like mission impossible, but in case a sliver of good news comes in, we'll open a gap up. So I'd say too late to sell, too early to buy. But with 2 holidays and a truncated week and the expiry, I wouldn't short the market at this point, despite the apparent obvious weakness. And the VIX is at 28. I think it can go to 31 and 34 before it finally eases off, Hiral.
Okay, Bajaj Finance is one of the top loser. At least on the fundamental side, I can say that analyst or street is concerned about the fact that it has the highest exposure towards unsecured MSME, and given the current macro situation, that is one segment which could get impacted. But on the technical side, how are the charts looking like? Any support levels that you could suggest?
Somit, frankly speaking, we are at a congestion area. Frankly speaking, this level of 798 or 800 has not been decisively breached since 31st January 25. I mean, Jan 25. So we are, frankly speaking, at supports. Then there is support at 780, 680. There is a whole congestion area, Somit, if you see between September 21 and January 25. So it's been almost 4 years and the Bajaj Finance was doing nothing. So this whole area is congestion, which means there's now support. So honestly speaking, we are at support and we should not go down much. But having said that, things don't look too good because any time frame that you see, all indicators are in sell. But one also needs to keep in mind that, Bajaj Finance has had a phenomenal run over the last 16 years. So I think the laws of gravity caught up. Maybe the reason was more fundamental than technical though.
Okay, so that's with regards to where Bajaj Finance goes. Hemen, quick one, your top picks at this hour?
Okay. That's
I know it is going to be difficult to choose something, but in terms of the way prices are, I think a lot of things might look attractive.
Well, yes. So like I said, I won't give a sell at this point in time, Hiral. So I will give a contra buy call. Caveat emptor. Only people brave enough to buy this. But once again, they're not very short-term calls. They are maybe slight a month or 2 month calls. Firstly, a buy call on Bayer Crop Science. Stock is bottoming out, positive dividends, oversold, looks stronger. Buy at 45.60, stop loss of 44.10, and a target of 4860 here, Bayer. And the other one is IPCA. IPCA looks very promising. Aurobindo does, but I think IPCA looks a shade better. So IPCA has formed a rounding bottom, and we're on the cusp of a breakout in a market such as this. So buy on IPCA Labs at 1590, stop loss 1540, target of 1690. I believe it should be going to a 1760 over the next few months.
With regards to IPCA, Bayer, interesting moves coming in on that counter as well as we speak. That stock is at the day's highest levels. Let's also get in Ashish Chaturmota from Apex PMS JM Financial. Ashish, welcome to the show. Always a pleasure to speak to you. My question to you right now is, what are you advising your investors with the way markets are moving? Because Valuations somewhere are turning attractive to some extent. Yes, there could be further, improvement when it comes to looking at entry levels. But from a stock price perspective as well, you're already probably in an attractive zone. Are you recommending buying at current levels? And if yes, which pockets are you advising?
Thank you, Hiral. So I think first of all, you rightly mentioned about the valuation part. If you look at broader market valuation, if you look at Nifty, on a 1 year forward, it's trading close to 17 and a half times forward multiple. And if you look at in the history, we have observed that whenever markets have gone to a level around 15 to 15 and a half PE multiple, it has become extremely attractive, and also it offers a very strong earning yield when we hit those kind of multiples. So keeping this in mind, we have already breached very important support zone of 22,500, which was multiple times, got respected, not just this particular month, but in the previous occasion also we have seen these levels. So keeping this in mind, I think the 50 monthly moving average comes around 21,500, 21,600 trajectory. So ideally, from a technical perspective, that's the area where I think a lot of these, a lot of meaningful support will start emerging. And at the same time, the valuation will become more attractive. So what we are recommending to our investors, a staggered approach for next 2 to 3 months time frame, because even if tomorrow this de-escalation starts to happen, crude is not going to immediately see a big correction. There will be one knee jerk, but then again there will be a consolidation. Until the time crude is above $90 odd, it is going to impact us in terms of GDP deficit and the overall inflation perspective. So keeping this in mind, actually next 2 to 3 months would be a staggered approach which investors should adopt, and ideally every week, every fortnightly, one should add on to the position. And as I mentioned, technicals also suggest that since we have broken this support level, and at the same time India VIX hitting 24-25 is a sign of worry, and that's where a staggered approach is a better strategy. Now coming to the sector, so definitely there are pockets which looks very, very promising. First of all, banks, definitely a lot of has been discussed about banking as a space, but just to give you a perspective, most of these private banks now today are trading below 2 times price to book, and these are decadal low in terms of price to book or in terms of PE multiples, which most of these private banks are trading. From a credit growth perspective, we have seen decent recovery in the last 2 quarters in terms of credit growth momentum. And at the same time, if interest rates remain stable, or if it starts to inch up because of the inflationary concerns, then I think banks are going to be the biggest beneficiary. Today, we are seeing a big sell-off, obviously, because there is going to be an M2M losses on the bond book of a lot of these PSU banks and even some of the private players. So I think this is offering a very strong, opportunity to for investor to accumulate these quality private banks and PSU banks or PSU bank B's ETF. From a 2-3 month perspective, this should be the accumulation, and then ideally in next 1 year we expect very strong returns coming out of this space. Selectively, we are very positive on the CDMO opportunity, because we believe that if pharma is going to grow at 7-8%, this CDMO players might have a lumpy business on a quarterly basis, but we will see a very, very strong 18-20% kind of growth rate in terms of profitability, in terms of top line for a lot of these CDMO players, where names like Divi's Lab, Laurus, SciLife, or even Naveen Fluorine for that matter, which has got a decent book of CDMO within itself. And then you have RefGas business, which is a good proxy to play the data center theme. So yeah, these are the themes and sectors and companies which are looking very promising to accumulate for next 2 to 3 months time frame.
Right. Let's move on to our stock of the day, Urban Company, and this is after the company announced that they have seen a strong demand coming in for its one of the services, that is Instamart. Let's get in Varsha to understand how the numbers stack up against its peer as well.
Well, thank you so much for that. Yes, so definitely Urban Company is in focus now, because company is now clocking 1 million monthly bookings. And if you see, the Insta Help is actually hitting nearly 50,000 daily orders as per this is Feb data. This makes it the fastest scaling vertical, which provides services like cleaning and laundry services with 10 to 15 minutes of fulfillment. Well, let's see what brokerages are saying. We have Morgan Stanley, which is actually positive when it comes to urban company for long term. And what they say is that the Insta Help growth, if you see, is strong, but losses are rising and the orders are scaling fast, nearly 17,500 to nearly 36,000 daily. There is near-term pain according to the brokerage house, but long-term break-even is intact according to Morgan Stanley. Now, let's also talk about Insta Help specifically and also compare it with the peers. Talking about Insta Help by urban company, demand has already been proven, that is 50,000 orders a day, and which is built on the existing user company's user base. They also have well-trained, strong supply network, that is trained partners, and their strategy is to focus on repeat usage and of course the efficiencies. Now talking about their peers, that is Snabit, which was funded with $56 million. They don't have as much as large base yet, and they're building demand plus supply overall to have that the growth, but the focus is on the fast acquisition. Talking about Pronto, which is again a peer for UC's Insta Help, the funding has been done at $13 million, quite smaller but at an early stage, and they have a very limited scale visibility, but the focus is on the city-wise or geographic expansion. Well, talking about the overall key difference, urban company, if you see scaling a working model, I would say, while Snabit and Pronto are, proving the model itself, which gives an urban company a first mover advantage and a head start when it comes to the growth ahead of, Snabit and Pronto.
Okay, so that's with regards to where urban company goes, and in terms of comparison as well, it's very interesting. If you just pull up a 1 month chart of urban company, today it's seen a spike. I think in mid of March itself, that stock had seen a good spike as well. So 11 to 12% up move is what you're already seeing. Ashish, any view when it comes to urban company from a fundamental perspective?
Yeah, so I think this Instamart is going to be a big growth driver for them, and I think it's a very micro market business, and with lot of I would say focus upon the urban markets where the pricing power remains with urban company to a great extent, and once you hit a particular size and scale, then it creates a very big operating leverage for the company. So I think going forward, we believe since the post the listing, the stock has seen a big correction, and now I think there's a very strong base building which is happening around 105 to 115 kind of zone. So keeping this in mind, I think the risk reward looks quite promising. On it, any dip towards 105 would be an area where one can add more positions and can even add at current level. So ideally 105 to 120 is an area to accumulate, and it looks like stock has a potential to deliver double-digit kind of returns in this particular year.
Okay, so that's with regards to where urban company goes, as we speak right now. Strong moves coming in on this counter. Double-digit growth is what Ashish is watching out for. But moving on, let's understand, what the FNOQs are indicating right now, because it is expiry as well today. What are the numbers indicating, Puneet, in terms of today's session? Where are you seeing the accumulation and any levels that you're tracking?
Well, thank you for that. We're definitely seeing broader market pressure as we've been highlighting throughout the day. The Sensex continues to be under pressure, and the banking names, of course, have been the one. Bajaj Finance now down almost 5% as we speak, but continue to see broader market pressure. Nifty Auto also down. The tech names also down roughly 0 to 2%, but largely the banks dominating the news flow. In terms of the Nifty Bank, it's, and some views on this will be key, because we've broken down the levels from even 51,000 at this point of time on the Bank Nifty, and hence continue to see pressure now around 50,600 odd levels. In terms of some stocks though that, we are focusing on today in terms of longs being built up, it's a safe haven play that we're seeing across a bunch of FNO stocks today. So the metal pack, SAIL as well as Hindalco continue to be under focus. In terms of covering, also short coverings, you're seeing the metal pack seeing massive coverings of shorts. So Nalco continues to be on the radar, and so does Coal India at this point of time. In terms of longs being unwinded, any momentum built on the auto pack is getting sold into. So Ashok Leyland and also on LIC, we are seeing almost a 5% downtick in trade today, while fresh shorts being built up is yet again on the banking pack. So a picture perfect playbook in that sense being built up across a bunch of stocks. So Bandhan Bank, EU Small Finance Bank feature on this list, but largely pressure continues across a bunch of spaces. Banking definitely the one which is bearing the brunt today.
Right. Let's also welcome in Manoj Kumar Dubey, the CMD and CEO of IRFC. So firstly, to start off with a refinancing deal that you have announced recently, and this is, I believe, the refinance of long-term debt of close to 12,840 crore. Could you share some more details about this refinancing term that you have signed as of now?
So, good afternoon, Sumit. This deal, yes, last week we signed this agreement with the management of HURL. It's a joint venture company promoted by IOCL, NTPC and Coal India Limited, three of the biggest Maharatnas of CPSEs, parlays in the country. So, this nearly 12,000 crore refinancing deal that we did at a very attractive rate for them. And yes, the payment was also made on last Friday. So in this FY, this is one of the biggest, in fact, the biggest disbursement deal that we did with them. They are into fertilizer business. They are already, all their three plants are doing productions. Cash flow is positive. Gorakhpur, Barauni and Sindri, there are three plants that they are running, and the tenure is 10 years, and we are very happy doing this deal with them.
Okay. For FY26, you had set a disbursement target, I believe, of around 30,000 crore, and 75% is something that you had already achieved. Have you met that guidance, or have you exceeded that guidance, sir, for FY26 now?
Oh yes, we have exceeded the guidance in terms of sanction of assets as well as disbursement. As you rightly mentioned, by the Q3 we have done nearly 75%. Today, end of the FY, I'm very happy to share that the disbursement stands at more than 35,000 crore against the guidance of 30,000 crore. And sanction of assets, we had given a guidance of 60,000 crore. We have already done more than 75,000 crore. And there are a few in pipeline where we are lowest. So, I mean, the year is closing on a very high for us. This is the first FY when the company has gone on its diversification mode. Typically, we call it IRFC 2.0. And the kind of success that we've seen as a team, I'm sure that going forward in FY27, when we have a pipeline with us, last year we did not have a pipeline. Now that we have done disbursement more than what we targeted, and we have got a pipeline with us, FY27 is going to be unfolded in a very positive manner for us. This is the expectation of the management.
Okay. Any internal targets that you have kept for FY27, and also if you could just give us some guidance on the AUM front?
Oh, so yes, so AUM, we are now, when we are closing this FY, we started at 4.6 lakh crore. And we'll be ending somewhere near 4.9 lakh crore, near to 5 lakh crore. This is what we are ending. We'll be sharing the details. Going forward in FY27, we believe that we will surely crossing the landmark of 5 lakh crore, which will be the first for this company. And other guidance is now the benchmark will be what we have achieved in FY26. So on this benchmark, we'll be going ahead, and one particular aspect that I wanted to share with you, we are differentiating ourselves in kind of the assets that we are taking into our fold. For us, any ticket size which is less than 5,000 crore is a kind of retail. So we are not looking for any small ticket sizes. As you know, we did all deals like DFCCL and this all more than 10,000 crore. So we are looking at the assets where the minimum ticket size is 5,000 crore. Going by that, if you see next FY27, the things are going to be on higher side than what we did last year. And this is how we want to grow. We want to ensure that our margins are quite better than what it used to be with the Indian Railways. And NIM and the PAT, both the target for us is to grow in double digits. So that is where we stand today.
Mr. Dubey, good afternoon. This is Hiral here. You know, before I ask you the next question, I just want to address what's happening on the Indian rupee. A record low again at 94.94 is what you're tracking as we speak. 96 right now. And that's the pressure that's building up as we speak. Somit and I were just discussing in terms of your exposure to the currency volatility. We do understand that you have ECB loan which you've raised in yen as well. What is the kind of impact when you see with regards to the rupee depreciating?
So, Hiral, you are right in terms of volatility in currency market, but we are completely hedged. Whatever we raised, that 300 million and 400 million dollar worth of yen, we have already hedged it. And the brackets that we have hedged is quite conservative. So we are quite comfortable with the kind of temporary hiccups that the currency market is showing.
Mr. Dubey,
so far as
have you
older exposures are concerned.
Mr. Dubey, I will interrupt you. When you're saying you're hedged, are you hedged to look at a rupee at 95? Is that what you're saying?
My hedging is quite high than that. I mean, it is quite higher than that.
What would that be?
So
what would that be?
no
Because that gives us an indication of what are you anticipating the rupee at? Because market participants are looking at rupee at 96, 98. What is that hedge number that you think you're comfortable with?
No, we have gone for a hedging of 5-year tenure that is in the bracket of 110 to 115. So there is a lot of legroom available. So we don't have any worry right now. And we believe that this is a temporary phenomena. Even rupee, we believe that when the things are settling down, rupee will be showing stronger position. And the kind of hedging that I told you in the leg of yen as well as in the leg of dollars, we are hedged in a very comfortable manner. We don't find any kind of issues right now.
Thank you so much for that. I think we will touch base with you to understand your hedging policy in detail as well. But you have the rupee which has hit that 95 mark already as we speak. In fact, that 95.22 is what you're tracking in terms. These are record low levels that you're seeing in terms of where the rupee goes. Let's just, with the Indian rupee, pull up the IT index because that will again tell you the reversal probably that could be coming in on the IT sector as well. Just in terms of a short-term sentimental impact. But clearly, a record low is what we've hit in terms of where the Indian rupee goes. We've surpassed that 95 mark. 95.22 is what you're looking at. Somit, my question over here is we were looking at the RBI coming in to ease the pressure when it comes to the Indian rupee, and that's the reason why they got this entire framework for the banks. And after the morning opening session, we did see that easing and it's bounced back yet again. Let's get in Dheeraj Neem, economist and forex strategist at ANZ Research. Dheeraj, good afternoon. We've surpassed that 95 mark, 95.22 on the Indian rupee. Your initial comments, because the RBI was the one who was going to come and rescue.
Look, I think this very much reflects that there is strong underlying demand. It's not just speculative activity that was pushing the rupee weaker, but looking at where oil prices are, of course, there would be strong corporate hedging demand and even real demand for real-time trade flows. So I think this opportunity that came after the NOP revised guidelines and when the rupee USD INR dropped gave a good opportunity for others to sort of buy in.
Okay, so Dheeraj, what is the RBI trying to do right now? What is the kind of impact you're seeing? Because in a single day, if you're going to see this bounce back yet again, what are markets reading in, overall?
Look, I think the basic guideline is that with the scale of the oil price shock that we're currently facing, the rupee is headed weaker. I mean, oil prices remain above $100 a barrel. And that means that it is not just a problem of portfolio investors pulling out money on adverse sentiment. In fact, your current account deficit could be much larger, warranting a shift in the fundamental view. And insofar as that is on the cards, the rupee should be heading weaker. And with that, of course, comes the hedging demand and all of that a lot of importers would be coming into the market for. And of course, they were looking for a good entry point for them to hedge, the lower forward premium because of this latest revised guideline, etc. Gave them exactly that opportunity, and that is what is exactly playing out. My sense is that if the tensions persist and oil prices do not ease, we could be seeing the rupee heading towards 96 in the near term.
Do you expect any further moves that RBI could do to ease this pressure?
I cannot so much comment on the regulatory side of things, but I do think that their intervention capacity is still there. I mean, FX results from any adequacy metric that we track are overall in a decent space, but of course they are not so large, especially the foreign currency assets within the FX reserves aren't so large that the central bank would be indiscriminate about interventions or defending any particular level very staunchly. In fact, I think whenever they see some speculative activity build up, they will be willing to cull that with their intervention. But with the recent revised guidelines, of course, that remains a smaller possibility.
Okay, so it's a wait and watch now. But thank you so much, Neeraj, for joining in. Always a pleasure to speak to you as well. And again, 170 paise fall is what you're seeing from opening levels in terms of where the Indian rupee goes. We've hit record lows in today's day of trade itself, and you can understand the kind of volatility crude prices are causing as well. Let me get in Ashish to give his view. Ashish, with the kind of volatility that's coming in with regards to where the Indian rupee goes, any rate sensitives that you would want to focus on right now?
So definitely, falling rupee, rising crude, rising India VIX, and an environment where the global growth might come into a question mark, and the inflationary pressure is going to hit, which will ultimately result into either interest rates remaining at current levels or eventually going up. It is going to put a lot of pressure on a lot of interest rate sensitives, whether it's real estate, whether it's auto segment. We are already witnessing a lot of consumer facing finance companies also seeing a lot of pressure, because ultimately all this unsecured lending is also going to get hit significantly. So our sense is that at this point of time, the focus should be more on defensives, on healthcare, on pharma, or even if one want to focus on the BFSI space, then ideally banks are more attractive than the NBFC at this current juncture, because there's going to be a lag effect between the borrowing and lending side. So I think that's where the banking would be a big beneficiary. But overall, we believe that yes, there is going to be a lot of pressure on the interest rate sensitives, and portfolio should be aligned towards defensives as a basket.
And anything in the IT space that you find attractive, given the fact that they are a direct beneficiary of rupee depreciation?
Ideally not. The reason is normally Q4 is a very soft quarter for a lot of these IT companies, and we are not seeing discretionary IT spending reviving. So yes, from a dividend yield perspective, from a FCF yield perspective, it looks very promising from a valuation perspective. But the way the dynamics of the businesses are changing, we would like to keep a hold on IT. We are significantly underweight in this space, except one name within the mid-cap IT, which is Coforge. This is one stock which is prima facie from a relative perspective looks promising, but otherwise we don't have a very constructive view on IT even at current levels.
Okay, not very constructive when it comes to IT at current levels as well. But thank you, Ashish. Thank you, Hemant, so much for joining us on the show. There's so much happening. So I think the conversations are seeming to be pretty short today. But that's what is looking like in terms of markets. Let's just quickly pull up Nifty 50 and Bank Nifty on the screens as well and see what's happening there basis the kind of move that we've seen on the Indian rupee. If you just pull up the intraday chart of Nifty 50, we're still trending towards the day's lowest levels. 22,350 is what you're tracking on Nifty 50, and Bank Nifty also further cuts coming in there, 3.6% downtick. 50,350 is what you're trying to track in terms of Bank Nifty as you speak. But moving on, the sugar pack is something which is in focus in today's day of trade. Strong moves were coming in terms of sugar, where it was in a sweet spot where Brazil has gone ahead and cut the exports, and this somewhere benefits India as well, because the pricing is something that comes in favor when you talk about the Indian markets, and two, the export quantum and the quota that sometimes opens up as well for the Indian companies. Atul Chaturvedi, Executive Chairman of Sri Renuka Sugars, joins in. Mr. Chaturvedi, good afternoon and welcome to the show. It's always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, Brazil has said that they will be cutting shipments by almost 14% in 2026-27 season, which starts from April. And the mills are diverting sugarcane to ethanol production post the high energy prices. If you have to look at the entire gamut, how is the sugar industry placed in the current situation of the geopolitical war with what Brazil is doing and other benefits that could be pouring in?
As far as Brazil is concerned, I think it is a little too early to start guessing that their diversion to ethanol is going to be much higher. But having said that, in Brazil, what actually happens is the gasoline prices have still not been revised upwards. In fact, the Petrobras, which is the oil marketing company in that country, has still not increased the diversion, in spite of the fact that the current ethanol parity is closer to about 19 cents as against 15.3 or 15.4 of Chicago. So my take is that logically they should be diverting more sugar towards ethanol, but a lot will depend on what action Petrobras takes. And we must not forget that this is an election year in Brazil as well. So that is why they are still not aggressive in terms of increasing the pain for the consumer. But all said and done, Brazilian crop is quite all right. The cane production seems to be closer to about anything between 600 to 620 million tons. And before the war started, the guesswork was that the production of sugar will be closer to about 40 million tons. Now, with all this happening and with all this petrol prices and crude prices going through the roof, I think a lot of rethinking will have to be done. And from the mill's angle, it definitely makes more sense to divert more towards ethanol than to sugar, for sure. And sugar demand is, in any case, lot muted because the Middle Eastern market is as good as closed for the Brazilians as well, because logistically it's becoming a nightmare. So ultimately they will have to divert more sugar to ethanol for sure. Yeah.
Given the increase in international sugar prices that we are seeing currently, firstly, is this short term or do you expect the prices to remain at the current levels for the entire financial year?
I think that answer should be coming from America, the President of America, or the Israelis. We don't know how long this war is going to last, but if all indications are that it's not going to close any time soon, and if that happens, the pain is going to be much longer than what we are thinking as of today. That's my take. It could be totally different. It all boils down to what action the powers take.
Right. And lastly, just wanted to understand, with this higher prices, are you facing any pressure on cane procurement cost?
As far as India is concerned, India, we get the cane basis FRP, fair and remunerative price. But as it is, the crushing season in India is more or less over and done with, except perhaps some small little crushing taking place in UP. But as far as Maharashtra and Karnataka is concerned, the crushing is over and done with. So whatever is going to be happening, is going to be happening for the next year. And as far as the sugar demand in the country is concerned, we find that the sugar demand in the country is also a lot muted compared to what it used to be in the earlier years. So the prices of sugar definitely in the domestic market are reasonably friendly. So nothing great is happening on the sugar sector as far as India is concerned, except perhaps that now the Prime Minister has given the clarion call of increasing the blending percentage. So that should be positive for the sugar sector going forward.
Okay, so lots brewing there, and this is a sector which is seeing some smart moves in today's session. But thank you, Mr. Chaturvedi, so much for joining us on the show. It's always a pleasure to speak to you. We'll quickly slip into a short break. On the other side, we'll get to the top buy today and not sell tomorrow, but sell on Wednesday kind of picks from the analyst. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful tech guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. On Saturday, outflows.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in
Welcome back to India Market Close on NDTV Profit. Let's go to Amit Goel, who joins in as well, along with Siddharth Khemka from Motilal Oswal. Amit, welcome to the show, and Siddharth, welcome to you as well. With the kind of cuts that we are seeing in terms of where the markets go, you have the rupee, which is at record low levels. Your bond yields have actually crossed that 7% mark already. Amit, what are markets telling you right now? What would you be watching out for from a Wednesday perspective, because tomorrow is a holiday?
Yeah. So it's always a little tricky to go into the trade, especially with a very short-term view. When our markets are closed and the world markets are, dancing to the tunes of a different type of a president in the US. So having said that, if I would to still look at the broader markets are definitely weak. And from a technical standpoint, they are at extreme oversold levels on most of the indices, or rather all the indices, on even the daily and weekly time frames. So from a medium term to long term perspective, this is a definite signal to start accumulating at these levels, because if you read the data, if you look at the data, there has been strong evidence. There is strong evidence to suggest that from here onwards, the market can post a recovery in the medium term perspective. But primarily, if you were to speak of Wednesday, it looks a little weak, and one could look at building up some shorts as well from a short-term trading perspective. I do have a call on DMart as a buy today, sell DTST sort of a call. If allowed, if you want, I could take you through that.
Okay. So that's with regards to individual stocks you should be watching out for. But let's quickly cut into the press conference which is ongoing, where Aparna Sharma, Additional Secretary, Department of Fertilizers, is briefing with regards to the situation on the back of the war.
61 लाख टन हुई थी. अभी हमारे पास एडिक्वेट स्टॉक अवेलेबल हैं इन कंपैरिजन टू लास्ट ईयर. ओवरऑल स्टॉक एज ऑन डेट दैट वी हैव इज 180 LMT, जो कि पिछले साल 147 लाख टन थे. तो हमारी इससे पता चल रहा है हमारी जो स्टॉक्स हैं वो काफ़ी अच्छी उसकी स्थिति है. अप्रैल और महीने के जो महीने हैं, अप्रैल और मई के जो महीने हैं उनमें हमारे लीन मंथ होता है एग्रीकल्चर का, और यूजुअली हम इसको स्टॉक बिल्डअप करने के लिए यूज़ करते हैं. इसी को मद्देनज़र देखते हुए हमने काफ़ी इंपोर्ट्स लाइनअप ऑलरेडी कर दिए थे. डोमेस्टिक प्रोडक्शन के बारे में जो गैस सप्लाई है जो हमारी प्रभावित हुई थी 60% हो गई थी, जो धीरे धीरे बढ़ के 65 हुई और अब 80% तक हो गई है, जो कि हमने एम्पावर्ड पूल मैनेजमेंट कमेटी के माध्यम से हमने स्पॉट बेसिस पे टेंडर किए और हमें हमारा अच्छा प्रोडक्शन 80% तक हो गया है सभी यूरिया यूनिट्स में. कोई भी यूरिया यूनिट जो इससे जो थोड़ी देर के लिए शटडाउन हुए भी थे, जो कि एनुअल शटडाउन होता है उनका, वो वापस उन सभी को गैस सप्लाई शुरू हो गई है. और जहाँ तक सल्फ़र या और इंटरमीडिएट की उपलब्धता है, हमारे विभाग ने सभी ऑयल रिफाइनरीज को डायरेक्शंस दी है कि सल्फ़र या और इससे संबंधित कुछ भी इंटरमीडिएट है उसकी पूरी सप्लाई करें. इसी के साथ विभाग ने लॉन्ग टर्म टेंडर, ग्लोबल टेंडर से पहले ही हमने डाइवर्सिफिकेशन ऑफ सोर्सेज का एक हमारी एक्सरसाइज जो कि पिछले कुछ एक साल से चल रही है और तेज़ गति पे है. हमारे डिपार्टमेंट में एक टास्क ग्रुप सेटअप हुआ है जो कि ग्लोबल अवेलेबिलिटी और पोटेंशियल सप्लाई सोर्सेज फॉर फर्टिलाइज़र इंक्लूडिंग यूरिया के बारे में हमें जानकारी दे रहा है समय समय पे. और मेजर जो हमारे सप्लायर्स हैं यूरिया, DAP, उन सब के साथ हम बहुत क्लोज कांटेक्ट में हैं, जिससे कि हमारे मेजर टेंडर्स के थ्रू या स्पॉट टेंडर्स के थ्रू या
Okay, so clearly indicating that April usually is a lean month, and this is the time when the government uses to build up stock as well. Up to 80% production has been achieved in urea units due to the spot tenders that saw an uptick, and all oil refineries have been directed to supply sulfur and other intermediates to the industry as well. And the task group that is set up in this Department of Fertilizers, they are working on diversification of resources. You are seeing, some of these stocks react from the day's highs as well, some mild correction coming in terms of where fertilizer companies are concerned. But Siddharth, let me come to you, with the kind of situation that we are in, we're talking about there could be a potential disruption when it comes to fertilizers. As of now, stockpiles are quite enough is what the government is indicating. Your view when it comes to fertilizer companies?
So yeah, Hiral, good afternoon. I think the situation, especially the supply chain dynamics, are very unpredictable right now. But a word coming in from the government that they have enough stockpiles, at least for this season, I think that is a good welcome step to allay the fears. And I think we are looking at a big summer before the monsoon starts and before the sowing season starts, so which is where the bulk of the fertilizers will be required. And hopefully before that, if things de-escalate and the supply chain resumes, I think then things will be in a much better shape. But as of now, I think based on the news flows on a daily basis, things could remain volatile, at least in the near term.
Right. The government is signaling a tougher stance on industry compliance. Union Minister Ashwini Vaishnaw has expressed disappointment over lack of support and slow progress from the industry, warning that future approvals and fund disbursals could be at a risk if corrective steps are not taken. Here's what he had to say.
मैं रिपीट कर रहा हूँ
बार बार और मुझे इंडस्ट्री से उतना सपोर्ट नहीं मिल रहा है, इसलिए मैं अपनी नाराज़गी आपके सामने बहुत क्लियरली व्यक्त कर रहा हूँ. I'm not very happy with the progress that the industry has made. You have to make more progress, you have to take more efforts, you have to take the... And these are things for you only. आप सक्सेसफुल होंगे तो देश सक्सेसफुल होगा. आप अगर अच्छा करेंगे तो देश आगे जाएगा और आपको खुद को भी बेनिफिट होगा. सो इसमें आप लोग थोड़ा स्ट्रक्चर्ड एफर्ट लगाइए, अदरवाइज वी विल स्टॉप द फर्दर अप्रूवल्स. आई एम विलिंग टू टेक वेरी हार्श मेजर्स and I don't want to kind of mince any words here. I am willing to stop any further disbursements or approvals if the industry doesn't come up with the commensurate efforts. This is my single message today.
You know, that's a very stern note that's coming in from Ashwini Vaishnav when it comes to participation from companies in the country as well. Siddharth, a quick view when it comes to names like Sirma and Dixon as well as our IFB Industries, because these three are the ones who will benefit from the listed space to some extent. How are you looking at these names?
The entire EMS space, there is a big scare about, again, the same supply chain issues and the raw materials required for making chips, which could see some issues with the supply, especially from the routes from the West Asia getting interrupted, and plus demand for some of these critical consumer durables, that also getting impacted. But on the long-term basis, we are very positive on the entire EMS space, and we believe that that's a structural story with manufacturing picking up pace in India. We like Sirma from a long-term perspective. We are seeing that Sirma is benefiting from the structural shift in its business mix towards high-margin segments such as automotive, industrial, IT, railways. Plus, its exports contribution is rising. And what we are witnessing is over the last few years, Sirma has focused on improving its high complex manufacturing, which is improving order diversification as well as margin expansion. And given the healthy order book, we believe that the company is set to deliver a strong 30% revenue CAGR, and with margins likely to improve, we are expecting a 40-45% net profit CAGR over the next 2-3 years. So within that space, we like Sirma, and any fall due to the current market would be an opportunity for long-term investors to accumulate Sirma. We have a 1-year target price of 1,000 on Sirma.
Not much actually, in fact, when it comes to the Hard on Street segment today, because the market continues to remain quite weak. But few stocks that dealers have highlighted in trade today. Firstly is Prime Focus. The stock continues to gain despite the weakness that we are seeing overall in the market. And dealers are expecting some positive news flow that could come in those counters. So keep an eye out for that for Prime Focus. KEI Industries is one counter where dealers are indicating that management has cut its revenue guidance in a closed group investor call. They have cut the growth guidance or the revenue growth guidance by around 5 percentage points, and that's the reason why we are also seeing this weakness coming in for KEI Industries. And lastly, when it comes to BHEL and Indigo, in the last 1 hour of trade, dealers are indicating that there have been fresh sell flows that have come in for both these counters on the FI desk, that is BHEL and Indigo. Indigo, do remember that on April 1st, we'll see what is the kind of hike that will come in when it comes to ATF prices. So that could be slightly negative for Indigo at this moment. So keep an eye out for BHEL and Indigo as well. And earlier we did indicate about the NSE, the exclusive story that was first highlighted on NDTV Profit, and that is the fact that NSE has taken one more step towards this towards the much awaited IPO of the India's largest stock exchange. They have sent emails to investors who are shareholders in NSE at this point of time, and they are seeking investors in expression of interest whether they want to participate via the OFS route in the IPO or not. So most likely the IPO size is expected to be more than 20,000 crore rupees, and NSE has already appointed nearly 20 bankers for this IPO. So one more step is what NSE has taken towards that, and this means that the IPO could kick off anytime soon. And the last date for any investor or any shareholder in NSE to submit this expression of interest is April 27th. So by then they have to inform NSE whether they want to participate in the IPO or not.
Okay, these are interesting names. Then we'll check all of them with our technical analyst. But before that, let's get in Abhishek Goenka from India Forex and Asset Management. Abhishek, you have the bond yields which have hit that 7% mark. What would that actually mean from here on, and what is it actually indicating?
Hi. So of course, we know that the oil prices are going up, and that's impacting our bond yields, because even though the government have announced there was an expected borrowing for FY27, but still it's relatively elevated. And most likely right now, only because of oil prices and increasing inflation, market is expecting that probably the measures are not adequate, and then yields are going up because of that. So I think it's kind of panic across equity, currency and bonds right now, which is also impacting bonds. But I think RBI does not like the bond yields to go up because it increases overall fiscal of our government, and they would be intervening in the market and doing whatever to ensure that the yields are maintained and does not spike up in an abnormal manner.
Okay. So tell me one thing, what would this actually mean because of that inverse relationship that we see between bond prices and yields? What would it mean for bondholders and debt mutual funds?
Sorry, I missed you.
I'm saying, what would it actually mean for the bondholders and the debt mutual funds when you talk about that inverse relationship now?
No, so obviously the mutual funds which are holding long duration bonds, they would be mark to market in the yields in the overall portfolio. If it goes up, the return that the fund is about to give is going to come down because it's an inverse relationship. And the managers who have taken up all on duration would definitely be hit in the current market. And a lot of these corporate balance sheets also have 10-year bonds, 30-year bonds. And those bonds, since it go up in value, at one point equity is not giving returns. Second time, the bond portfolios are also going to get mark to market there. That's an impact, but bonds which are held for maturity typically would not have impact on maturity. But short term, definitely bank balance sheets would be impacted because there a lot of bonds are holding, and then there would be MTM on those.
Okay, understood. So MTM loss is something that one should be watching out for. But thank you, Abhishek, so much for joining in. Always a pleasure to speak to you as well. Very quickly, 22,350 is what Nifty 50 has already broken in intraday trade as we speak. It is coming back there, but 22,350 is what you're trading at right now in today's session. But as we close the last trading day of FY26, let's also look at how the markets have performed in the last 1 year. Let me head across to Varsha. Varsha, over to you.
Well, you know, we have had a tough year when it comes to FY26, wherein Nifty, if we see, is down almost more than, I would say, 3.5%, with also the broader markets considering mid-cap and small-cap index have also been down more than 4%. So not a very good year, but let's see how sector-wise we have performed. Talking about the momentum actually came from Nifty Metal, Nifty Defense and Nifty Auto, while IT, Realty and FMCG dragged the market down. Talking about Nifty PSU was up 3.6%, PSU Bank was up 3%, Nifty Bank, if you see, is down 1.4%. Pharma, media and FMCG, if you see, was down ranging from 6.8% to 13.4%. But let's also look at the top gainers and losers. I would say that's an interesting point there. In the Nifty, if I were to talk about, you have BEL, Shriram Finance and SBI were the standout gainers when it comes to Nifty 50, while Trent, TCS and Wipro saw the sharpest cut. So overall, if you see, Trent was down 37% in the last 1 year, TCS is down almost 34%, and Wipro is down almost 30% in the last 1 year. ITC down 28%, and Tata Motors is down almost 25%. Talking about mid-caps, mid-cap was actually led by GE Vernova, Nalco and Hitachi Energy, and also, but KPIT and Syngene International, if I were to talk about, fell the most. Talking about KPIT Tech is down almost 50%, Syngene is down 42%, and Hexatechware is down almost 38%. And UCO Bank and Godrej Industries followed all those, companies. Now, talking about small caps, you have Ather, you have Force Motors and MCX, which has given a huge returns ranging from 163% to 128%, while Hindustan Copper and GMDC were up 121% and 113% respectively. But Cohen's Life, Reliance Infra, Blue Jet Healthcare fell the most when it comes to small cap losers, which was followed by Nugent Soft and Ola Electric. Talking about commodities, where silver, if I were to talk about, was the star, doubling in a year, of course, with strong gains coming from gold and crude as well. Talking about globally, if you see, Japan's Nikkei was the best performing major index when it comes to the global indices, while US market, if I were to talk about, posted steady double-digit returns. So overall, yes, not a good year for Indian stock market when it comes to Nifty, and of course the broader market. Let's see how FY27 will pan out for most.
Okay, thank you for that, in fact, Varsha, because this is going to be interesting. But the other sector that we need to watch out for is with regards to where the auto pack goes now. The auto sector will start reporting numbers as well on the 1st. Now, in terms of what we're watching out for, the demand trend seems to be supportive across segments. The two-wheelers have closed FY26 on a firm footing as well, and the PV momentum is expected to remain intact. It's the GST sentiment which has lifted the CV. Rate cut has lifted the CV sentiment, and the early festive season boost has been observed when it comes to tractor sales as well. So if you see in terms of numbers, we're expecting good year-on-year growth. Only it's Hyundai which is seeing a negative growth from the PV space, but M&M, Maruti, Tata Motors, all of them in that range of 14 to 28% on a year-on-year basis. Apart from that, if you see in terms of CVs as well, a good 10 to 20% kind of growth is what is spread between Ashok Leyland VECV as well as Tata Motors CV. And very lastly, if you see the two-wheeler space, that is also going to be interesting to watch out for, where you're looking at Bajaj Auto, TVS, Hero, Eicher, all seeing growth in that range of 10 to 30%. TVS 30-31% is the kind of uptake that is expected. So that quick view when it comes to the auto numbers that will be trickling in. Any trade there?
So yeah, Irel, I think within the EVs, within the auto space, what we like is the domestic themes of two-wheelers where the EV penetration is pretty strong. So TVS Motors is something which is on top of our recommendation list, followed by the passenger vehicles as well as the tractor side. So M&M is the other stock that we like. I think CV cycle was witnessing some recovery, but with the fuel prices going up, the supply chain issues, and I think economic question on the economic growth, the CV cycle could see some delay in recovery. So an Ashok Leyland or a Tata Motors CV, I think that is something one needs to wait and watch for. But in this correction, two stocks particularly that we like is TVS Motors and M&M.
Amit, coming to you, Nifty Bank is one of the top sectoral loser in trade, and this pressure is largely led by PSU banks in trade. Anything that you're finding attractive at the current levels that you would want to enter?
I would not want to enter in this free fall because most of these public sector banks, which were with strong gains some time back, have given up and broken through their key support levels. So I would wait for some sort of a consolidation in the overall index, in the overall markets, before picking up any of the banks from a pure trading and a short-term perspective, because they could be a very strong whipsaw on either side and taking up our stop losses. So my recommendation would be to be a little circumspect and not enter into any of the public sector banks at the moment.
Okay, so an HDFC Bank seeing a mild recovery from the day's lowest levels as we speak. But in fact, let me thank both our guests, Amit as well as Siddharth, so much for joining in. Always a pleasure to speak to you, and enjoy your holiday tomorrow as well. But clearly, in terms of close, we are looking at a closure below that 22,400 mark, with cuts of nearly 2% coming in there. Bank Nifty as well, 3.6%, absolutely steady from where we started off an hour back. Broader markets, the cuts have deepened at 2.7% in terms of where the mid-cap index goes, as well as the small-cap index also, which is down in a similar fashion. Let's pull up the advanced decline chart as well, because that will tell you what's happened to the advances versus the declines. It has broadened quite a bit from where we started off to where we are ending right now, and that is what is indicated when you look at the VIX as well. Let's just pull up the VIX because the volatility was quite high as we saw in today's session, the kind of gyrations that did come in. If you can just pull up India VIX on the screens, there you go. 3.6%. It has eased, which is slightly comfortable at the way we are ending in today. Let's look at the heat map in terms of Nifty 50, and then we'll quickly look at the contributors to see where that moved. Clearly, few of the other companies which came in the positive is a Reliance Industries, which is pretty okay, which did support to some extent. But Hindalco, Coal India, Tech Mahindra also, which was in the negative, has come into the positive. But major pressure continues from the financials. Your NBFCs, your banks are the ones which put pressure from a Bajaj Finance, SBI, Kotak, Geo Financial Services, and a Shriram Finance. Let's just quickly look at the contributors on Nifty 50 as well to just see the pressure points. There you go. HDFC, SBI, ICICI, your three major banking heavyweights on the back of the RBI move to curtail the rupee depreciation, and that has what has impacted the markets in today's session. No major support coming in. So clearly, the volumes are weak. It was expiry today as well. So you are seeing that truncated weak effect coming in terms of volumes in the markets as well. But absolutely, a dismal day of trade is what everyone has watched out for in today's day. The question is going to be, how will this geopolitical move actually continue to impact the Indian markets from here on? Tomorrow is a holiday. Wednesday opening is going to be the crucial one to watch out for. But completely out of time. With that, it's a wrap on this edition of India Market Closed on NDTV Profit. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have fared today first. So viewers, Monday mayhem grips the Lal Street as markets see sharp cuts. The Nifty ends nearly 2% lower while the Sensex slips by about 1,500 points. The pain is much deeper in the broader markets with Nifty Mid-Cap 250 and Small Cap 250 tumbling close to 3% each. And looking at the sectoral picture now, it's showing no signs of relief as all the sectors have ended the day in red. Financials have dragged the most, PSU Bank ending as the top sectoral loser. And March has proven to be brutal for equities, with Nifty slumping over 11%, its worst month since 2020, and also extending the losses to a fourth straight month. And broad-based selling has hit the mid-caps, small caps, and all the sectors led by sharp cuts in the PSU banks and realty. Let's now look at how April, in fact, has traditionally, shaped up for the markets. April carries a strong seasonal track record, especially for mid-caps and also small caps, which have largely ended the month in the green over the past decade. And sectorally, autos, metals, and real estate, and also pharma tend to outperform, while the IT remains, IT remains the clear laggard here. And the stock level also names like JSW Steel, SRF, M&M, Godrej Properties, and also Aurobindo Pharma have delivered, solid April gains. Historically, if we look at even stocks like Infosys and Alchem Labs struggle to keep the pace. In fact, let's look at rupee now, which has slipped to a fresh record low, reaching the 95 to $1 mark for the first time. And this move comes amid heightened global uncertainty and also sustained pressure from geopolitics and also strong dollar. While the central bank remains watchful, currency markets stay volatile and the rupee continues to trade on the weaker side. And viewers, banks are seeing some relief from the RBI over its new $100 million net open position cap in the forex market. Lenders have asked for 3 months' time to wind down the large dollar positions and also want the rule to apply prospectively. Bankers warn the move could hit fourth quarter income and profitability, even as the RBI says the curbs are aimed at stabilizing the rupee amid recent volatility. And Seagull India is in focus today as its arm wins a fresh highway order from NHAI. The company receives a letter of award for a 6-lane spur road project in Punjab valued at around 600 crores. The project is scheduled to be completed in about 18 months and also includes a 15-year maintenance contract. Next stock in focus is Eicher Motors as Royal Enfield expand its Guerrilla 450 range. So the company has launched the Guerrilla 450 Apex, which is a sportier version of the motorcycle with sharper styling and also more aggressive riding posture. The new variant is priced between 2.5 and 2.6 lakhs. Next counter in focus is Dredging Corporation of India, which is laying out an aggressive growth roadmap. The company has said that it aims to triple the revenues from FY25 levels and also double the annual turnover to about 3,000 crore rupees over the next 5 to 10 years. And the strategy focuses on higher value dredging and reclamation work, expansion into the niche segments like inland waterways, overseas opportunities, and also major fleet modernization push to lift the capacity and also productivity. Next counter in focus is RailTel. After it has received a letter of intent worth about 440 crores from the Center for E-Governance, the company is selected as a system integrator for Kisman 3.0, which is a Karnataka statewide area network project. And this project aims to modernize and also overhaul Karnataka's digital network and is also scheduled to be completed by March 2031. Next counter in focus is Gujarat Fluorochemicals. Its arm GFCL EV has raised about $80 million from a global marquee investor, taking the total funding to around $130 million. and this follows an earlier $50 million of investment from the IFC. So the company now plans to use the funds to scale up the battery materials manufacturing, and also has lined up a 6,000 crore of investment over the next 4 to 5 years to really support the growth in electric mobility. And US paint stocks are in focus as distributors flag another round of price hikes. Berger Paints announces its second price increase in a month, with prices set to rise by 5 to 10% from April 9. And now this follows the first phase of hikes that kicked in from March 25th. So Asian Paints is also hiking prices in 2 phases in April, while other paint makers, they may follow amid higher raw material costs and also supply disruptions linked to the Middle East crisis. And there's a big push coming in for India's defense sector. The Defense Acquisition Council clears defense orders worth about 2.4 lakh crores, covering the Army, Air Force, and also Coast Guard. So the approvals include air defense systems, ammunition, artillery guns, communication equipment, and also surveillance drones. So the government also clears 2 smaller contracts, a missile system deal, and also an aircraft servicing with Boeing India Defense, as it steps up the efforts to strengthen capability and also cut the import dependence. And where sugar stocks are in a sweet spot as global supply tightens. Brazil, which is the world's largest sugar exporter, is set to cut shipments in the new season as mills divert more cane towards ethanol amid high energy prices. And this is pushing the global sugar prices higher and also turning the spotlight on companies. So stocks like Dwarke Sugar, Mavana Sugar, and Sri Renuka Sugar see strong buying, while Balrampur Chini and Triveni Engineering also attracting interest. And viewers, aluminium stocks are rallying on fresh supply fears from the Middle East. So, 2 key Middle East producers are hit by Iranian attacks, raising concerns over the global supply disruptions. And Emirates Global Aluminium reports significant damage, while Aluminium Bahrain is assessing the impact. So, with the region accounting for nearly 9% of global aluminium supply, prices are firming up, lifting the stocks like Hindalco, Nalco, and Vedanta, and also Rain Industries. In fact, KNR Construction is in focus after it secures a fresh order from NHAI. The company has received a letter of award worth about 1,700 crores for a 4-lane highway project spanning roughly about 80 kilometers. And the project has a construction period of around 2 years. And this is followed by a 15-year operation phase, adding long-term visibility to the revenues. So KNR's order book now remains healthy at nearly 8,900 crores as of December quarter. Next counter in focus is Urban Company, which is seeing breakout growth in its Insta Health vertical. So the platform now clocks over 1 million bookings a month, with daily orders touching around 50,000 in February, making it the fastest scaling segment. So Insta Health offers quick turnaround services like cleaning, dishwashing, laundry, and cooking, with fulfillment in just 10 to 15 minutes. So Morgan Stanley says that growth remains strong, though near-term losses are rising, even as the long-term path to break even stays intact. Next counter in focus is NTPC. After its board clears a major investment push, the company approves about 5,800 crores for a battery energy storage system with a total capacity of nearly 5 gigawatt hours. So NTPC also approves additional equity infusion into Major Urja Nigam, which is its joint venture with Uttar Pradesh government. And for the next phase of the major thermal power project, with this, NTPC's total equity commitment to the JV touches around 5,000 crore rupees. Next counter in focus is Thermax, as its arm secures a large boiler package order worth about 1,600 crores from Anupur Power Project. So this order is for an 800 megawatt ultra super critical thermal power plant, and Thermax will handle manufacturing, supply, and also oversee the installation and also commissioning. So management remains confident and reiterates that it is bullish on orders, highlighting strong demand momentum. Now, talking about FY26 viewers, Indian markets have delivered a choppy, stock specific here. So benchmarks have slipped nearly 3%, dragged by IT, FMCG and realty, while metals, autos and defense have outperformed. Leadership has stayed narrow, as PSUs and commodities have surged. Meanwhile, broader markets have seen extreme dispersion. Commodity prices and also select global indices remain resilient overall. And the government is actively working to minimize the impact of rising aviation turbine fuel prices on airlines and also passengers from the next month. Now, top government sources have told NDTV Profit that higher crude oil prices will push up the ATF cost, and also the centre is in discussions with all the stakeholders to find solutions. So the Aviation Ministry will reach out to states urging them to reduce VAT on ATF, and Aviation Minister is likely to write to Chief Ministers, while the Ministry will also write to State Finance Departments. Special focus is on states like Maharashtra and also Delhi, where ATF prices at metro airports are already higher. So the government is also considering relief for passengers by lowering certain airport charges, and also will hold discussions with the airport operators to review the levies. And viewers, the Lok Sabha has passed the Insolvency and Bankruptcy Code Amendment Bill 2025. So the bill introduces 12 key changes to the IBC, including measures to speed up the admission of the insolvency resolution applications. Finance Minister Nirmala Sitharaman has credited the IBC for significantly strengthening the banking sector by improving the recovery of the non-performing assets. And she said that more than half of the NPAs have been recovered through the insolvency process, and companies coming out of the resolution are showing better performance and also governance. So this is the 7th amendment to the IBC since its enactment in 2016, and the bill is expected to make the resolution process faster and much more efficient. Because the government has allowed the distribution of superior kerosene oil under the public distribution system in 21 states and union territories. Now, these include Delhi, Uttar Pradesh, Gujarat and Rajasthan. So the decision, effective immediately, comes in view of the prevailing geopolitical situation affecting the global energy supplies. Now, kerosene had earlier been phased out in these areas under normal policy. So the Ministry of Petroleum and Natural Gas has permitted the designated fuel stations in these kerosene-free areas to store and sell, for household cooking and also lighting, needs. So up to 2 fuel stations per district can stock up to 5,000 litres, and this arrangement will remain valid for 60 days or until further orders. And the Ministry of Electronics and Information Technology has approved 75 applications under the Electronics Components Manufacturing Scheme, that is the ECMS. So the approved projects have a combined investment of over 61,671 crores, which is exceeding the scheme's target of 59,350 crores. So the key beneficiaries include Dixon Display with 1,100 crores for display module sub-assembly, and also Sirma Strategic Electronics with 588 crores for laminates and flexible PCBs. So other major players such as Loham Cleantech and also Indomim and Vishay Components have also received approvals, and the scheme also aims to build a strong domestic ecosystem for electronics components manufacturing and also reduce the import dependence. So this development is expected to boost the local production and also create jobs in the sector. And the Finance Ministry has flagged rising transaction failures in the UPI ecosystem and has asked the NPCI to step in and also review the performance of the banks. So the ministry is particularly concerned about the higher failure rates at smaller banks amid sharp surge in the UPI transaction volumes. So NPCI will now review the individual bank performance and also recommend corrective actions, including infrastructure upgrades and also better load management during peak hours. So the government views reducing the UPI failures as critical to maintain the user trust and also support wider adoption of digital payments, especially in semi-urban and rural areas. Now, banks have been asked to work closely with the NPCI to improve the success rates. And the National Stock Exchange has approached its existing shareholders to participate in the offer for sale as part of its upcoming IPO. Now, NSE, which has around 191,000 of shareholders, they've sent expression of interest forms seeking their willingness to sell the shares in the OFS. Now, the IPO will consist entirely of an offer for sale with no fresh issue component. Now, shareholders must have held shares continuously since June 15 of 2025 with fully paid up and also unencumbered shares to be eligible. Now, NSE will review the EOIs and also finalize the eligible participants. Now, the exchange plans to file its draft red herring prospectus with SEBI by the end of May or early June 2026, and participating shareholders will not be allowed to buy shares in the IPO, and also remaining pre-IPO shares will also face a 6-month lock-in period. And India's Chinese AI company DeepSeek has experienced its longest outage since launch, as its popular chatbot remained down for over 7 hours. And the major outage started in the early hours of Monday and also lasted 7 hours and 13 minutes. Users have reported repeated server busy messages and also complete unavailability of the service. And this marks the biggest disruption for DeepSeek, which gained massive popularity earlier this year as a low-cost alternative to Western AI models. Now let's look at some national news viewers. Bihar Chief Minister Nitish Kumar, the state's longest serving CM, has resigned from the Bihar Legislative Council, and he has submitted his resignation today along with another JDU member, Nitin Nabin. And this move comes after Kumar was elected to be Rajya Sabha, person on March 16. And under the constitution, a person elected to the parliament must resign from the state legislature within 14 days. Now, Nitish Kumar had filed his Rajya Sabha nomination earlier in the presence of Union Home Minister Amit Shah. So JDU leaders described the resignation as a constitutional requirement and also said that it will not lead to any sort of immediate change in Bihar's leadership. And a senior Maoist leader, Chelluri Narayan Rao, alias Suresh, has surrendered after spending 36 years underground. And he was a central committee member of the CPI Maoist and also secretary of the Andhra-Odisha Border Special Zonal Committee. So Rao has surrendered along with 8 other Maoist cadres in Vijayawada, Andhra Pradesh today. So the group laid down 19 weapons before the Andhra Pradesh DGP. Under the state's surrender policy, Rao will receive 25 lakh rupees, while the others will get between 1 to 5 lakh rupees each. And police has said that Maoist activity in Andhra Pradesh has now been reduced to 0. And an 854-page inquiry report on the Ghatkopar hoarding collapse in Mumbai that killed 17 people has held several officials responsible for the gross negligence. And the committee has primarily blamed then Railway Police Commissioner IPS officer Kesar Khalid and also retired BMC License Inspector Sunil Dalvi. Now, the report also holds the hoarding company owner Bhavesh Bhinde and also former Railway Police Commissioner Ravindra Shisve accountable. So according to the findings, the officials have acted in collusion and also illegally granted permission for the oversized hoarding in complete disregard of the safety rules. So the report has been tabled in the Maharashtra State Legislature. And as the Middle East conflict enters its day 30th, Iran has confirmed the death of senior Revolutionary Guards naval commander Ali Reza Tangsiri. So he succumbed to severe injuries from an Israeli airstrike days earlier in Bandar Abbas. So Tangsiri, who's a hardliner, responsible for operations near the Strait of Hormuz, was one of the highest-ranking Iranian officials killed in the conflict. And the US and Israel continue airstrikes on Iranian targets, while Iran has carried out retaliatory attacks on Israel and Gulf states, and also the death toll now has crossed 3,000. So the Houthis have now entered the conflict by launching missiles at Israel, raising fears of renewed attacks on shipping in the Bab el-Mandeb Strait, which is a critical route for 12% of global trade. And Pakistan has offered to host talks between the United States and Iran to help end the ongoing month-long conflict. Foreign Minister Ishaq Dar has said that both the sides have expressed confidence in Pakistan to facilitate the meaningful dialogue in the coming days. The announcement follows a quiet diplomacy and also meetings with envoys from Turkey, Egypt and Saudi Arabia. So, however, Iran has issued strong warnings with its parliament speaker saying that US ground troops would be set on fire if they enter the region. Iran has rejected a US 15-point ceasefire proposal and also prepared its own 5-point counter proposal. And viewers, World Trade Organization talks at the 14th Ministerial Conference in Cameroon have ended without a deal to extend the long-standing moratorium, on customs duty on electronic transmissions and the e-commerce tariff ban in place since 1998 and also renewed every 2 years will now expire at the end of March 2026. So efforts by the United States and others to secure a longer or permanent extension has failed due to lack of consensus and also time constraints. Now, WTO Director General has said that unfinished business could be taken up in Geneva. Business groups have warned that the lapse, risks creating policy uncertainty and also new tariff barriers on digital services, which now account for a significant portion of global services exports. And India is tightening its security framework with new rules set to ban the sale of Chinese CCTV cameras in the country from next month. So the move is aimed at addressing surveillance and also data security concerns with stricter norms for sourcing and also deployment. Now, companies will now have to comply with revised standards, marking a significant shift for the surveillance equipment market. And thieves have stolen a truck carrying 12 tons of Kit Kat chocolate bars in Europe. Now, the shipment containing over 4,13,000 bars of Nestlé's new F1 line was en route from a factory in central Italy to Poland when it was stolen on March 26. So, this truck and its contents remain missing. Nestlé has confirmed that it is working closely with police and also supply chain partners to investigate the incident. And the company has said the consumer safety is not affected and supply remains stable for now. Those shortages are possible ahead of Easter. And viewers, let's look at some sports news now. Pakistan pacer Shaheen Afridi is facing tough questions after a ball tampering controversy with former cricketer Ramiz Raja openly criticizing the incident. So this episode has sparked debate over discipline and conduct on the field, putting the spotlight on player accountability. So Afridi's response and any further action will now be closely watched. He was penalized with 5 runs penalty. And Rohit Sharma is turning back the clock with a blazing half-century in the clash against KKR. The former India T20I captain, now a one-format international player after retiring from T20Is 2 years ago, carved out a sensational innings in Mumbai season opener. Not only did he register the fastest IPL 50 of his career, but he also went past one of Virat Kohli's most elite records in the tournament. And viewers, with that, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. Social Your Tech Show.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Market feels the strain of Middle East war remains volatile in the month of March. Nifty falls more than 11% in March. Nifty closes in red for the fourth consecutive month. Worst monthly performance for Nifty since COVID in 2020. It's the worst performing fiscal year for rupee in over a decade as the last day of trading ends for this financial year. Rupee hits a record low of 95 rupees 11 paise against the US dollar. Rupee continues to slide despite RBI's $100 million cap on banks' overnight dollar exposure. Middle East war sparks crude volatility. Brent surges above $115 a barrel. WTI crude crosses $100 per barrel as war enters fifth week. Lok Sabha passes the Insolvency and Bankruptcy Code Amendment Bill 2025. Finance Minister Nirmala Sitharaman credits code for strengthening banking sector, framework for group insolvency and cross-border cases proposed. In a sharp warning to India's electronics manufacturing industry, Union Minister Ashwini Vaishnav says that government may halt approvals for component PLI under ECMS as electronics industry falls short on design Six Sigma standards. Government weighs measures to cushion impact of rising jet fuel prices according to sources. The Civil Aviation Ministry is holding talks with key government stakeholders to prevent a significant increase in airfares. Amid war in Middle East, centers move to address LPG shortage concerns. Government gives nod for kerosene sale at select petrol pumps for 60 days in 21 states. Government cracks down on UPI transaction failures. According to Finance Ministry sources, NPCI told to step in and review banks' performance to reduce failures. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and straight away to the flashes on your screens. It's a big set of numbers when it showcases the macro data really coming in. So February IIP data is out. Industrial output rises 5.2% versus the estimate of a little over 4%. Industrial output rises 5.2% versus 4.8% that it had seen in the month of January. Now, electricity production, that rises 2.3% YOY. Mining production rises 3.1% on a YOY basis. So there is a substantial increase when we look at the mining sector increase when it comes to the industrial production. When we talk about the manufacturing sector, the output growth at 6% versus 2.8% YOY. So these are important increases that are seen in the manufacturing sector as well. Industrial output rises 5.2% versus the estimate of 4.2% that was seen. So these are the numbers really flashing on your screens. Industrial output rises 5.2% versus 4.8% in the previous month. These are important figures. It showcases the industrial production as well as also the health of the economy. Let's take it straight across to some of the experts to put some insight into the numbers that are really flashing on our screens. Gaurav Sengupta, Chief Economist at IDFC First Bank, and Vivek Kumar, who's the economist at Quantico Research. They both join us here on NDTV Profit. Vivek and Gaurav, it's a pleasure speaking to you on NDTV Profit. Gaurav, first, your thoughts on the IIP data and the headline figures.
It's a good number. It's better than our expectation, and it's also quite it's spread broad base. It's across sectors. We've seen manufacturing, intermediate good production pick up. There was an expectation that electricity production should pick up. You're having a slightly warmer season, and also this particular month was not impacted by any of the supply side disruptions. But the data just shows that the Indian economy was on a very strong pick up in terms of domestic growth recovery, which was taking place since the second half of FY26, and it's aided by substantial support from the monetary policy side, with RBI policy easing, liquidity infusion, then the GST cuts, which has helped the consumer side. So, and the reflection on better production data is also visible. At least till the month of February, we had seen broad-based pickup, not just the IIP, but other indicators also, like freight movement, etc. Even the consumption indicators for the month of February were showing very strong pickup in urban rural demand. So better than expected. It showed that the growth momentum, at least till February, had held up. We'll have to now watch out for the month of March, where we could see some impact of the West Asia crisis, the higher input costs, some restrictions on the usage of supply of gas, especially for commercial utilization, and its potential impact on production activity for the month of March. But the data showed that at least before the crisis, the growth momentum was on a strong footing.
So Gaurav, that point very well made, that if everything remains calm, our economy has done well, the IIP data has been healthy. But Vivek Kumar, I'll take up from where Gaurav left. It looks like it's a different world altogether when it comes to the Indian economy from what February data shows and what the March data is going to showcase. What are the aspects that you're watching out for, and anything in particular you want to highlight about February data as well?
Thanks, Nisha, for having me on the show. Now, I would say it's completely in line with expectations. We were at 5.4. The actual number is at 5.2, so not surprising at all. Having said, I think this probably is the calm before the storm. So we know that the world changed on the 28th of Feb. And since then, it's been a month almost of the crisis that has been brewing up in the Middle East part of the world. And it is likely to impact us in multiple ways. Now, from a growth perspective, where it's likely to hit us is through two channels of transmission. The first is the direct channel of transmission, where probably most of us will be talking about. It is going to lead us to higher input prices. Input prices will eventually feed into higher output prices, which will depress purchasing power. And then with a decline in purchasing power, decline in consumption growth, your industrial production will itself suffer. So that's the usual channel of transmission. The other channel of transmission, which is very peculiar to this time around, to this particular global shock, is the question of availability. So it's not just price, Nisha, it's also availability. So even if, let's say, India is ready to pay a price of $150 to a barrel, can it secure that supply? Which was not the case with the Russia-Ukraine war. Russia-Ukraine war prices did rise to $110, $120 to a barrel. but the supply issue was not there. So you were able to get that supply. This time around, there is a question mark on the availability of the energy components themselves. So you might see rationing at the industry level. We saw this instance play out in certain quarters in the month of March itself. And with that kind of quantity rationing, you will see industrial growth maybe taking a little bit of a beating. Now, whether it plays out in the month of March or not in terms of data, we are not entirely sure about that. But if things were to persist, it is definitely going to show up in from April data onwards. So to sum up, two channels of transmission for industrial data. One is through the usual price channel, and the second one, which is very peculiar this time around, is via the quantity channel, where you might see quantity restrictions getting imposed by the government, depending upon which industry it wants to prioritize in these telling times.
All right. So, Vivek, you made your point very clear. And of course, it's uncertain times. But Gaura, anything you are penciling in this whole month of run-up, and now the month is almost over, on how and what are the concerns that could start trickling in the very first month of the numbers, when next time the IIP numbers as well as other macro factors really start emerging?
I think the IIP may not capture it, because what will happen in the month of March, domestic indigenous energy production would have gone up, because the government of India has been trying to substitute the scarcity on the imports front with domestic petroleum production. Plus, you will have a much warmer weather, so electricity production, electricity demand will go up. So IIP may not actually look so negative for the month of March. The impact will really, for the month of March, will get captured maybe to a limited extent in company performance, because at least in the month of March, for the majority of the economy, supply side issues have not yet struck. What is striking in the month of March is the input cost pressure, which could show up to an extent in the month for listed company profits. For example, around 50% of listed company expenditure is raw material and fuel costs. So, and month of March is also the highest month in terms of activity. So the IIP may not actually capture a dip for the month of March, but you will see, we'll have to see the value added side of the indicators, how company margins are, with 1 month of impact, especially in the month of March for Q4 profit results. There could be some impact on the export side because of the higher, not just the fact that, let's say 14% of our 14 to 15% of our merchandise exports actually go to the Middle East, but there's also the fact that the higher freight insurance costs. So that itself will make it punitive and there could be some impact, let's say on the import front, where you will see some impact on imports coming in from the Middle Eastern region, and that will show up on your trade data. You'll definitely see a much wider trade deficit for the month of March, just with the Indian crude basket, which is much higher than the Brent, because it is the Middle Eastern crude which has got negatively impacted. So the impact, at least for the month of March, will be caught by the value-added GDP, will be caught by trade, is already getting captured by capital flows. In terms of actual growth, volume impact,
a lot of those factors, and our rupee depreciation and crude oil spike, all of that will really add up in that deficit as well. So yes, lots of uncertainties, but as far as IIP data for the month of February is concerned, both our experts are united in the view that it had been healthy, and of course many uncertainties that would be captured in months to come, lest the war really continues. Thank you so much, Vivek and Gaurav, for joining us on this IIP data numbers and the first reactions coming in on that. But let's talk about the big story of the day amid the war-driven turmoil that we are seeing. Let's take a look at how the market performance has been. Remember, Nifty 50, that plunged over 11% in March, marking its fourth straight month of losses. This was the index's worst monthly performance since the COVID crash in 2020 that we had seen. The pain wasn't limited to frontline stocks. Remember, even broader markets really mirrored the sharp decline as well. My colleague breaks down the numbers and the entire market action. Puneet is here.
Well, it was a an unfortunate end in that sense for today's market session, which was the last of the month, the last of the financial year as well, and you saw consistent pressure throughout the day today. Now, one of the major news flows was led by the RBI measure on the bank, which was limiting essentially the purchases that they had, and hence because of that, you've seen a consistent pressure on the banking index. The likes of HDFC, ICICI, Axis Bank, Kotak Mahindra Bank, all were down today, and that impact was seen in the Nifty 50 as well. You've also seen spaces that have done well. The likes of Nifty Auto also sell out in today's trading session. So the Nifty Metal continued to be the leading gainer today with some strong gains, but barring that, consistent decline seen across players. You've also seen the small cap 250 down over 2%. So Autumn Investment as well as Valor Estate were the top losers in today's trading session. Autumn Infra was down almost 11% in today's trading session yet again. But when you look at the mid cap, also a very similar performance, down 2.5% in today's trading session. You've seen pressure on Apar Industries, Union Bank, and the PSU Bank sell-off continues. Canara Bank also was down 4.5% to 5% in today's trading session. What is interesting though at this point of time has been how the Nifty Metal has continued to perform and continued to be a strength of the markets, but the Realty Index, the Nifty IT, continues to be weakened. The Nifty Realty is the top sectoral loser for this year, down 22% for FY26, 20% down is the Nifty IT. But hopefully for tomorrow will be a market holiday, but when you come back on the 1st of April, hopefully the auto sales will be a key factor to watch. Momentum is expected to be strong in March, but because of the volatility seen across, because of the Israel-Iran war, you continue to look at individual stocks and spaces, and hopefully the auto pack can revive a better year for FY27 year on.
All right, markets really bracing up for FY27 trade. Thanks so much, Puneet, for getting us all the market action and a roundup for the last fiscal. It's the last trading day of this financial year. Now, the rupee has slipped past the 95 mark against the dollar for the first time ever, hitting a record low despite, remember, RBI's intervention. This is the worst performing financial year in terms of percentage for rupee in over a decade, remember. Now, the pressure continues to build from rising crude prices, also global uncertainty and persistent foreign outflows. So what's really driving this particular sharp move in the currency? Let's listen in to what Dheeraj Nim has to say.
Look, I think this very much reflects that there is strong underlying demand. It's not just speculative activity that was pushing the rupee weaker, but looking at where oil prices are, of course, there would be strong corporate hedging demand and even real demand for real-time trade flows. So I think this opportunity that came after the NOP revised guidelines and when the rupee USD INR dropped gave a good opportunity for others to sort of buy in. My sense is that if the tensions persist and oil prices do not ease, we could be seeing the rupee heading towards 96 in the near term.
Now, the Reserve Bank of India on Friday issued a directive asking the banks to limit their net open position in the onshore derivable market to $100 million each. Now, this move, remember, is aimed at curbing the depreciation of Indian rupee. Bankers, however, are worried that the move will really dent their Q4 profitability. Piyush Shukla, our banking correspondent, tells us why.
We have heard that banks have sought a 3-month timeline for this rule to be implemented. Most of these tenures of these securities is within the 1 to 3 month period, and that is why they're saying give us 3 months to wind down our positions. And also they have mentioned how this will dent their profitability. Bankers are asking the RBI, please, that you should make this directive applicable from a prospective basis, not a retrospective basis as well. They did meet with RBI official, the large bank treasury officials met with RBI on Saturday conveying some of these concerns. Now, we have learned from sources that large banks have upwards of $250 to $300 million of exposures in such market, and now they will have to wind down their positions before April 10 as per the RBI directive. Previously, the RBI had allowed banks to park 25% of their overall Tier 1 capital in such markets. RBI essentially introduced these directive to curb the rupee, which fell to the level of 94.84 on Friday.
All right. Thanks so much, Piyush, for getting us all those details. Earlier today, we also spoke to Lakshmi Iyer, who is the Group President, Investments and CEO at Bajaj Alternate Investment Management, about what this RBI move really holds in this volatile market and what are the implications. Listen in.
Every time with the markets, whether it's the currency markets or the bond markets or the equity markets, I think they stretch and go on extremes. There has to be some sort of a catalyst, typically by the regulator or the policy makers. And I think this is no such exception to that kind of a scenario. I do completely agree that the move has definitely caught everyone by surprise. But just imagine if each one of us were in the role of a central banker or the policy maker, what choices do we have? And I think that is exactly, this is one of such, I would say, arsenal from the war chest that we are seeing. And you know, the rupee is shouting through its lungs. If you compare it with the rest of the world, it is saying, "Ghayal hu isliye ghatak hu." So what choice does RBI have?
All right, a very dramatic commentary and insight coming in from Lakshmi Iyer on the RBI's move on rupee to arrest the fall of rupee. All right, moving on, Lok Sabha has passed the Insolvency and Bankruptcy Code, or IBC Amendment Bill 2025, aiming to make the resolution process more efficient and transparent. Now, Finance Minister Nirmala Sitharaman said that the IBC has already emerged as a critical tool for banks, with commercial lenders recovering over 1.04 lakh crore rupees, of which more than half has come through the code. Now, here's the Finance Minister detailing the proposed changes. Listen in.
This bill replaces the underutilized fast-track process. That is essentially the CIRP with reduced timeline for small companies. So the fast-track process, which was not being utilized fully, is now with a new creditor-initiated insolvency framework featuring out-of-court settlements, initiations, debtor in possession and creditor in control model. Earlier, it was more creditor in control alone. Now, debtor will be still sitting in the board and running his company. The creditor-initiated insolvency framework enables this process.
All right, on the changes to IBC code, and that was Finance Minister. Now, crude oil prices, they have kicked off the week on a very strong note. Not a good news for India, with Brent really holding above $115 a barrel and WTI moving past the $100 mark, and levels that we last saw during the early phase, remember, of the Ukraine war. Now, the surge is largely being driven by the rising tensions in the Middle East conflict, now stretching into its 5th week running and no clear resolution in sight. What's really adding to the nervousness is the involvement of Iran-backed Houthi militants who have launched missile attacks on Israel and signaled more strikes ahead, including the potential threats to key oil routes and infrastructure. At the same time, increased US troop deployments are really raising concerns of a prolonged escalation, and that's what is worrying the global market, especially, remember, around critical supply choke points like the Strait of Hormuz. Now, with crude already up sharply over the past month, well, the markets are clearly pricing in geopolitical risk, and volatility is likely to stay elevated for now. So that was the full roundup of what crude has been up to and how it's also putting pressure on the Indian markets as well as rupee. Now, the government is sharpening its push on electronic self-reliance with fresh approvals under the Electronics Components Manufacturing Scheme, or ECMS. Now, the IT Ministry has really cleared 75 applications with key players like Dixon, Sirma, also Loham Cleantech and Indomim leading this particular particular investment wave. Now, the broader aim is to build a strong domestic component ecosystem, cut the import dependence, and integrate India deeper into the global supply chains. But here's the key caveat. Well, the future approvals and incentive payouts will increasingly depend on the indigenous design and also higher local value addition, signaling a shift from assembly to true manufacturing depth. Let's now listen in to the Union Minister Ashwini Vaishnav on this particular development.
मैं रिपीट कर रहा हूँ बार बार और मुझे इंडस्ट्री से उतना सपोर्ट नहीं मिल रहा है, इसलिए मैं अपनी नाराजगी आपके सामने बहुत क्लियरली व्यक्त कर रहा हूँ. I'm not very happy with the progress that the industry has made. You have to make more progress, you have to take more efforts, you have to take the... And these are things for you only. आप सक्सेसफुल होंगे तो देश सक्सेसफुल होगा. आप अगर अच्छा करेंगे तो देश आगे जाएगा और आपको खुद को भी बेनिफिट होगा. सो इसमें आप लोग थोड़ा स्ट्रक्चर्ड एफर्ट लगाइए, अदरवाइज वी विल स्टॉप द फर्दर अप्रूवल्स. सो आई एम विलिंग टू टेक वेरी हार्श मेजर्स and I don't want to kind of mince any words here. I am willing to stop any further disbursements or approvals if the industry doesn't come up with the commensurate efforts. This is my single message today.
And as crude surge hits the ATF prices, remember, Aviation Ministry is in talks with all the stakeholders to ease the pressure. Danish, my colleague, has exclusive details on that.
Well, top government sources exclusively told NDTV Profit that the Aviation Ministry will soon get in touch with states, and they will get in touch in order to recommend the states to reduce the VAT on ATF. The central government has already factored in that there will be a hike in ATF prices from the 1st of April, and this is all because of the movement that we're seeing in the international crude oil prices, which is going to translate into a pressure for airline companies also on passengers. But in order to ensure that the end user, and by that I mean the passengers, have to face really little pressure, that is why the central government will request states to reduce VAT on ATF. Besides this, sources are also telling NDTV Profit that the government will also try to speak to airports and other airlines to ensure that other kind of charges which are applicable on tickets, if they can be reduced temporarily, so that the pressure of the extra ATF prices cannot impact ticket prices much. So all in all, if we see, top government sources telling NDTV Profit that the central government is trying to speak to all stakeholders to ensure that the overall effect on ATF on the end user is to the minimal.
All right, so that's exclusive coming in from my colleague Danish, a very important story in today's times. With that, all that we have for this edition of Profit 360. But stay tuned to NDTV Profit. Lots of news and updates on the other side. Thanks so much.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings
Hello and welcome back to NDTV Profit. You're watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put focus on that one company that is on our radar today. We've seen broader market correction, but Nifty Realty as a space has been hit the hardest, and hence a company from that index, a company in the real estate space, and we're talking about Marathon Nextgen, a Mumbai-focused real estate developer, largely residential as well as commercial projects is what they operate, with the portfolio spanning across the affordable, premium, luxury as well as the commercial and the retail space. So you get the whole gambit with this particular company. Did turn net debt free as of Q3 of FY26 with a very interesting QIP that the company did of almost 900 crores raised back in June and July. That has had an impact on the shareholding of the company, and we'll get to that, one of the parameters, in just a bit. But a 5-year profit CAGR of almost 43% has been quite strong at this point of time, given the post-COVID rush as well as sustenance of the same as well. Profit have also expanded consistently post FY22, as I mentioned, and one of the biggest aspects was the merger of Marathon Nextgen Township, which is effective of FY25, and hence there's a lot more to talk to the company about this. When you look at the primary products portfolio of Marathon Nextgen, though, the residential as well as the development as well as the affordable and premium housing is what the company operates in. So that has been a space that they want to earn, and it's very evenly balanced. In terms of some of the key projects though, Monte South in Baikala, the Next Zone in Panvel, which is a big, huge township that the company is developing, as well as Neo Homes in Bhandup are some of the exposure that the company has in the MMR region, and that's Mumbai Metropolitan Residential Region for those who are new to this space. So this has been where you've had a decent uptick essentially in land costs as well as the price per square feet, and all these companies benefit from that. Amongst the other key project has been the Nirvana collection that the company launched back in November of 2025 at Panvel, almost a 600 crore gross developmental value, which essentially means the development potential of that particular land parcel. Amongst the segments where I've spoken about, revenue has been 60% or majority of that coming in from the residential space. You've seen roughly realization of almost 18,000 rupees per square feet. But look at the revenue mix for commercial as well, because you see a higher realization there. So 40% coming in from this aspect. And while it's not as stable as a residential project might be, given that you could go out and sell out a number of projects within a particular span of time, you might have to deal with renters amongst others. The realization makes up for it at this point of time. Now, very importantly is, and as I spoke about, the diversification, right? Commercial segment drives the higher realization as well as margin stability. But when you look at the diversified product mix, because of the townships in Panvel as well as projects in Bhandop, the affordable residential portion has now come to almost 30%. Now that's the blue bar down at the bottom. You are seeing roughly 24% come from the mid-size residential, and the commercial, which we spoke about a higher realization, is almost 26% of the company's revenue, with almost 20% coming in from the luxury space, where the company actually started out in Lower Parel, where they have a major commercial mix. So hence the realization and the meat of the margins comes from those commercial businesses. But in terms of the affordable side and the residential township side that the company has done, it's coming in from this residential side, which is almost 60% of the revenue. Move on and look at the key rating parameters now, because we have been talking about how important it is for a company like Marathon to give us some perspective on the income statement, balance sheet and cash flow as well. Now, you would be seeing that volatility across years for some of the key real estate makers, and hence what I would urge you to look at is the historical time frame that we're presenting, because those 3 years give you that perspective much better than that individual time frame as well. We'll also look at return ratios at this point of time. Along with that, look at the shareholding, which I've mentioned would change a little bit post the QIP. Street cred has been something that you and me are well versed with in terms of valuations, as well as stock price that it has been impacted. Put some focus there as well as the operational metrics over the last 3 years, what have been the company's period at this point of time. The next part has been the first parameter that we look at, and that's income statement. Now, when you look at FY24 to 25, you see that variance I was talking about, but the 3-year CAGR, both for revenue, its EBITDA as well as profitability, has been quite decent, especially on the bottom line. So a 70% CAGR from the FY23 levels. We have hence given this company a thumbs up at this point of time. But the Q3 also a very, very interesting time, because you saw that impact coming in for Q3. Labor code was a big impact. So you've seen profits dip by almost 33%, and so has the EBITDA, with a marginal growth in terms of revenue. So in Q3, the company's booking number was also in the lower side, and hence the margins hit the lowest, which it has been, but has been consistent at the 30% range, and hence a lot more to go for the company at this point of time. In terms of the balance sheet, that has been the other aspect. Share capital is largely reduced, but the increase of reserves from 762 crores all the way up to 1100 crores gives the confidence in terms of what the company's strategy has been in the long term, while the total equity has also seen a substantial increase because of the reserves at this point of time. We continue to monitor the company's borrowing, and they have gotten net debt free as of this. So you are seeing a 560 crore number as of FY25. That's literally become zero for the company because of the QIP, and this was something that they had spoken about over the last couple of quarters in conference calls. The net debt free was one of their agendas and now has been achieved. Cash in bank has also remained quite stable at about 100 crores, and hence a thumbs up that we have given to Marathon Nextgen also on this particular parameter. So that's 2 in 2. Does the cash flow give us that perspective also is the other key aspect I want to focus on, because cash flow from operations as well as is one of the major drivers from profitability as well, and here is where the variance of the company is. So in FY25, because there was the negative CFO, and it's largely also basis of what the company has been investing, you see that operations to PAT number largely been missing from here. But the company has been, in terms of the net cash flow, got back to the positive net cash flow trajectory, But because there has been that variance, a lot of new projects coming in on stream in FY27 amongst others. Hence, we've given this a neutral rating for now. A lot more to watch out for, essentially at this point of time for Marathon Nextgen within the cash flow side of things, and hence a neutral rating for now. Look at the return ratios though, and that gives you another perspective. It's better to look at a whole 3-year CAGR. 13 to 14% is a decent number for a real estate company, as well as amongst other sectors that we look at. Of course, a much better improvement from FY21 levels, but within this time frame, and hence given this neutral rating for now, yet again has been the other factor in terms of sustenance of that and improvement from this. ROE is the other factor, very decent of between 16 to 18%, and hence while the ROC might be a little lower at this point of time, you would expect a lot of investment made in townships amongst others, and hence a neutral rating on the return parameters as well. Shareholding is the other key factor. We've consistently highlighted that because of the QIP, you will see a big difference between the promoter shareholding between March as well as December. But what's interesting is the increase in foreign investments as well as domestic investors substantially between those 3 quarters, and a lot of that QIP effect you see across the parameter now. A 24% shareholding from the public is also giving you that confidence that retail investors have bought into the story. So for that, as well as the promoter maintaining about a 50% share, we have given this company a thumbs up. Future debt raises will be something to watch out for, because one more raise of equity will dilute this number further, as well as for the existing shareholders as well. So continue to monitor shareholding, but for now, given the historical evidence that we have, we've given this a thumbs up. Look at the street cred though, and here is where we've been talking about the disappointment that across the space, because of the Israel-Iran war, has started to hamper the company's share price performance. Amongst other key factors, along with Nifty Realty, has been the other key impending impact of down almost 31%. 1-year return is down almost 21%, but the 5-year return for the company, though up 5x, still the near-term underperformance has been quite constrained. And now with FY26 almost over, with the company yet to report Q4, you're seeing debt being pared down, and hence this could be a very interesting play going into FY27, and we'll quiz the management on that too. Valuations is the other factor. As for real estate, we try to look at the EV by EBITDA metric for these companies. You've seen roughly a 17 to 18% metric for a lot of these companies trading in that valuation. So Marathon, of course, Sri Lotus, a recent listing, while the Nifty Realty as a whole also trades at roughly around 20 times. So you're seeing Suntech also trading at almost 22 times EV by EBITDA. This one, of course, is something to watch out for. So it's not extremely expensive, and giving the correction gets you into a lucrative factor. Finally, in terms of operational metrics, that is the other factor. We've consistently highlighted that the area sold by the company has consistently increased. So has the booking value. Will remain stable in FY25, but is yet to jump in back again in FY26. Pardon me. And collection been quite decent as well. Given this a neutral rating for now, to get some more perspective from the management in terms of the booking values, that will be something to watch out for in FY26, because we have seen the 3-quarter numbers has been quite decent as well. But go back to look at some of the key parameters as well as which we've spoken about, highlighting that the financial performance gives some perspective for income statement, which is a thumbs up for now. We've also given a thumbs up on the balance sheet, while cash flow and return ratios gives you a neutral rating for now. In terms of what we've seen the company's shareholding post the QIP, there has been a change in structure, a thumbs up here as well. Street credit, like the other real estate companies, has been down, so we'll continue to monitor that. But valuations as well as operation metrics give you some more confidence at this point of time. So overall, when you pull up the ratings, the company is trading at 5 out of 8 of the ratings for KYC right here on NDTV Profit. But important to get some perspective now from the management. Mayur Shah, the Vice Chairman of Marathon Nextgen Realty Limited, is now joining us to give us exactly that. Mr. Shah, a very good morning to you, sir. Thanks so much for joining in right here at NDTV Profit. My name is Puneet. Just the first question, right? Because we've seen Marathon transition continue to maintain in terms of the luxury space, and now going into affordable housing as well. Give us some perspective of the company's strategy to have and go into townships at this point of time, and in terms of how that would change your financials, if any perspective, to start us off.
Good morning. Marathon has always been looking at a very balanced portfolio in every cycle of the project cycle, particularly luxury, commercial, outskirt township, and affordable segment within Mumbai. So we've been balancing that portfolio for quite some time, and going further also, we would like to balance it because we are seeing a very strong push of infrastructure by the government in almost all the across Mumbai MMR, and we feel that luxury as well as affordable and outskirts, including commercial within city, is going to do very well in the next 3 to 5 years.
So how would you see the change? So because we did pull out, Mr. Shah, the change between the metrics. So affordable continues to be at almost 30% of your portfolio. Residential is almost, the mid-size residential is almost 24%. Commercial is almost 26%. So how would that mix change with the townships coming in? Do you feel that the overall residential metrics close to 60% will increase slightly over the next few years?
Yes, but see, it depends on the cycle of the project also. Many times you have commercial projects start reflecting at the end of the project because it's all sold in a ready inventory kind of a thing. So we'll be starting building a new commercial inventory in the next year and next 2 to 3 years. So more or less this would balance will be similar to what you are seeing right now on the screen because of the affordable housing in the outskirts where our portfolio Panvel is doing very well, and we really want to really increase that portfolio to some extent and also the Bhandu where we have SRA portfolio that also contributes towards affordable. These two, affordable housing has a very ROI is very high, and the sales velocity is much better than the luxury, which we have seen over the period of the time. So, we keep tweaking this, balance between the portfolios which we have in our own micro markets.
So, two key questions now, Mr. Shah, from what you said, that you will be looking to rebuild your commercial portfolio yet again in the next 2 to 3 years because a lot of your legacy commercial portfolio in Lower Parel has been doing very well, that your average realization also quite high. Where can we expect in terms of this commercial properties to come in? Will that be largely in the outskirts as you mentioned, or will that be in these spaces where your realization has been quite high because it is a very competitive market there? So what would be the strategy be there for the commercial portfolio? Which kind of areas would you want to be targeting at this point of time?
So we'll be targeting commercial portfolio. A major portfolio will be within the city.
Okay.
We're looking at a central Mumbai type of development, very similar to our Marathon Future X type of location. We are also having like Millennium project, which is on the Mulund, on the next to touching to the metro station. So that type of inventory where within the city a good office space, small business space are also in demand. And thirdly, in the outskirts, we are looking at Nextgen. We are doing close to 1 lakh square feet of retail space of the completed. The phase 1 and phase 2 is already completed. Phase 3, we are looking at a large retail component in the 5 lakh square feet development. So we, office, retail kind of a combination which would like to create for the next cycle.
And Mr. Shah, you also mentioned about how within your residential portfolio, your affordable portfolio also has a very high ROI. Your return on investment is quite high. The sales velocity is quite high. But what we've seen in the last 2 to 3 years has been that the luxury side of the portfolio for amongst the other listed real estate players also has been quite strong. The collections have been quite strong, has been quite robust as well. So when you talk about affordable over the next couple of years going through, is your strategy that you want to address areas where there is a higher potential of first-time buyers coming into areas where it's still untapped, because that's been something that the market hasn't yet rewarded yet in that sense, if you know what I mean, in terms of stock price performance, because the luxury one, much more stable in that sense. So could you give us some perspective for this rationale?
So luxury will continue. See, for our Monte South ongoing project, where we have already done Tower A and Tower B. Now we are already constructing in a very high speed the Tower C, which is 400 units. And we have a portfolio of a Tower D, another 1600 crore kind of inventory. So as and when we have scope available, we are again going to jump into a luxury residential. Even Tower C upper floor between 35 to 64 floors are yet to be launched during this year. So you will see luxury on a similar pace coming into our portfolio of the realization.
Okay, got that view, Mr. Shah. So you also had raised the 900 crore QIP in the last year. Roughly 340 crores was for debt reduction, which is now hampered. And so many congratulations for that, because you wanted to pay that off very quickly. Talk to us about the rest of the amount. What was that was, of course, for newer investments into new properties. Has that already been done? So is that 900 crores already utilized?
Yeah, for the debt part, as you rightly pointed out, it is already been utilized. The balance we are infusing as per our QIP statement into our ongoing projects. But we have set aside 300 crore for the new acquisition, which result we have been negotiating with various projects of redevelopment, JD, and all those things in particularly South and Central Mumbai, and a high value kind of a realization should be more than 40,000 square feet on carpet. We are looking at only those markets, and there you will see during this year we'll be announcing at least 3 to 4 very big projects to add into our GDV.
So is there any target? Because the follow-up question, of course, would be on your return on capital employed, right? Because your ROEs are quite strong. Because you're holding so much cash in your portfolio right now in your company, you are seeing the 13 to 14% range largely maintained until last year. So could we expect that deployment of 300 crores to happen in FY27, and hence any target ROC that you are maintaining over the next couple of years?
Yeah, see, thing is, the deployment of the funds are depending on the projects acquired, and then it goes through the cycle of approval and all. So we are very confident that within the next 1.5 years, we should be able to deploy the entire fund which we have now, as per the projects which are under negotiation. And definitely, you'll see those announcements. We are looking at least 4,000 crore of GDV to be newly added during this span of 12 to 18 months by way of these new acquisition projects.
So 4,000 crores gross development value over the next 12 to 18 months, got that view. How much of that would be coming in from your Panvel landscape as well? Because you've seen a new airport come in Mumbai, that's also coming in Navi Mumbai. And hence all those around areas, as well as CM Devendra Fadnavis talking about the Naina city coming in. So as a third Mumbai in that sense, you have almost 200 acres of land there. Could you give us some perspective of the development of the same, as well as a rough timeline of what could be the expectation, and how much of this 4,000 crores will include land parcels from there as well?
So for the Panvel phase 3 of the next zone, roughly 600 crore has already been launched, and that is under progress. The Nirvana collection, which we already going through. For the Mumbai 3.0, there are very big plans of infrastructure development, particularly in our land bank, Panvel to Karjat rail connectivity, which is going on in a very high pace. And we expect that by 27 or latest by 28, we will have a local train going through Panvel to Karjat. And those stops of, Chikle, Mope, all those where these are the land bank which we are having, will be really accessible for something, similar happened between Kalyan and Ambernath, something like that. The development will take a very high pace. As on today, we are looking at some of the land bank coming into the development in 18 to 24 months by way of villa and plotted development. That is what we'll be focusing initially. But however, once this infra has been fully developed. Like we have Sea already operational. Airport Namia is already coming up full way. Some connectivity between the two airport, high-speed rail is also coming up, and all these infra which is been planned in a big way. I think will really bring these lands into a development in a fast manner.
Got it. So a lot of those, public infrastructure connectivity projects is something that you will take advantage of. Got that point. Mr. Shah, the way you're talking, it just feels like you want to stay in MMR. So would that be a safe assessment that you're not looking to diversify out of this region for now, given the potential that you have also on realization and growth? Would that be a fair assessment?
Yes, very much. Because we at Marathon treat Mumbai as almost 19 to 20 different micro markets. And if you look at MMR's sale data for the last year, almost 34% of all India sales happened in Mumbai MMR region. Almost 1.6 lakh units are sold in Mumbai MMR. And if you look at even the inventory, is only 20 months inventory remaining. So, with huge infrastructure push, if you recollect today morning only, government has announced a very big push of, transferring almost 80,000 acre to the MMRDA region to push 3 lakh crores of infra projects, where, 300 kilometers of metro, multimodal, all entire coastal ring road, and all outskirts area to be very well within 45 to 50 minutes to the central Mumbai is something which has been the vision of the government. And with this in mind, I think nowhere in the world such kind of a huge infra push is happening. So we would really like to be taking advantage of all our land bank situated whether in Panvel, Dombivli, Bhandup. All these land bank will be much better utilized within the Mumbai. And we really feel Mumbai MMR is going to be growing faster than all other cities.
Well, Mr. Shah, we'll have to leave it at that. Thanks so much for joining in. A lot more questions on cash flow amongst others probably in our next chat. But hopefully, best of luck for your quarter 4 results. Look forward to our next conversation. But thank you for joining us today.
Thank you. Thank you very much for having me.
Well, that was Marathon Nextgen. A lot more, in the next 12 to 18 months, almost 4,000 crores of gross development value to watch out for. But viewers, that's the end of this time of KYC. Stay tuned. A lot more action on the other side right here on NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raishna Sehgal. On Saturday, How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, one of the fallouts of the crisis in West Asia that has captured so much of our mind space in the recent past has been the performance of the bond markets and the fact that bond yields the world over have been going higher. Now, this is because the market as a whole, and I'm talking about globally, not just here in India, is pricing in the possibility of higher inflation. And when inflation goes up, usually central banks the world over have to step in and curb that inflation, and they do this by increasing interest rates. This is something that is resulting in a rise in bond yields in India as well. But let's talk about the various factors at play, whether this is a short-term phenomenon, and what changes for you in your investment portfolio and otherwise. Nasir Salim, who is Managing Director at Flexi Capital, joining me right now. Nasir, thanks so much for taking the time. The thesis that I provided is a pretty overarching thesis, right? What else is at play right now?
Good afternoon, Alex. Great to be back on NDTV 24 Profit. To your question, I think the timing couldn't be better. India's 10-year G-Sec, Alex, is now around 6.9 to 6.95%, the highest level since mid of 2024, I must tell your viewers. And over the last 12 months, yields are up 30-35 basis points. Now, there are multiple reasons why this is happening, Alex. I think, one of the first and foremost is heavy government borrowing, right? If you look at large central plus state government issuances, those have increased bond supply, especially in the 5 to 10-year tenors. And I would say, if you look at the yield curve, very simply, this is the belly part of the yield curve, which actually pushes a lot of money for capex. So and government borrowings, both at center and state. So one is that's a very, very important reason why we see yields going up. The other one, of course, is global factors, Alex. Elevated US Treasury yields. India can't be different from the rest of the world, right? We all interconnected somewhere or the other. Geopolitical tensions and crude oil prices now continue to rise, and therefore raise inflation. That's a raw material for all inflation, right? Raw material costs will start shooting up because of the oil prices going up. And then there's fiscal risks for India, which has already been mentioned now because of import bills rising on account of oil. So I think these are some of the most leading triggers, which will make sure that yields will continue to rise. And one very, very important point, Alex, is country risk and premium, right? I think, rupee weakness and foreign investor sensitivity. We've seen the dollar appreciating against the rupee. Usually it appreciates by about 3 to 3.5% the last 20-year average. The last 5 to 6 months has been a higher percentage. And that's also because foreign investor sensitivity have added to term premium at the long end. So again, rupee weakness, FI money moving out is also aiding to some of these. So therefore, bond yields are rising not because RBI is tightening it, but because markets are pricing in, Alex, higher borrowing, global uncertainty, and fiscal realities.
Okay, that's a good way of putting it. It's a tough question to answer, which is this likely to reverse if there is a resolution in the Gulf region? Because see, the reason why risk assets globally are facing the kind of pressure that they are is because people are unable to breach that uncertainty right now. And so therefore the question is similar for bond yields as well. But how does it change somebody's investment philosophy in the near to medium term, Nasir?
So two important questions. I think to your first part of the question, will it reverse? We don't see that happening over the next 3 to 6 months. Pressures can remain, will continue because of whatever oil supply glut that has been hit. Things will not normalize in the next 90 days. I'm assuming there will be some pressures which will continue. So it's 3 to 6 month pain. The second part of your question is what do we do? from an investment perspective. So Alex, clearly, I think the immediate impact is short-term pain. I would say short-term pain and long-term gain, because what will happen is that it has a negative impact. Investors who have invested their money in long-duration bonds or debt funds, by and large, their mark-to-market NAV volatility will continue. Right? That's why I said short-term pain. Gilt funds and certain other category Government of India listed, investors where they put in money in Government of India bonds, long duration bonds, those will get negatively impacted, right? Existing bond portfolios, there are many investors who invest their money looking for an asset allocation model where they have fixed income as a play in their portfolio. Temporary capital erosion when yields rise. That's always the case, because bond prices and yields move inversely, Alex. So rising yields mean interim NAV pressure or pricing on the bonds that you bought, right? So that will continue. Short-term pain will continue.
Short-term pain will continue. So it's a bit of a double whammy on some hybrid schemes, right? Because you have equity that is underperformed, and you have now pressure on bonds as well. It's the perfect storm for your investment portfolio, isn't it, Nasir? Because there's equity under pressure. If you were holding long duration bonds, then you're losing capital there. And gold is underperformed over the course of this conflict as well. So nothing is doing well.
So, very good point there, Alex. I think what I would tell all your viewers is, as far as the investor positioning is concerned, look, rising yields hurt portfolios on paper today, right? It's always today. But improve the return math for money invested now. Basically what it's saying is that one is existing investors will get temporarily hit. But on the other hand, investors also have an opportunity. There's the other side of it also, right? And the other side is that existing will get hurt, but if you have additional surplus, if you have some more asset allocation available in your portfolio in terms of liquidity, then investors today can lock in into much higher yields than that was available 2 to 3 years ago, Alex. So for long-term investors, rising yields are actually, or offer, if I can say so, better entry points. So look, it's not always, there are always two sides of the coin, but it has its own positive implications, as I told you, which many investors may not want to miss in risk.
Okay. So then let me ask you this, Nasser, with regard to how I should use this to my advantage. Is there a way for me to do that at this point? Because if I have to, just from a conceptual standpoint, lock in higher yields, there is a product like that in the industry, right? And I'm not talking about fixed deposits, I'm talking about target maturity funds, which is that there is an ETF-like product and I can buy in at today's level and I can hold to maturity or potentially even sell if bond yields come off. Is that something to seriously consider?
Very well said, Alex. Absolutely. I think, SEBI and the AMFI, the regulators have been pushing asset managers to evolve, right, in terms of products. So today there is a very popular category. Earlier it was fixed maturity plans, which had locked in. This is target maturity funds, very relevant right now, Alex. And why TMFs would rather, the short form is target maturity funds, make sense in the current environment is very, very simple. Number one, it offers visibility of returns. Returns tend to converge to portfolio yields if held till maturity. So today, if you're getting a bond to higher yield, you can lock in, as we rightly discussed. Lower interest rate risk compared to open-ended duration funds. They invest, target maturity funds usually invest in GSECs, state development loans, PSU bonds, which have high credit quality. You're not taking too much of risk on the credit part of the portfolio. I think ideal when yields are elevated and volatile, Alex, because that's when we need to get into them. So they are best suited for goal-based investors. Typically, you have 3 to 5 to 7 to 10 years. So 3 to 5 years of good, decent goal which an investor may have. These can be used there. Conservative to moderate risk profile. Somebody who's not very aggressive from an asset allocation perspective needs to cover his conservative to moderate part of the portfolio. Use this as an opportunity, subject to your own risk profiles. Investors who don't want to time interest rate cycles. There are a lot of investors we know who want to get in, get out, depending on the interest rate scenario, what is playing out at that point of time, which end of the yield curve you are in. This kind of overlooks any of those, and it's insulated from that perspective, right? So again, target maturity funds today are like that tax-efficient product available, which are market-linked. They're not linked to, markets, like any capital market, because it's fixed income at the end of the day. And if you match one's maturity of the target maturity funds with your end goal or objective, so if, for example, in 3 years I need to buy a house, for example, and I'm planning for it, one can put in lock-in yields in a TMF today, target maturity fund, lock in that yield to make sure that by 2029, that money is available, which is also matured with the end objective of the goal to be met. So I think that is something which can be used very efficiently.
Okay, so and this is, it involves a more direct approach to managing your portfolio than you would otherwise do. Like for example, if you were to go for a dynamic bond fund, which allows a pretty much blank canvas to a fund manager to choose where on the yield curve they want to place the money. What are the pros and cons of the latter? And this is effectively the last question that I have for you. So between TMF, which is target maturity, and dynamic bond fund.
So again, both very different risk profiles as a start, I would say, Alex. So let's look at the pros first from dynamic bond funds. I think those fund managers, actively can adjust duration. Why they call it dynamic is because, depending on where you are in the interest rate and the yield curve, you can take positions accordingly. You as in the fund manager in this case. And it can benefit if yields sharply fall, right? Again, inverse relationship between yields and interest rates and bond prices, so you can get benefit of that. In terms of the current context, Alex, I think performance highly manager dependent, right? The performance is purely highly manager dependent, fund manager dependent. Timing rates correctly is difficult even for professionals, right? Timing it very difficult, so you can use this as an opportunity and can deliver unpredictable outcomes during volatile rate cycles, which we're going through right now, because a lot is dependent. There's a lot of news flow, which is making sure the yields are very, very volatile, Alex, as we know. So who can consider them? As I told you, target maturity is conservative to moderate risk profiles. In this particular case, somebody who's has a higher risk tolerance, longer holding periods clearly, right, Alex, as against TMF. You have a desired goal there here, longer time periods, very, very critical. And then somebody who understands, volatility, so somebody who's comfortable with NAV volatility. On the weekend, yields could have gone up. Monday morning, you wake up, you see your target maturity portfolios, they will be lesser impacted, but dynamic bond funds will be higher impacted. And that might worry you. So again, those are very, very clinical approaches, and they're both different risk profiles broadly. But clearly, the clear takeaway is rising yields is equal to short-term noise, Alex, and therefore long-term opportunity. Debt investors, ideally, or fixed income investors should shift from, chasing rates to goal matching. That is the broad perspective here.
Okay, yeah, and it's a good perspective to have. Nasir, on that note, thanks so much for taking the time. Pleasure speaking with you.
Likewise. Thank you very much, Alex.
All right, let's take this conversation forward with somebody who understands how mutual funds manage their fixed income strategy. I'm joined by Mahindra Jaju, who is now whole-time director at Quant Mutual Fund. Mahindra, thanks so much for taking the time. And help us understand from your lens, what has taken the 10-year government bond yield to 6.9%. Some were arguing, even heading into the conflict, that our bond yields were slightly higher than they should have been because of the way that fund flows have moved. But with this conflict and the sensitivity, I guess, that India has to crude oil prices, we've seen it move quite considerably higher.
Yeah, so I think if you look at the last June monetary policy, where there was a 50 basis points rate cut, and the Reserve Bank said that most of the accommodation that is possible has been upfronted. Since then, the bond yields have been rising up a little bit, although they have been largely trading in the range of around 6.5% for a long time. But now, in the last 1 month, especially after the new situation in the Middle East, there is obviously a concern on not only the price of the oil, but also the availability of the oil. Now, it is only just about 3 weeks that the war has been there, and therefore, so far the supply has not been affected, although we saw a scare on the LPG availability front, and some of the restaurants had to cut down on the menu for the time being. So I think there are 3 concerns that the market is facing right now in so far as the fixed income is concerned. One is the possible impact on the currency and on the fiscal deficit and on the inflation. If the oil prices continue to remain high, the oil prices are already above $100. They have moved up from about $65 at the bottom to now consistently above $100. The government had already relaxed the excise duty for the oil marketing companies, so it doesn't change the petrol pump prices for the retail customer, but for the government, the fiscal deficit will go up by roughly say about between 60 to 75,000 crores, according to different estimates by different analysts. Now, that is a combination which obviously makes a case for a higher yield for the fixed income products. Then accordingly, the 10-year yield has gone closer to 7%. It's within the range of 7%, which is a very critical mark insofar as the 10-year yield is concerned. And then, in the last 6 months, the Reserve Bank have done massive open market operations, which had provided a little bit of support to the yield curve. And, in spite of the Reserve Bank conducting such massive open market operations, the bond yields were still not, inclined to come down. And that was also partly because the global bond yields have also gone up. We are seeing a trend of steepening yield curve across the globe. So 10-year yield in US is now back to close to 4.5%. So let's say between 435, 440. It is expected that the central banks across the globe may be, forced to review their current accommodative or neutral monetary policy stance. So I think there is a case for the 10-year yield or the yield curve generally to move up given the changed situation.
Got it. So, therefore, the follow-up question is, and we're going to see a monetary policy in the next week or so, right? Or 8th of April is when we will see the outcome come through. Do you think that sooner rather than later, our central bank, which ultimately is an inflation-targeting central bank, will also have to contemplate increase in the interest rates? Are we done at all levels with monetary easing, even here in India?
So I think it is too early to take that call, because be realistic. Right now, there is a lot of stress in the situation because of the Middle East war situation. And there are already, efforts for an end to the war. Over the last weekend, we have seen both US and Iran repeatedly hint at a possible stage of negotiation. So if everything settles down quickly, then possibly we go back to the status quo. Although I would say that given the current news flow, that is a very optimistic scenario, and it doesn't look like that things will completely resolve themselves. It is a possible that there is a de-escalation for the time being, but I think it's unlikely that everything will go back to normal very quickly, and therefore the overhang will remain. Now, as far as India is concerned, it is too early to say that the interest rates will have to be reversed, because our inflation is still very low. It's well below the Reserve Bank's target of 4% plus minus 2%. The fiscal deficit so far is in a reasonably good shape. The impact of the reduction in the excise duty on petrol products is right now expected to be somewhere around 0.2 to 0.25% of the GDP. So therefore, nothing alarming as of now. On the other hand, because of the destabilized geopolitical situation, because of the disruption to the trade flow, because of the non-availability of key materials, including the energy resources, it is likely that the economy will slow down significantly. Therefore, the Reserve Bank will have to be very careful in evaluating the balance between the need to increase interest rates versus the need to support the economy. And I think right now there is no clear, reference point or certainty in the atmosphere, because with which we can say with certainty that, okay, let's go to this direction or that direction. Therefore, my expectation is that in the monetary policy that will be announced in the later part of the month of April, I would think that Reserve Bank will continue to maintain the neutral stance. I think they are right now at accommodative stance that may or maybe new. So I think they will maintain the neutral stance, but they will talk about the difficulties that may be posed by the changing situation. But for the moment, they will be on a wait and watch mode and not go for any dramatic change in the monetary policy settings.
Got it. They're actually currently at the neutral stance of monetary policy. But I just want to close by just for a couple of minutes asking you what strategy is appropriate in fixed income right now. And through this rate cutting cycle, and once we reach the lowest point, and after we reach that lowest point, we've not been playing duration, right? So therefore, what is, according to you, the best strategy in fixed income currently?
So, as you rightly pointed out, Alex, in our last interaction, also I had said that it's time to go back to the accrual strategy and not follow a duration orientation strategy. So clearly the yield curves are continuing to steepen, and at this point, the accrual strategy is the right strategy to focus on. People should look at high quality debt instrument which can give a good yield pickup in the shorter end of the curve. There has been a good pickup in the private credit space, in the high yield space, and although there are some concerns right now, especially in regard to the private credit, and there are some global funds which are reported to have
moderated reductions in their funds. I feel that to some extent, Indian credit environment is pretty strong. So some high yield accumulation can be done to bridge the deficit between the expected yield and the low yield that the high quality or the government bonds are offering. And to that extent, I think one can go for a mix of, say, 60-70% exposure to AAA and government bond oriented portfolio, and another 30-40% to high yield but not poor credit quality. High yield does not necessarily mean poor credit quality. A combination of high yield and sovereign and high rated corporate bond, I think, with an approval orientation is the correct ideal strategy in my view at this point in time.
Yeah, absolutely. It's a good point. And there's also the possibility, Mahendra, that if this situation, and hopefully it does get resolved sooner rather than later, then you can have a bit of a fall in bond yields, which would be positive in the short term in any case. But thanks so much for joining in and for giving us that perspective. Always a pleasure having you.
Thank you. Thank you for inviting me today.
My pleasure. My pleasure. All right. Well, that gives you a sense on the fixed income strategy that you can consider employing. Remember to get advice before you jump in whole hog. That brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. This is NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's Saturday? Outlook.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. Presenting the all-knowing, all-powerful Tech.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
wherein we get you a very important voice who looks at the geopolitical situation very, very closely. And we loved the conversation that we had with Mr. James Dorsey from the S. Rajaratnam School of International Studies, and we requested him to come in again and try and give us his assessment of whether things have changed or gotten worse in the last 10 days that we last spoke. James, great having you. Thanks for taking the time out. And that's my question really. Are things looking a lot more opaque than what they were 10 days ago?
I'm not sure they're looking more opaque. I think they're looking more dangerous. You have negotiations or talks being mediated by various parties that really amount to motion without movement, or the dialogue of the deaf. With other words, you have two mutually exclusive maximalist plans on the table, the US 15-point plan and the Iranian 5-point plan. Both parties think that they are winning this war, have very little reason to compromise. And at the same time, you have escalation, the tit for tat between the Iranians, the Israelis, and the Americans when it comes to industrial plants, energy facilities, water facilities, the US military buildup that predicts some form of ground invasion potentially, or in any case, a naval blockade, for example, of Karg Island. All of that doesn't bode well.
James, Hiral on this side. So from what you're saying, does this mean that it's the Gulf states who could actually emerge as the players who could be forcing Iran to rethink their strategy of attempting that increased pressure when it comes to Donald Trump to negotiate from here on?
That's in effect the joker in the deck of cards, if you wish. The Iranian strategy is to increase pain on Israel, increase pain on the Gulf states, increase pain on American consumers, on global energy markets. The Gulf states are a crucial factor in that. if some of the Gulf states, for example, Saudi Arabia or the United Arab Emirates, possibly Bahrain, were to enter the war aggressively, with other words, until now, they have restricted themselves to intercepting Iranian missiles and drones. But if they were actually to aggressively join the fight, then the Iranian calculation falls in the sense that the Gulf states no longer would be pressuring the United States to end the war. They would be, or in any case, to end the war immediately. They would be pressuring the United States to end the war with a definitive result. In other words, either the absolute complete weakening of the Islamic Republic to an extent that it would be very difficult to recover, if not the destruction of the Islamic Republic.
James, in your wisdom, having looked at this for so long, do you believe that the conflict is anywhere close to an end? Because the common folklore of the last 24 hours is that a lot of countries are now doing back-channel talks to try and bring an end to this, because it is in nobody's interest that oil prices stay higher and inflation elevates. So do you believe we are close to the beginning of an end, or is it frankly difficult to say right now?
I think it's difficult to say. Having said that, I think the problem is this. Israel clearly doesn't want to end this war at this point. The Iranians think that time is in their advantage and therefore believe that a prolongation of the war, at least for now, is to their benefit. The one party that would like an out is US President Donald Trump. His problem is that he has boxed himself into a corner in which there is no credible way of declaring victory. And as a result of that, his only strategy has to be an expansion of the war. Well, the one thing I was going to add here, there's a second joker in this, of course, and that is Yemen's Houthi rebels, who have entered the war, so far have only fired missiles and drones at Israel. But if they were to interrupt shipping in the Bab al-Mandab, which essentially links the Suez Canal with the Indian Ocean, then you get a significant broadening of the front. And that could, for example, be a trigger for the Saudis to enter the war, because the Houthis would pose a direct threat to their port of Yanbu, which is on the western side of the Arabian Peninsula, and it makes Saudi Arabia one of the very few, actually one of only 2 Arab states that are able to still export oil despite the closure of the Strait of Hormuz.
Yeah, that's true, and they are hitting records, so I think they would want that open. Let's see what happens there. But James, on social media, a lot of people are citing a 2005 movie and saying that the script looks so similar that in some sense the end game might be that the US in some fashion gets control over the Strait of Hormuz as well, and therefore controls 2 vital points of oil exports in the world: Venezuela, which is a producer, and Strait of Hormuz, which is the route through which oil may flow, and that could actually be a beneficial thing for the US over the long term, and therefore no reason for them to end the war until that motive is achieved. Have you thought about that?
Taking the Strait of Hormuz or wresting control of the Strait of Hormuz from Iran is easier said than done.
Okay.
It's going to have to involve taking or occupying Iranian territory, whether those are islands close to the Strait of Hormuz, whether that's the Iranian shoreline along the Strait of Hormuz. The Iranians are looking forward to that, at least that's what they're saying. They believe that they have a ground advantage, a home advantage, if they're fighting ground troops, US ground troops. Second of all, Iran has a standing army of somewhere between 800,000 and 1 million people. This is a battle-hardened military. Certainly the commanders go back to the Iran-Iraq war. The rank and file will have had experience, or some of the rank and file will have had experience in Syria. And as far as the Iranians are concerned, U.S. grounds on the troop to some degree levels the playing field and allows them to inflict higher casualties on the U.S. And they believe that higher casualties will increase U.S. public opposition to this war.
So James, okay, do you think for Iran right now, victory for them is going to be survival of the Islamic Republic. And if that is the kind of scenario, and if the regime survives, it would probably be a strategic defeat when it comes to US and Israel as well, and Donald Trump in totality.
I think we're past the stage where this is about victory, or this is about regime survival for Iran. The regime has survived. It's survived the decapitation strategy. It's shown that there is regime cohesion. We haven't seen splits in either the US, the military or the political elite. So now it's about securing their leverage in the region, which is a very different goal from regime survival.
So regime survival is not something that should be looked at now. We're way past that. But thank you, James, so much for joining. It's always a pleasure to speak to you, get insights and understand, what it would actually mean from here on and how things have actually changed and developed so far as well.
Getting a very important global voice to try and understand what does he think of the current market situation, what would the global money be thinking about this. Harold van der Linde, Head of Asia Equity Strategy at HSBC, joins in right now with his thoughts. Harold, great having you as always. Thank you so much for taking the time out and being with us.
Thanks for having me on.
First, a broad macro view on Asia at large. One of the beliefs is that during times of geopolitical conflicts, money goes out from a lot of jurisdictions and makes way to the safe haven, which is the US. India has had its worst month, but I think some of the other countries are not too far behind either. Is that what is happening? Money is getting out of all kind of asset classes and floating to safe haven, which is the US?
Yeah, that's exactly what's happening. At least I think so. This morning, somebody asked me, says, where's the money flowing to? And I think it's cash. So people put in cash. If you look in Hong Kong, for example, interest rates have come down. And that's because there's a lot of cash. So what have we seen since the start of the conflict? India is down, but actually there are other markets which are down much more. Korea, Taiwan, Japan, they're down. India is down, depending on which index you look at, say 10%. Korea is down 16, 17%. That is not just because they buy more oil, because India buys oil as well. It's because this is where people were positioned. If you want to reduce your risk in your financial assets, you say, well, I'm going to go into cash and sell my equities. And you sell the equities that you own. And what do foreigners own? They own Korea and Taiwan because that was a story that everybody wanted to invest in. That was the AI story. So we've seen unprecedented sort of volatility in these markets and very substantial outflows. I mean, the total amount of outflows from Asia, from the markets where we have data from, some of the markets we don't have data, so this number understates this. It's about close to $60 billion since the 27th of February when the conflict started. That is almost twice as much as the outflow that we saw during COVID, first months of COVID. So pretty big flows coming out, and I think it goes into cash.
Interesting, Harold. I mean, did I just hear you say that the outflow is close to 60 billion, which could be twice the outflow that happened during COVID? So this is a clear risk off, right? The question, therefore, Harold, is, and I would love to know what you're advising some of your clients as well about this, that if the conflict were to last a bit longer, because God knows Ukraine, Russia started with the same belief that it'll get over in a month and it's lasted 4 years. If this were to last longer, do you reckon that the pace of flows and the quantum of flows could continue as is, or at some point of time that momentum wanes?
Now, I think that initially this can continue because we've seen a lot of inflows, but actually, and the number I gave you is just for the March, 1 month. And then the number for COVID is also for March, it's 1 month. So we've seen in March pretty substantial outflows already. that can continue because it seems the conflict is still in a sort of an ongoing sort of form of escalation, and therefore, if prices continue to go up, that will remain very negative. But at some point in time, we will have to make a step back and say, okay, does this really mean that growth is going to collapse across the region? No, it's going to come down probably, but not collapse. Does it mean that the banking systems cannot function? That's probably not the case either. We're not having a sort of moment that we had in Asia in the late 1990s when the banking systems fell over. So the ability for Asia to withstand this, the economies, but also the markets, is there. But we're not at that point yet, whereby we say this is the time to start to take a look at this. If we work on the assumption that you just gave me, this conflict is going to last longer, then yes, there is initially more outflows from these markets, and people will continue to sell the markets that they bought. And that is mostly North Asia, actually.
Harold, good morning, Hiral this side. So you're saying outflows could continue from here on. Now, if that is the kind of scenario one should be watching out for, and if you have to tie it up to where the valuations stand in terms of the Asian markets, say you look at China, you look at Taiwan, you look at Japan, you look at India, where does India fit according to you in that gamut? And what would you advise investors to do with India? Because you've noted time and again that it's very easy to exit the Indian markets, but the entry point becomes very important yet again.
Yeah, I think for the moment, valuations is not what is very high up on people's sort of thing. If this conflict were to continue, then it's really about where are there pockets of growth that probably are fairly resilient. And I think there are these pockets of growth across the region in India as well, that are fairly resilient to the ongoing conflict. Because that creates safety. Valuations comes in at a later stage. At the moment, the reason for that is also simple. Asia is not super expensive. I mean, India's valuations were high 2 years ago, but they've moderated, and it is probably still the most expensive market in the region. And there's good reasons why this is the case, but it's elevated. But in other markets, we've seen valuations go up as well. That was based on earnings sort of upgrades people expect to come through. That might not happen. But valuations across Asia were not extremely high to start off with. So valuations most people feel reasonably comfortable with. What it is really, it's now positioning that's key. And then eventually it's what can continue to grow where I feel comfortable to holding stocks. Before later on you say, I'm now going to reallocate my money again. So first it's simply about safety, and that's cash, or if you have to be in equities, in businesses that will continue to grow quite well, irrespective of what happens with the conflict.
So what should be the strategy, Harold, when it comes to stock selection at this point in time? Because if you're looking at an exposure to some extent when it comes to equity, strategy becomes key. Pockets of growth that will grow from here becomes key.
Yeah, I think there's three things you need to do. Firstly, you have to recognize, under the assumption that this conflict continues, you have to recognize that everything can come down. So if you say, I don't want that, well, then you're going to cash, of course. But if you have to be in equities, and there are portfolio managers who have to be in equities, that's their job, then you want to go into, and this is then the second thing, you want to go into those sectors where you think the impact is limited, more limited than others. You can think, for example, about consumer staples. Now, they will be impacted because they use packaging, and packaging will be impacted because of oil and plastic prices. But you go for the companies where the impact is much less than companies where it's much bigger. So there's one thing. Think about telecoms, consumer staples, utilities, and these sort of things. Another way to deal with this is to think about themes. What will happen in the world, what will continue in the world, irrespective of what happens in the Middle East. Now, for example, my suspicion is that over the next couple of years, defense industries or engineering companies that are related to that will continue to see growth. We will also see, for example, a continued surge in trying to get access to alternative sources of energy. nuclear, hydro, wind, solar, whatever it may be. And you see in some countries across Asia already talk about trying to restart or accelerate that. So there are these sort of themes of sectors, you could call them maybe as well, that probably will continue to do reasonably well in this very difficult sort of environment. And that's another approach you can take and build exposure to that.
Got it. Harold, if the conflict were to come to an end in the next 15 days, God willing happens earlier, but I agree nobody knows, do equities as risk assets, because valuations in a lot of geographies have corrected, become the first ports of call, or do you believe markets or money might flow out of cash into more conservative investment avenues?
If this conflict stops over the next foreseeable future, right, and therefore assuming oil moderates again and these sort of things, I think equities could perform globally initially very well, but it will be a struggle for us to get back to the levels where we were because growth is impacted. There are businesses in India or in the Philippines or in Taiwan that have been impacted. Some of them had to be closed. So the actual economic impact, the actual growth impact is already with us. So that will limit the upside to a certain extent. But yes, I think equities it's a high risk sort of assets in most people's portfolio. So you take out when there's high risk is rising, but if you think risk is moderating, equities can outperform cash or bonds for these as alternative assets. So you can see a bounce, but I don't think it will be a bit of a struggle to go back to the peaks that we were only a couple of months ago.
That kind of sums it up, and Harold, really appreciate. Just one last question, very quick one. Would countries showing growth, the likes of India, etc., also become ports of call, or is that also a nuanced call with what happens to AI, what happens to crude and other factors?
All countries in Asia are being impacted in one way or another. Some of them more than others. And that's because they either have to directly import the oil or the dependency on oil is higher. This is also the case, not India, but Korea, Japan, Taiwan are large importers of oil. And these businesses, they need borium and helium and all sorts of other chemicals in their tech processes. And that is starting to become an issue. If there's one country where you say, actually, most of the money is domestically kind of generated, so the markets are not very dependent on foreign flows. India and China have that. Countries that have very high inventories of oil and therefore can deal with this price shock better. China is that in particular. So each of these countries will be impacted in different ways. But yeah, and that's what we got to keep in mind when we come to sort of country selection and how these businesses will be impacted.
Okay. Harold, really appreciate your time. Thank you so much, and may this conflict end soon.
Let's hope so. Thank you very much.
For all reasons, excluding not just the markets. But yeah, very well put by Harold van der Linden. I think the key point is don't expect the bounce back to lead markets back to levels that they were, because growth is impacted. Uncertainty that comes in because of a cyclical factor it might be welcome as well, right? This has a lot of imponderables, a lot of unpredictables, right? So therefore, when the markets, for example, have fallen, and I presume that you, knowing your DNA a little bit, you would have been sitting on a bit of cash. Do tell us how much was it? Have you started deploying? And what has prompted you to start deploying, if you have started deploying?
Yeah. It's a very important approach to stock picking our portfolio construction, that we said cash is very critical in our approach to investing. We want to pursue an absolute return strategy, and that too kind of an outsized absolute return mindset. So we need to buy stocks, the same stocks, when they are valued at a far better price, right? So yeah, we were sitting on about 35% cash end of February, okay? And yes, we have been deploying
35% cash.
35% cash end of February. And
why? Because of valuation concerns?
Various things. And at the core of it was, we were a little concerned that the street was ignoring the risks, okay? The risks of what tariff was bringing, risk of AI, risk of the macro in India, we were cautious on how the mass consumer households leverage levels were a little uncomfortable. We were a little worried about the state government's fiscal side of things not being too good. We were a little wary of SME leverage or SME levels corporates. The large corporates are in great shape, maybe the best shape we have ever had them in maybe 20 plus years. But in SMEs, not as much. Premium households, no worry. The top 5 crore households, they are absolutely in pristine shape. The next 20 crore households, not too good. Central government, fine. State governments, not so fine. So this divided picture, coupled with the valuations which were there, and it was a call that we took for pretty much from October 24 till about February, March now, till that you need better margin of safety in the earnings expectations and on the multiples. And not that we could predict any of these, okay? That's not the approach, right? We are not trying to predict. For sure, I couldn't have predicted a war coming or the impact of this on inflation or interest rates or currency or fiscal challenges which will come. We couldn't have predicted. Those things cannot be predicted is the whole point, that we can't predict 20 moving parts and all of them are important in how earnings play out. We can't predict it. What you can predict though, what you can assess though, not predict, is how well are these businesses capable of absorbing them? Are they vulnerable for it or are they resilient to it? And more importantly, what price you are paying. That is in control, right? You control the controllables. What multiples you are paying, and those multiples are not PE multiples alone. You pay price to sales, okay? You pay EV to book value, okay? You are trying to assess what kind of valuations that you are paying. Are they building in some some bit of buffer, or are they priced for perfection? When you are priced for perfection, not that things can't play out, but sooner than later we have seen challenges come. And I'll give you some examples.
Please finish your example.
So I'll give you, in the last 25 years, every year, without exception, markets have corrected at least 10% every year, during the year.
Every year?
Every year.
Okay.
This didn't happen only in 2017, okay, when markets corrected 2 times in 2016, okay. Once early in the year when there were some fears of AQR, asset quality review by Reserve Bank, and later in the year due to demonetization, right? 2 times it happened in 1 year. So in 2017 was the only year markets didn't correct 10%. But 21 out of 25 years, if you had bought into a 10% correction, you made money in that year itself. Same year. 21 out of 25 years. 4 years, that 10-12% correction has led to a deeper cut, which is like less than 20% probability. So that gives you and it's any reason, elections, fiscal, Reserve Bank action, currency, wars, oil prices, you can't predict, okay? So that acceptance, or in some form humility, humble mindset that I can't predict, what I'll control is my action. So wait, give it that room for error, and that's the fundamental approach.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Saigal. What's happening? Outflows.
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Saigal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open.